What we are going to learn today is the single entry system. Chapter's name is single entry system. You'll say me, sir, from lower standard we have learned a double entry system. Is this a new system, single entry system, where we need to pass only one entry for each transaction? The answer is no. The name is confusing. Actually, it is not single entry system. It should be learned as accounting from incomplete records. So say in an institution there were incomplete records. They call you as a chartered accountant and tell you to complete their records to prepare trading account, profit and loss account, balance sheet and any other accounts. This will be the process of single entry system. Practically you are still in double entry system. There is only one system in accountancy, which is double entry system, one debit effect, one credit effect. Say if some of the people have prepared last year's balance sheet and in current year they have prepared only cash account, and they call you and tell you that okay, you prepare our trading account, profit and loss account and balance sheet of current year. This process will be also accounting from incomplete records or single entry system. So basically in this chapter we are going to learn each and everything about accountancy. There will be concept of depreciation, there will be concept of rectification of error, there will be concept of capital account, there will be concept, each and every concept of accountancy. Practically we are learning accountancy, how to prepare books of accounts. Yes, from an incomplete record, from some of the transactions which are not available. Ultimately we are going to learn accounting. So let me start a basic account, which is capital account. Now I don't say this is a single entry system or accounting from incomplete records, but at a point you will have to prepare capital account, and this is how we prepare capital account. Where will be opening balance will be over here. Profit during the year is written on credit side. Ultimately profit is addition to capital. Any additional capital brought in by the partner or by proprietor will be written over here. Interest on capital is written over here. What is written on debit side? Drawings. Interest on drawings. Also reduces the capital, increases the capital is written on credit side, because capital basically is having a credit balance. Decrease of capital is written over here. So drawings decreases the capital, interest on drawings decreases the capital, and ultimately what answer we get is closing balance of capital. There are a couple of questions asked in examination where you just need to prepare capital account. Sometimes they ask what is this, sometimes they ask what is this. Ultimately whatever might be the question, but it is a simple concept of capital account. Second is trading account. We are going to learn in detail when we do a chapter of insurance claim, but try to concentrate over here also. Trading account, all of us has prepared n numbers of times. Let us draw it in this manner. Trading account, particulars, rupees. This is debit side of trading account, this is credit side of trading account. Here also particulars, rupees. Now concentrate, ultimately trading account is nothing but stock account. Stock is a real account. Debit what comes in, credit what goes out. We start with opening balance. As it is a stock account, opening balance is opening stock. We end with closing stock. What is addition to stock, or when the stock increases when you purchase something? Also, direct wages increases the value of the stock. Even if in quantity stock is not increasing, it increases value of the stock. So direct expenses also we write it down in trading account. On credit side, it will be sales. Now, practically this should tally. Why? Debit what comes in, credit what goes out, opening balance have written on opening side, closing balance have written on closing side. So answer of GP should always be 0. Try to concentrate. This was helpful in foundation. This will be immensely helpful in intermediate. It will be helpful in your practical life as well as CA final. Try to concentrate the concept of trading account. Why in trading account we get a answer which is gross profit? Let me take this pen. The pen cost is rupees 10 and its selling price is rupees 15 each pen. I am modifying the figures, or I am just writing down the figures. But I am also adding one more column which is quantity. Try to concentrate. To understand trading account, incorporate quantity column. Ultimately, you'll get an idea how the trading account works. Say opening stock, I was having 100 pens. My quantity is pens. Everything in trading account is valued at cost. What is cost of each pen? Rupees 10. So 100 into 10 will be 1000 rupees. Will be outer column. Normally we prepare trading account only by rupees. How many pens you have purchased? 500 more into 10. So 5000 rupees. You are a trader, so you don't incur any direct expenses. Neither there is any wages or such type of thing. How many pens you have sold? Totally you are having 100 plus 500, total 600. Out of which you have sold 400 pens. So quantity is 400. Sir, multiplied by what? It should be at cost. What is the cost? 10 rupees. So what is the answer? ₹4,000. Closing stock. Now, totally you were having 100 plus 500, that is 600 pen. Out of which you have sold 400 pen. So closing stock is a 200 pen. It is valued at cost. And so this is 2000. See, I told you, as it is the stock account, it should tally. All right. Sir, but we have learned that we get GP every time we do trading account. I agree. You get GP every time you do trading account because the objective of financial accounting is to find out profit during the year. And so only sales, this point. Sales in trading account is not recorded at cost. There is only one figure in trading account which is not recorded at cost. Sales will be valued at selling price. So this will be 2000 rupees more. 400 pen into 5 rupees is 2000 rupees profit more. Cost is 4000, profit is 2000. So sales will be valued at 6000 rupees. Sales will not be valued at 4,000 rupees. It will be valued at 6,000 rupees. Cost plus profit. Now, this side will increase by 2,000 rupees. What is that? It is a profit on sale of 400 pens. Profit on sale of 400 pens is 2,000 rupees. And this is what we get. 2,000 rupees. This is profit on sale of 400 pens having cost of 4,000, which is sold at a profit of 2,000. So ultimately it is sold at 6,000. Now your trading account will tally. Always remember, trading account is a stock account. Debit what comes in, credit what goes out. Ultimately, you record sales at selling price. Otherwise, everything is recorded at cost. You record sales at selling price, and so only you get an idea of GP, or you get answer of GP on other side. Because 2,000 is added over here, 2,000, then only our answer will tally. Sir, if we record sales at its cost at 4,000 rupees, 4,000 is technically termed as COGS, cost of goods sold. Sir, if we record sales at COGS, then your trading account should tally. It will not be having a concept of GP. Trading account will tally, but in financial accounting, ultimately the objective is to record profit, and so we record in trading account everything is recorded at cost except sales, which is recorded at cost plus profit. The very simple account, trading account, because we have learned n numbers of times, but this might have given some insight to you. Next point that we are going to learn is how to find out debtors. Debtors are people from whom we need to receive money. Why we need to receive money? Because we have sold the goods on credit to them. We have done credit sales to debtors. So debtors is a result of credit sales. The credit sales who have not paid as on 31st March, that is last day of our balance sheet, will be reflected as the debtors in our balance sheet. Sir, those who have paid, are they not our debtors? They are our debtors, but their value will be zero because debtors were created and they have already paid the money. So debtors as on the balance sheet date are the credit sales customers who have not yet paid. Try to concentrate. Ultimately, we are going to learn a formula. Our say year, accounting year is 1/4/21 to 31st March 22. 12 months. Let me draw even a timeline of 12 months. 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 and 12. So these are 12 months starting from April, May, June, July, August, September, October, November, December, January, February and March. Suppose sales during the year is rupees 12 lakhs. Each month sales will be 1 lakh rupees. You'll say, sir, how? If the sales of a company is 12 lakhs rupees, it does not mean every month it is selling 1 lakh rupees. But in academics, we may assume if nothing is given in the book, then sales is evenly distributed during the year. Once again, if no hint is given in the question, you can always assume that sales is evenly distributed during the year. What does it mean? If per annum sales is 12 lakhs, per month sale is 1 lakh rupees. So every month it is 1 lakh rupees. Now, you know that you give a credit period to customer. That is the debtor's credit period or debtor's period. Is it, let me first start with 1 month. 1 month. All 1 lakh rupees sales which was done in October, you will receive money in November. So October, to whom you have sold, all the customer will pay in November. So October credit sales will not be your debtor as on 31st March. As on this date, I want my debtors. So as on 31st March, no one will be my debtors from October. November similarly will be received in December. December will be received in January. January will be received in February. So till now, no credit sales is the debtors as on 31st March. Concentrate over here. March, 1 lakh rupees credit sales. I'm not saying debtors, credit sales will be receivable in April. Our year is ending on 31st March. So full March sales. What is March sales? 1 lakh rupees. Which is March sales is nothing but debtors as on 31st March. Credit sales of March, because it will be receivable in April, will become my debtors as on 31st March. Once again, why sir February credit sales will not become our debtors? They will become our debtors in February, but they will pay the money in March. So they will no longer be our debtors as on 31st March. So 1 lakh rupees is credit sales of March, which will be nothing but debtors. How to find out? I'm giving you a small formula. This formula you can use only if the sales is evenly distributed throughout the year, whereby debtors will be is equal to credit sales multiplied by debtors period upon total period. In this case, I am finding it out. Concentrate. What is credit sales? 12 lakhs rupees per annum. What is debtors period? 1 month. Divided by total period is 12 months. So 1 lakh rupees will be nothing but answer of debtors. Sir, if credit period was 2 months instead of 1 month, I can do it. Now February and March credit sales will become debtors. Think. February will be received in April and March will be received in May. So February, sir, January will be received in March. So they are no longer our debtors as on 31st March. We want debtors as on 31st March. So February and March sales. February and March sales will be 2 lakhs rupees. Now our answer will be 2 lakhs. How? Instead of 1, this will be 2. Instead of 1, this will be 2. This will be 2 lakhs rupees if the credit period is 2 months. Sir, if the credit period is given in number of days, what was our total sales? 12 lakhs. Then debtors will be is equal to credit sales. Say it is given 55 days. 55. Instead of writing down 12, I will be writing 365. It is not total months. It is total period. So if you take a debtors period in days, this should also be taken. Denominator should also be taken in days. This is how I can find out my answer of debtors, where debtors will be is equal to credit sales into debtors period upon total period. And this formula you can use only if sales is evenly distributed throughout the year. So if per annum sales is 12 lakhs and per month sales is 1 lakh, then only you can use this type of formula. And understand the formula is even logical. If say 12 lakh is the 12 month sales. What is the 2 month sales? We get answer 2 lakhs rupees. It is nothing but a cross multiplication. When you do into 2 divided by 12, ultimately you are finding out 2 months sales, and February and March sales will be equal to January and February sales, because the sales is evenly distributed throughout the year. This is nothing but finding out credit from credit sales, finding out answer of debtors, and we will be using this in other n numbers of chapters, even in finance. Next concept, sometimes they tell you to prepare debtors account and creditors account in individual sums. These accounts are also helpful in full-fledged sums. Let us understand how to prepare debtors account. Now, all of us know it, but still it is a small revision. Debtors are the person from whom we need to receive money, so they are our assets. So normal balance is debit balance, so opening balance will come over here and closing balance will come over here. When the debtors will increase when there is credit sales, no cash sales, right? Otherwise, when debtors increases, it is a tough question. But if you remember, if your bills receivable is dishonored, the journal entry which you pass is debtors account debit to bills receivable. So when bills receivable is dishonored, debtors will increase. When debtors decreases, cash and bank received from debtors, bad debt, discount given to debtors. Bad debt recovered? No, it neither increases the debtors, neither decreases the debtors. Bills receivable received. Thus, all are the circumstances when your debtors will decrease. Debtors increases debit side because normal balance is debit. Debtors decreases credit side. When the debtors decreases credit side, when debtors increases, it is written on debit side. You can also follow journal entry credit sales. What is the journal entry is debtors account debit to credit sales, bills receivable dishonored, debtors account debit to bills receivable, bank account debit to debtors, bad debt to debtors, discount to debtors, BR to debtors or bills receivable to debtors. I am not drawing creditors again because creditors will be exactly opposite, right? Whatever is debit in debtors will be credit in creditors. Whatever is credit in debtors will be debit in creditors. This is nothing but debtors account. Many a times we find bills receivable concept in single entry. Bills receivable ultimately is concept of accountancy. So we find many a times a bills receivable concept, bills payable concept in accounting. Let me give you a brief brief idea about bills receivable, which you have already learned in your lower standard. Whenever bills receivable is issued, what is the journal entry which is passed is BR account debit to debtors. Whatever is the figure. Oh, we are having 2 or 3 options with BR. We may keep it up to maturity. We may discount it with bank. We may endorse it to creditor. In all 3 cases, there is a journal entry. Here, keep it up till maturity, there will be no journal entry. If you discount it with bank, you will receive the money right now. Bank account debit. Bank will charge the discount account debit to bills receivable, because now bills receivable is no longer with you, it is with your bank. If you endorse it to your creditor will decrease, your bills receivable will decrease. The journal entry will be creditor account debit to bills receivable. Bills receivable credit, so it is decreasing. Creditors debit, so it is also decreasing. No longer you will have to pay more money to creditors. The idea is, sir, if on maturity the bills receivable is actually honored, then there is no question. If the bill is honored, let me do it in two parts. If the bill is honored, what will be the journal entry pass in this case? It is bank account debit to bills receivable. What will be journal entry in this case? Nothing. Bank will collect the bill and keep the money with them. In creditors also will collect the bill and they will keep money with them. No entry in these two cases if the bill is honored. If the bill is dishonored, if the bill is dishonored, what will be journal entry if the bill is dishonored, if it is kept up till maturity? I hope you understand either this yellow color or blue color entry will be passed. Because either the bill might be honored or it will be dishonored. If it is dishonored, reverse journal entry will be passed. Debtors account debit to BR. Now BR is cancelled, we will receive money from you as a debtor. If the bills was discounted with bank, first you will have to pay to your bank. And this money now you will recover from your debtor. So this is a dishonored. If you have already discounted the bill, dishonored, this journal entry will be passed. If you have endorsed it to your creditor, now your creditor will be very angry and you will credit him again. Why? You have already paid him a bill, but now it is dishonored, so he will say, give me my money. Before giving him the money, we will credit him. We will be angry with our debtors because he has dishonored the bill. We will debit debtors. Debtors account debit to creditor will be journal entry for bills. This is a basic journal entry when the bill is issued, when the bill is kept until maturity, endorsed or discounted with bank. In all three cases, if it is dishonored, these are the journal entries that we normally pass. I will give you a small rule to solve your full-fledged questions where you are preparing some accounts from some accounts, the sheets or information which is already given. If you are taking out any figure, any number from a tallied sheet or account, say opening balance sheet is given, all the figures of opening balance sheet or some account is given, say cash account is given, they are tallied account, debit and credit side is already tallied, then you will be passing one effect for that particular figure. All the opening balance sheet figures, all the cash account figures which are already tallied given to you in the question, you will be giving one effect. Remember your 11th standard, remember 12th standard, your foundation. If the figure was from trial balance is already tallied, you pass only one effect in trading account, P&L or in balance sheet, but you pass only one effect. If it is any other figure, might be in additional information, might be you have found it out or calculated in your own, might be in hidden adjustment, any other number will be having two effects. One debit, one credit. This will become golden rule For solving any single entry question, no. For solving any question of accountancy, we follow this. If we are preparing full-fledged accounts, if some accounts or information is given, I will give one effect to any number which I am taking from a tallied sheet or account. I will pass a two effect for any other figure which I am not taking from a tallied sheet or account. This we will be repeating practically in all the questions, but at this point of time, this should be absolutely clear. What we are learning next is any type of expense account. It may be salary, it may be stationery, it may be any type of expense. Now, in our lower standard, we have already learned expenses plus outstanding minus prepaid. But here the concept of previous year will also come. Suppose something was outstanding in previous year. What will happen to that figure in current year? And so we are preparing specific account. Sir, can't we do in inner column in our P&L account? Yes, in some of our questions we will be doing by that method. But as a chartered accountant, as an accountant, you should know how to prepare an expense account. So during the year, whenever the expenses are paid, you pass a journal entry, expenses account debit to cash. This is expenses paid. Where will be second effect of this expenses paid? It will be in cash account. What you do to outstanding expense? You add it in this figure. Remember your lower standard, you would have added in this figure. So outstanding expense of current year. This expense was already incurred. People have given their services. We have already received stationery. This expense is already incurred. So it should be written in profit and loss account. So this figure should be added when we transfer something to profit and loss account. That will be over here. So it is not in this figure. So it should be added to this figure. This is outstanding of current year. Should be added to cash figure. Where the second effect of this will go is closing balance sheet, because it is of current year, liability side. This is second effect for the same. So you deduct prepaid, right? If you add outstanding, you deduct prepaid. So automatically it will come on credit side by prepaid of current year. Why you need to deduct it? It is already paid, but it is not expenditure of current year. If it is not expenditure of current year, you cannot write it down in current year. So what you need to do is you need to write down in next year. So in current year's figure, this figure is already added in cash. It is prepaid, already added in cash, but it is not of current year. So we are deducting it. Instead of deducting it, we are writing on credit side. It will be over here. Where will be second effect? Try to concentrate. It will be in asset side of closing balance sheet. This we already know. See, what we used to do in inner column is we used to transfer our balancing figure to profit and loss account outer column. So where the second effect will go of this, it is profit and loss account debit side. Here it is credit side. In expense account, it is credit side. In P&L, it will be debit side. You write down this figure over here. Second effect, P&L account debit side. This what we were doing. Whatever figure was given in trial balance, we were adding outstanding, deducting prepaid, whatever is the balancing figure, we were transferring it to profit and loss account. Sir, why to draw expense account then? Suppose if what to do to this figure in next year. Suppose there is outstanding in previous year. Try to understand if outstanding of current year is over here. Outstanding of previous year should be on credit side by outstanding of previous year. Now, in this figure, ultimately it will be subtracted. Yes, why? I'll tell you. This was outstanding in previous year. It is already recorded as expense of previous year. Now it is current year. This expense is already paid. Sorry, this expense was outstanding in previous year. Will be paid in current year. So it will be included in this figure. If it is included in this figure, we need to exclude it because it is already recorded as expenditure in previous year. We are excluding it, so we are writing it on credit side. Including it, we will be adding it on debit side. Excluding, we are writing it on credit side. It is written over here. Sir, what will happen to outstanding? Where is the second effect? It might be already given because it will be in opening balance sheet. In opening balance sheet, it will be on liability side. What will happen to pre-received or prepaid of previous year? If this is on the side, credit side, pre-received of current year is on credit side, then pre-received of previous year will be on debit side. So pre-received of previous year will be on debit side. It will be added to this particular figure. Where will be the second effect? It is again opening balance sheet, but asset side. If at all we need to give two effect, if this is already given, there will be always this figure. If it is not given, we need to prepare opening balance sheet. It will be opening balance sheet, asset side, and this figure will be written over here. Why it is added to this figure, I'll tell you. This figure is received during the year. Pre-received was received in previous year. But it should be transferred to P&L account because now it is expenditure of current year. It was pre-received for previous year. It is expenditure of current year, which was paid in, sorry, not pre-received, prepaid. Sorry, it should not be pre-received. It should be prepaid. It is not income. It was prepaid in previous year, but it is because it was expenditure of current year, it was paid in previous year. So it was termed as prepaid in previous year. If it was prepaid in previous year, it is expenditure of current year. Sir, it would not be in this figure. No, it was already paid in previous year. So it would not be in this figure. We should add it in this figure and then only the figure should have been transferred to P&L account. This is what will automatically happen. Try to concentrate two concepts. This is this figure is expenses paid during the year. It will be in cash account. This is expense incurred during the year. We are doing accrual system of accounting, then we will have to transfer this figure to P&L account. We will have to record outstanding and prepaid. We were already recording, but the new concept is outstanding of previous year and prepaid of previous year. So this expenditure account will be there. When we are solving our questions, some of the questions will be solving it by accounts. Some of the questions will be solving by inner column. Both the methods I feel you should understand and you should be knowing. Let us solve some of the question of single entry system. This is C7.1. Closing capital of Arjun as on 31st March was 1,50,000. On 1st April, his opening capital was 60,000. During the year, he had drawn 40,000 for domestic expenses. He introduced 25,000 as additional capital. Find out his net profit during the year. Simple, we will draw a capital account. Capital account is a credit account. If capital increases, it will be credited. If capital decreases, it will be debited. We have learned n numbers of times at our lower standard as far as capital account is concerned. Opening balance come over here. Closing balance will come over here. Additional capital will increase the capital, so it will be credited. Drawings will decrease the capital, so it will be debited. Net profit during the year will be credited because it increases the capital, and this is how I will tell you my. Now all informations are given except net profit. Let me just fill it up. Closing capital of Arjun, closing capital is 1,50,000. On 1st April, opening capital was 60,000, so opening capital is 60,000. During the year, he had drawn 40,000, so drawings are 40,000. He introduced 25,000 as additional capital, so 25,000 is additional capital. What is the balancing figure is net profit during the year. Balancing figure will be 190 minus 85, that is 1,05,000. 190 minus 85, yes, 1,05,000 is the correct answer. C 7.2. A company sold 25% of goods on cash basis and the balance on credit basis. So, if this is the total sales, 25% will be cash, 75% will be credit, and 100% will be total sales. Debtors are allowed a 2 months credit period and their balance as on 31st March is 1,40,000. So what is debtors credit period? Is 2 months. And their balance as on 31st March is 1,40,000. So debtors amount is rupees 1,40,000. Now try to understand, if debtors period is given and debtors balance is given, we can easily find out credit sales. All of you agree that debtors are a result of credit sales. So if this two information is given, we can easily find out credit sales. First try to understand, we are deriving the formula and then we'll be applying and finding out credit sales. Suppose, let's take another example. Suppose sales during the year, I'm talking about credit sales. Credit sales during the year is 12 lakhs rupees. If no information is given, we can assume that sales is uniformly distributed during the year. So, for each 12 months, April, May, June, July, August, September, October, November, December, January, February, and March. For each 12 months, this is April, May, June, July, August, September, October, November, December, January, February, and March. For each of the month, the sales is 1 lakh rupees. See, in theoretical life, we can assume this. In practical life, if per annum sales is 12 lakhs, per month sales will not be 1 lakh. But in theoretical life, if nothing is given, we can assume that sales is uniformly distributed throughout the year. Now, if my debtors period is 2 months. If my debtors period is 2 months, that means this April sales, I will be getting back the money in April sales. I'll be getting money back in June, that is May and June. Let me draw it exactly. April money I'll be getting it in June. May money I'll be getting it in July. June money I'll be getting it in August. July money I'll be getting it in September. Start. What are debtors? Debtors are always as on 31st March. I want debtors as on 31st March. Now try to concentrate. If debtors period is 2 months, what does it mean? only this sales and this credit sales will become your debtors as on 31st March. Why? It will be recovered in April and May of next year. So it will be outstanding as on 31st March. You will tell me, sir, why this will not be outstanding as on 31st March? Because that will be recovered in March. This will be recovered in February and so on. So what will be outstanding balance is only the sales of February and March, which will be recovered in April and May respectively. So we want to find out debtors as on 31st March. That will be only of February and March. And so how to find out debtors amount from credit sales throughout the year? 12-month sales, I'm doing a cross multiplication. 12-month sales is the 12 lakhs rupees. I want sales of 2 months. Which 2 months? February and March. I am assuming it is uniformly divided during the year. So what is the 2-month sales? And that will become my debtors. So debtors will be 12 lakhs multiplied by 2 divided by 12, which will be 2 lakhs rupees. Let me convert this cross multiplication into a formula. So can I write down, let me change the color. Can I write down debtors will be is equal to 12 lakhs is credit sales multiplied by credit period upon total period. And I can use this formula whenever the sales is uniformly distributed throughout the year. So this is just an example. Let us apply it in our current scenario or in current question. I am using the same formula. Debtors will be is equal to credit sales multiplied by credit period divided by total period. What are debtors in my case? 1,40,000. What will be credit sales that I want to find out? Credit period is 2 months and total period is 12 months. So what will be credit sales will be 1,40,000 into 12 divided by 2. That is 8,40,000. It is just this. If 2 month sales is 1,40,000, what is 12 month sales? Which is 8,40,000, which will be nothing but credit sales. So my credit sales is 8,40,000. Is it all right? I want answer of, assume that sales is uniform, calculate the total sales. I want answer of total sales. I can just cross multiply this. It is 8,40,000 into 100 divided by 75 or divided by 75%. That is 11,20,000. 11,20,000 rupees is nothing but my total sales, which is asked in examination. What is the total sales? Total sales will be 11,20,000. What we have learned in you is this formula. Sir, credit period can be in days. Yes. If it is say 20 days, it will be 20 divided by 365. If it is, can it be in years? Yes. If it is 2 years, 2 divided by 1. Is it all right? But this will be the formula to find out debtors. Please remember, this formula can be used only if sales is uniformly distributed throughout the year. Otherwise, you cannot use this formula. Otherwise, if there are 2 month sales, you will have to take exact sales of February and March. If it is 1 month credit period, you will have to take exact sales of March. But if sales is uniformly divided, this is a good formula to use. C7.3. A trader purchased goods of 1,70,000. The opening stock of inventory prior to the said purchase was 30,000. His sales was 2,10,000. Find out closing stock of inventory if gross profit margin is 25% on cost. Let me first explain you what is 25% on cost. Normally GP ratio is on sales. Which is cost plus profit. Is it all? Here it is given GP on cost is how much? 25%. Sorry. 25% on cost is how much percentage on sales? See, we can easily find out. Cost plus profit is equal to sales. All of you agree? 25% on cost. So let us assume cost as 100. 25% on cost will be 25 profit. Sales will be 125. Now see this equation. 25 is a 25% on 100. But 25 is not 25% on 125. So I need to find out 25 on 125 is how much? Will be nothing but 20%. So 25% on cost will be 20% on sales. Let me take another example. Say 30% on cost is how much percentage on sales? It is this. Profit will be 30, so sales will be 130. Now 30 is 30% on 100, but 30 is not 30% on 130. Say if you are having total marks 100 and you have got 30 marks, you are getting 30% of marks. If your total paper is of 130 marks, then 30 marks is not 30% of marks. Then what is percentage? 30 divided by 130 multiplied by 100. This is 30 divided by 130 multiplied by 100 is 23.07%. 23.07%. It is 23.07% on sales. See, for all the points, say what is 25% on cost, then what is the percentage on sales? 20% on cost, what is percentage on sales? Some of the things you will have to remember it. Other points, if there is a new figure coming, then you can use this concept and find out what if the percentage is given on cost, what will be the percentage on sales. In this question, this will be important. It is 20%, 25% on cost is nothing but 20% on sales. Now, this question, say in single entry, you will be getting n numbers of concepts of accountancy. In this, they are asking us to draw trading account. They are not asking us to draw trading account, but they want closing stock. So it is good to prepare trading account and find out closing stock. Trader purchased goods 1,70,000. So purchase is debit side of trading account 1,70,000. Opening stock inventory is 30,000. So opening stock is 30,000. Here's the sales was 2,10,000. Sales is 2,10,000. Find out closing stock of inventory if GP margin is 20% on sales or 25% on cost. So we need to find out closing stock. Only closing stock is missing? No. On debit side, even GP is missing. So what will be GP? 20% on sales or 25% on cost. What is sales? 2,10,000 into 20% will be 42,000. My full trading account is tallied except this closing stock, and so the balancing figure will be closing stock, which is 30,000 plus 1,70,000 plus 42,000 minus 2,10,000, which is 32,000. Again, it is just a puzzle where you are told to find out closing stock, which is nothing but 32,000. Next question, C7.4. ICE Limited gives you the following information to find out total sales and total purchases. Debtors as on 1st April is given, creditors as on 1st April is given, bills receivable, bills payable, cash received from customer, cash paid to suppliers, bad debt recovered, bills receivable endorsed to creditors, bills receivable dishonored by customer, discount allowed by supplier, discount allowed to customer, endorsed bill receivable dishonored, sales return, bills receivable discounted, discounted bills receivable dishonored, cash sales, cash purchases. So cash sales and cash purchases are given, but credit sales and credit purchases we can find out by preparing debtors account and creditors account. From debtors account we will be getting credit sales, from creditors account we will be getting credit purchases. Debtors as on 31st March is given and creditors as on 31st March is given. So cash sales and cash purchases are available. Let us prepare two accounts. One is the debtors account, another is the creditors account. As debtors is normally having a debit balance, it will be having opening balance over here and closing balance over here. Creditors is normally having a credit balance, so opening balance will be over here and closing balance will be over here. Let us see all the information, find out credit sales and credit purchases from this account. Debtors as on 1st April, opening balance is 70,000. Creditors opening balance is 81,000. Bills receivable received during the year. What is the journal entry when bills receivable is received during the year? Is bills receivable to debtors. So on debtors account credit side 47,000. Bills payable issued during the year. Similarly, it will come on debit side of creditors account 53,000. Cash received from customer. What is the journal entry? Cash account debit to debtors 1,56,000. Cash paid to suppliers is the suppliers account debit to cash. So creditors account debit to cash 1,72,000. Bad debt recovered. What is the journal entry of bad debt recovered? It is bank account debit to bad debt recovered. Bad debt recovered will be closed in P&L account credit side. There is no debtors account or creditors account. Creditors account will not be affected, but there is no debtors account which will be affected. What is the journal entry? Bank to bad debt recovered. Neither of the account we are preparing. Bills receivable endorsed to creditors. What is the journal entry when bills receivable is endorsed to creditors? Is creditors account debit to bills receivable. So creditors account debit to bills receivable is 27,000. Bills receivable account I am not preparing, so I am not doing that particular point. Bills receivable endorsed to creditors. We have done 27,000. Bills receivable dishonored by customer. What is the journal entry when bills receivable is received? BR to debtors, and when it is dishonored, it is debtors to BR 5,000. Debtors account debit to BR 5,000. Discount allowed by suppliers is this is our income. So it is creditors account debit to discount. Creditors account debit to discount, and figure is 7,000. Discount allowed to customer. It is discount account debit to debtors. So debtors account credit side 9,000. Endorsed bills receivable dishonored. In introductory session we have done this. When endorsed bills receivable is dishonored, it is debtors account debit to creditors 3000. Debtors account debit to creditors 3000. Creditors account credit by debtors 3000. Sales written. I'm assuming it is credit sales written. Debtors will be credited by sales written, which is 11,000. Bills receivable discounted. What is the journal entry? Bank account debit, discount account debit to BR. Neither of the account we are preparing will not be passing this entry. Discounted bills receivable dishonored. This will be recorded. Discounted bills receivable is dishonored. How? I'll tell you. When you discount the bill, it is bank account debit, discount account debit to BR. This is you have received money from the bank. Now, if this is dishonored, bank will recover it from you. So we will have to pay to bank. So to bank, what will be debited is debtors account, because now we will recover this money from debtors. So it will be debtors account debit to bank. Discounted bills receivable dishonored. It is 2000. Cash sales and cash purchases does not affect in debtors and creditors account. So debtors as on 31st March is 82,000. Closing balance. Creditors 95,000. Closing balance. I will be getting a balancing figure which is credit sales, credit purchase. Let me find out first credit sales. It is 82,000 plus 11,000 plus 9,000 plus 1,56,000 plus 47,000 minus 2,000 minus 3,000 minus 5,000 minus 70,000, which is 2,25,000. Similarly, creditors will be 53,000 plus 1,72,000 plus 27,000 plus 7,000 plus 95,000 minus 81,000 minus 3,000, which is a 2,70,000. We want a total sales and total purchase. So credit sales plus cash sales will be total sales. Credit sales is 2,25,000. Cash sales is already given, which is 168,500. Total of this 2,25,000 plus 168,500 is 393,500 will be total sales. Total purchase, credit purchase plus cash purchase will be total. Credit purchase is 2,70,000. Cash purchases is 197,800. Total will be 4,67,800. So we have got total credit sales, total sales and total purchase. How we got credit sales? By debtors account, credit purchase by creditors account, cash purchase and cash sales were already given. Easy question. Now we are going to start some full-fledged questions of single entry system. What are full-fledged questions? They'll tell us to prepare final accounts like trading account, profit and loss account and balance sheet. But before that, let us understand We are following a golden rule, and that is very simple why we follow. If we take any figures or numbers from tallied sheet or account, say balance sheet or cash account or any account, if we are taking figure from a tallied sheet, we will be giving one effect. If we are taking any other number or figures, we will be giving dual effect. That is a debit and credit both. Now let me show you some question. This is opening balance sheet which is given. Is it tallied? Yes. Then for all these transactions, I will be giving one effect. And please understand, for this, it is compulsory. In our lower standard, we have learned if it is trial balance, we give one effect. If they are adjustment, we give dual effect. But try to understand why we give one effect of the sheet which is tallied. If you give one effect to all this transaction, say you will be giving credit effect of all this transaction. If you give credit effect of all this transaction, you are ultimately giving credit effect of 12 lakhs rupees. And you will be giving debit effect of all this transaction. So you are ultimately giving debit effect of 12 lakhs rupees. So ultimately, if you summarize it, you are giving 12 lakhs rupees debit effect, 12 lakhs rupees credit effect. And so ultimately you are giving dual effect. But it seems that you are giving one effect. So for all this transaction, I'll be giving one effect, which will be practically credit effect. So I will be giving 12 lakh credit. And for all this transaction, I'll be giving debit effect. So I'll be giving 12 lakh debit. So any figure from a tallied sheet or tallied account, I will have to give one effect, and that will be compulsory. In this, it is not compulsory. For any other figure, adjustment, or the figure which we have found out, hidden adjustment, any other figure, depreciation amount we have found out by some logic, any other figure will be having dual effect, one debit, another credit. Let us solve this particular question. This is full-fledged question. 7.5. The following is the balance sheet of the concern as on 1st April. So this is opening balance sheet. 10 lakh, 1 lakh 40,000, or profit and loss account is given, fixed assets, stock, debtors, cash and bank. Management estimates that purchase and sales for the year ended 31st March are as under. Purchases and sales are given up to February. So this is for 11 months given, and this is for 1 month. Why it is given separately, I'll tell you. It was decided to invest 1 lakh in purchase of fixed asset, which are depreciated at 10% on cost. The time lag for payment to trade creditors for purchase and receipt from sales is 1 month. So creditors period and debtors period is 1 month. The business earns a GP of 30% on turnover. This is 30% on sales is GP rate. Sundry expenses excluding depreciation works out to be 10% of turnover. Draw balance sheet as on 31st March, assuming creditors are all trade creditors and debtors are of sales. There is no other items of current and assets and liabilities apart from stock, cash and bank balance. Now, first question in every single entry will be which all accounts we will be preparing. So these 3 accounts will be there: a trading account, profit and loss account and closing balance sheet, because they are our normal final accounts. They will be there. Is it all? As there is purchase, sales, debtors and creditors, I will be preparing debtors account, creditors account. Now, the question arises, should I prepare cash and bank account combine or should I prepare cash and bank account separate? Here I'll have to prepare it combined. Opening balance is combined given. There is no way by which we can segregate what is cash, what is bank. And all the transaction also, there is no segregation of cash and bank. So I decide I will be preparing cash and bank column combined in my cash book. Debtors and creditors I have prepared. Yes. If I'll require any others like fixed asset, I'm going to do it in inner column. But if I require, I will be preparing the accounts. Let us start the question. First, for opening balance sheet, what we have decided, it is a tallied sheet. We will be passing one effect. Capital 10 lakhs. One effect, closing balance sheet liability side. Opening capital, it is 10 lakhs. This will be which account? Capital account. These are liability, rupees, assets. One effect is given. Creditors 1,40,000. We are having a creditors account. So credit side of creditors account, opening balance 1,40,000. Profit and loss account 60,000, again in balance sheet. You can add it even to your capital. It is absolutely all right. You can keep it separate. That is also absolutely all right. We have completed this side. We have given one effect. Fixed asset 4 lakh. In asset side, I'll be writing inner column 4 lakhs. Stock will be opening stock, trading account debit side 3 lakhs. Debtors, we have prepared debtors account 1,50,000, opening debtors. And cash and bank is 3,50,000. I have given one effect to all this transaction. Yes, I can go ahead, but remember now I will have to give dual effect. I cannot give one effect of the transaction. Let me take this all as credit purchases because they have written all that creditors are all trade creditors for purchases and debtors for sale. So let me take this total purchase. I'm not segregating it. I'm just writing down total purchase. Total purchase is 15,20,000. Let me do total over here. 15,20,000 and total sales is 21,20,000. So 15,20,000 I am giving two effects. Purchase on credit. What will be the effect? 15,20,000 trading account debit side. To purchase 15,20,000. Second, creditors account credit side 15,20,000. Purchase 15,20,000. Sales 21,20,000. What will be to effect? Trading account credit side and debtors debit side. By sales 21,20,000. Debtors account debit side. Sales 21,20,000. Two effects of this and this I can go ahead. It was decided to invest 1 lakh in the purchase of fixed asset. So fixed asset I am purchasing two effects because this figure is not from a tallied sheet or account. 1 lakh rupees two effect plus purchase. 1 lakh rupees. Second effect, cash and bank account credit side by fixed asset, 1 lakh rupees. Two effect of this 1 lakh is given, which are depreciated at 10% on cost. Now I know I have read the question that there are no other entries of fixed asset. So I can pass the effect of depreciation. Depreciation to effect 10% on cost. Total is 5 lakhs. So minus depreciation 50,000. Depreciation will be P&L debit side to depreciation 50,000. The time lag for trade creditors and for sales is 1 month. So we have done this. If the debtors period is say 1 month, then February credit sales will be received in March. So that figure will not be outstanding as on 31st March as a debtor. But March credit sales will be received in April. So they will be outstanding as on 31st March. But only March sales, this 2 lakhs rupees, will become my debtors. Why? February will be received in March. They are not outstanding as on 31st March. January sales will be received in February. December sales will be received in January. They will not be outstanding as on 31st March. So what does it mean? March credit sales is nothing but your debtors. Sir, can't we use that formula that we have used before? The answer is no, because that formula can be used only if the sales is uniformly distributed throughout the year. Here it is not uniformly distributed throughout the year. You can see, is it all right? So only March sales of 1 month will be your debtors, which is 2 lakhs rupees. So closing debtors is 2 lakhs. Second effect, balance sheet asset side, debtors 2 lakhs. Creditors will be 1,10,000 as on 31st March. Creditors 1,10,000. Second effect, creditors account closing balance 1,10,000. So which are the two effects? Creditors account debit side and balance sheet liability side. The business earns a GP of 30% on turnover. So what will be my GP? Will be 30% on sales. Sales is available? Yes. So 21 lakh 20,000 into 30%. 21 lakh 20,000 into 30%. It is 6 lakh 36,000. We have found out this figure, so we need to give two effect: trading account debit side, P&L account credit side. By GP 6 lakh 36,000. Sundry expenses excluding depreciation works out to be 10% of turnover. So expenditure will be P&L debit, which is a 10% on sales, which will be 2 lakh 12,000 rupees. 21 lakh 20,000 is my turnover, multiplied by 10% will be 2 lakh 12,000. Second effect, as I have found out this figure, it is not from a tally sheet. I'll have to give two effect. Second will be cash and bank account credit side, 2 lakh 12,000. This done. Draft a balance sheet total. All right. So practically, I have not skipped any of the point. I can start telling my books of accounts. So which is the first I'll be telling? In trading account, I can go line wise, but it is advisable to close first debtors account and creditors account. So this will be cash and bank or cash collected from debtors. 1 lakh 50,000 plus 21 lakh 20,000 minus 2 lakhs. Minus 2 lakhs is 20 lakh 70,000. Second effect of this, cash and bank account debit. See, this is written in account. I'll have to give second effect. It is 20 lakh 70,000 will be cash and bank account debit side. Cash received from debtors. It is 20 lakh 70,000. Creditors will be cash paid. It is 15 lakh 20,000 plus 1 lakh 40,000 minus 1 lakh 10,000, which is 15 lakh 50,000. 15 lakh 50,000 is cash paid to creditors. So the debtors account and creditors account are tallied. Which is pending balance sheet should be tallied last? Trading P&L. So we can close cash and bank. Trading account can be tallied easily. Yes. So we can close cash and bank. And as again I am writing it in my books of accounts, I will have to pass second effect also. First, what is the balance? Is 20 lakh 70,000 plus 3 lakh 50,000 on debit side minus 1 lakh minus 2 lakh 12,000 minus 15 lakh 50,000, which is the 5 lakh 58,000. 5 lakh 58,000, which will go in balance sheet asset side. 5 lakh 58,000 is closing cash and bank. I have closed debtors, creditors, cash and bank. I can start telling trading account, profit and loss account and balance sheet. From trading account, I will be getting closing stock. 3 lakhs plus 15 lakh 20,000 plus 6 lakh 36,000 minus 21 lakh 20,000 will be 3 lakh 36,000. I will have to give second effect as I am writing it in my books of accounts. 3 lakh 36,000 is closing stock. So when you are writing in balance sheet, you should not write on closing stock. It is your stock, right? Because balance sheet is as on date. I have tallied trading account. P&L account will be giving me net profit. I can add it to capital as the profit and loss is separate. I can add it to profit and loss account. 6 lakh 36,000 minus 50,000 minus 2 lakh 12,000 will be 3 lakh 74,000. Second effect, I'll add it to P&L account, 3 lakh 74,000. I have tallied my P&L account also. I will be telling my balance sheet. Let us tally our balance sheet. My capital will remain 10 lakhs. This will be 4 lakh 34,000. Total of the balance sheet will be 10 lakhs plus 4 lakh 34,000 plus 1 lakh 10,000. 15 lakh 44,000. If you are having time, you can total out this. Otherwise, you can directly write down 15 lakh 44,000. This is 5 lakh minus 50,000 is 4 lakh 50,000. So 4 lakh 50,000 plus 2 lakhs plus 5 lakh 58,000 plus 3 lakh 36,000. 15 lakh 44,000. We have tallied our books of accounts. Next question is C7.6. Chandru keeps his books under single entry system. On 1st April of the financial year, his statements of affairs stood as follows. So this is opening balance sheet. It is tallied Capital account, current liability, creditors account we always prepare. Here there is bills payable, so we will be preparing bills payable account. Furniture and fittings, stock, trade debtors, bills receivable account will be preparing. Cash in hand and at bank will be deciding whether we will be preparing separate column or combined column. The following was the summary cash book for the year ended 31st March. Cash in hand opening balance 80,000, cash sales payment to trade creditors. Now this is also tallied. So how many effect I'll be giving for each transaction is only one. So we will not even preparing cash and cash and bank account because it is already prepared. This is cash and bank account. Discount allowed to trade debtors and received from trade creditors amounted to 36,000, 28,000. Bills endorsed amounted to 15,000. Annual fire insurance premium 6,000 was paid every year on 1st August for the renewal of the policy. Furniture, fixtures and fittings were subject to depreciation at 15% per annum on diminishing balance method. You are also informed about the following balances as on 31st March. So these are closing balance. Now this is not a tallied sheet, so we will be passing dual entry. Chandru maintains a steady GP rate of 10% on sales. Prepare a trading account. Now this all accounts I will be preparing. Profit and loss account and balance sheet as on the year end. So trading P&L balance sheet. Creditors, bills payable, debtors and bills receivable are the accounts which I am deciding right now that I will be preparing. Any other additional accounts I will be preparing later on. So let me prepare this. All accounts. Trading P&L balance sheet. Debtors account. Bills receivable account. We don't need to prepare cash book. Creditors account. Bills payable account. So these are the two accounts that the four accounts that we need to prepare, and we have prepared it. Let us start solving the question. I have decided, as this is a tallied account, I will be passing one entry. Capital is opening capital 2,50,000. One effect we can go ahead. Trade creditors 5,80,000. We have already prepared the account. Bills payable 1,25,000. We have already prepared the account. Outstanding expenses 45,000. Now what we will be doing is we are already having P&L account. We will be having expenses over here. What we do, see, we can prepare an expense account. I am telling you a different way of solving the question. You can even prepare the account and then transfer it to P&L account, or you can do this. What we do is outstanding of current year will be added. Inner column I'm not having much space, but still outstanding of current year will be added. Prepaid of current year will be deducted. If outstanding of current year is added because it is an expenditure of current year but not paid in current year, then outstanding of previous year will be deducted. Why? It is paid in current year, but it is expenditure was written in P&L account last year. Similarly, prepaid of previous year will be added. Now, is this an outstanding expenditure? It is of previous year. Opening balance is of previous year. So 45,000 outstanding of previous year will be subtracted. Negative 40. And it will be a credit effect. See, for all other also we have given credit effect, right? So this will be also credit effect. This I have tick mark. I can go ahead. Non-current assets, furnitures and fixtures. I'll be doing it in inner column. Furniture, 1 lakh rupees. Stock is opening stock 6,10,000. Trade debtors 1,48,000. Debtors account opening balance. Bills receivable 60,000. Cash in hand and bank, I will not be giving a single entry. Sir, you told we need to compulsorily give one effect. Try to understand how the two effect will be taken. 1, 2. I will neither be giving effect of this 80,000, I'll nor be giving effect of this 80,000. And it is very logical. Opening cash and bank balance will appear at two places. Opening balance sheet asset side, cash and bank account debit side. So no need to pass any effect for this 80,000. Unexpired insurance is prepaid expense. It is prepaid expenses of current previous year. Prepaid of previous year will be added, and it is how much? 2,000 rupees. Sir, it is insurance. I am combining all the expenditure because the expenditure amount is given in total. I have tallied opening balance sheet. I have passed one effect for each and every transaction. 80,000 as I have decided in cash and bank, I will not be passing any entry. Cash sales 73 lakh 80,000. Trading account credit side 73 lakh 80,000. By sales. Cash is 73 lakh 80,000. I am first debit side, telling debit side. Receipt from trade debtors 15 lakh 10,000. Debtors account credit side 15 lakh 10,000. Receipt from BR 3 lakh 40,000. It is bank to BR or BR by bank. Go to credit side, payment to trade creditors 75 lakh 7,000. 75 lakh 7,000. Creditors account debit to bank. One effect as I have decided. Payment to bills payable 8 lakh 15,000. 8 lakh 15,000 to bank. That is incorrectly drawn. Sundry expenses paid, P&L account debit side 6 lakh 20,700. 6 lakh 20,700. Drawings 2 lakh 40,000 will be reduced from capital, minus drawings 2 lakh 40,000. Cash in hand at bank 1 lakh 27,300. Closing balance sheet asset side 127,300. We are through with giving that one effect. Now whatever effect will be given, will be giving dual effect. Discount allowed to trade debtors is 36,000. Discount allowed to debtors, P&L account debit side, debtors account credit side 36,000. To discount on debtors 36,000, debtors account credit side by discount 36,000. Received from creditors is 28,000. Creditors account debit to P&L account 28,000. By discount received from creditors 28,000. What will be debit effect? It will be creditors account debit side 28,000 to discount 28,000. Two effects I can go ahead. Bills endorsed amounted to 15,000. What is the journal entry for bills endorsed is creditors account debit to bills receivable. You have given your bills receivable to your creditors. Creditors account debit to bills receivable 15,000. Creditors account debit to BR 15,000. BR account credit by creditors 15,000. Credit effect, debit effect, we can go ahead. Annual fire insurance premium 6,000 was paid every year on 1st August. Try to understand this working note. Your year starts from 1st April and it ends on 31st March. All right. Every year you pay your insurance premium on 1st August. On 1st August. All right. So you will pay it for 1 year. Rupees the 6,000. So this will be paid up till July. Is it all right? That is 31st of July or 1st of August. So this month's April, May, June and July. That is 4 months insurance premium will be prepaid. This is 12 months insurance premium. Then what is 4 months insurance premium? It is 24, that is 2,000 rupees. It is the prepaid insurance of current year, 2,000 rupees. Prepaid insurance to effect prepaid of current year 2,000. Prepaid insurance is my asset. Prepaid insurance 2,000. Sir, last year also it was 2,000. Try to concentrate. Last year also you might have paid on 1st August. Rupees the 6,000. Out of which 4 months, April, May, June and July, 4 months would be prepaid even in previous year. So till the time insurance remains rupees 6,000 per annum and you are paying it on 1st August, every year there will be a prepaid insurance of 2,000. So this 4 months are in current year. This is 4,000. So your net answer of insurance should be 6,000 in P&L account. But right now P&L account we are writing down total expenditure, right? So this is 2,000 and 2,000. Second effect also we have given. We can go ahead. Furniture, fixtures and fittings were subject to depreciation of 15% per annum on diminishing balance method. Alright, so there is no purchase and sale of furniture, so I can directly provide depreciation. 15% WDV minus 15%, 15,000 P&L account debit side to depreciation 15,000. You are also informed the following balances, and as we have decided, as this is not a tallied sheet, I will be passing dual effect. Stock, this is closing stock, to effect 6,50,000. Trading account credit side, closing stock 6,50,000. Balance sheet asset side, closing stock 6,50,000. Debtors closing 1,52,000. Balance sheet asset side, debtors 1,52,000. Debtors account closing balance 1,52,000. Bills receivable closing is 75,000. Bills receivable closing 75,000. Balance sheet asset side. Bills receivable account we have already prepared. Closing balance is 75,000. Bills payable 1,40,000. Closing balance sheet liability side. Bills payable 1,40,000. And bills payable account we have already prepared. Closing balance, what was the figure? 1,40,000. Bills payable, two effects we have given. Outstanding expenses of current year is 5,000. Outstanding expenses of current year is 5,000. P&L account debit side it will be added. Balance sheet liability side, outstanding expenses 5,000. So two effects I have given of all this transaction. None of the things are pending. Chandru maintains a steady GP rate of 10% on sale. Alright, I am having sales. Yes, but only cash sales. Credit sales I might get it from debtors account. But GP is a 10% on sales. Second effect of GP I will be writing down in P&L account credit side. Whenever I get that figure, I will be writing it in trading and profit and loss account credit side also. None of the point is pending. No, I have not kept anything pending. I can start closing the books of accounts. Always first tally just miscellaneous accounts. Creditors, debtors, BR if it can be tallied. Debtors and BR, they are related accounts. Always first tally BR account, which is a subsidy, which is a sub account of debtors account, right? Debtors and BRs are same. BR is ultimately result of a certificate given by your debtors that you will be paying the amount on so and so date. So first tally your BR account. What is BR? Opening, bank, given to creditors, closing. So this is BR received from debtors. And the balancing figure will be BR received from debtors 3,40,000 plus 15,000 plus 75,000 minus 60,000 is 3,70,000. BR received from debtors. I am writing it in my account, so I'll have to pass second entry. By bills receivable 3,70,000. Opening balance of debtors, closing balance of debtors, cash received from debtors, discount to debtors, and BR received from debtors. Everything is available. So now balancing figure will be credit sales. To effect, one over here, second in trading account credit side. But what will be the figure is 15,10,000 plus 36,000 plus 3,70,000 plus 1,52,000 minus 1,48,000. It is 19,20,000, which will be credit sales. 19,20,000. Credit sales will be 19,20,000. Now I'll be telling my creditors and bills payable, and similarly bills payable will be tallied first. Bills payable, this is bills payable given to creditors. The balancing figure will be 8,15,000 plus 1,40,000 minus 1,25,000, which is 8,30,000. Creditors, you cannot directly find out credit purchase. Why? Because even closing is missing and credit purchase. There are two figures which are missing. So you cannot tally this books of accounts. This is also missing. This is also missing. Let us try other accounts to tally. Balance sheet will be last. P&L will be last. Trading account. Trading account, we are having total sales. What is the figure of total sales? 73,80,000 plus 19,20,000. It is 73,80,000 or 7,38,000. Let me check it. No, it is 73,80,000. So 73,80,000 plus 19,20,000 is my sales, which is 93 lakhs, into 10% will be 9,30,000 will be my GP. Second effect of GP is over here, 9,30,000 profit and loss account. Now, what's your trading account? Even closing stock is available, sales is available, opening stock is available, and GP is available. So the balancing figure is credit purchase, or balancing figure is purchase. And we can say that there is no cash purchase. Why? In our cash and bank account which is given, there is no purchase figure available. So there is no cash purchase. All the purchases are on credit. So balancing figure will be credit purchase. And what is balancing figure is, this was 93 lakhs plus 6,50,000 minus 6,10,000 minus 9,30,000 will be 84,10,000. 84,10,000 will be my credit purchase. Second effect, creditors account credit side, 84,10,000. 84,10,000. So two effects are given. Now as I am in creditors account, there is only one figure missing. Creditors account, I can find out that 84,10,000 plus 5,80,000 minus 8,30,000 minus 75,07,000 minus 28,000 minus 15,000 is 6,10,000. Will be closing balance of creditors. A second effect, balance sheet liability side, 6,10,000 creditors, 6,10,000. So which all accounts are tallied? Debtors, creditors, bills payable, bills receivable is tallied. Trading account is tallied. We can tally P&L account by finding out net profit. First, let me find out outer column of this. It is 6,20,700 plus 5,000 minus 2,000 minus 45,000 plus 2,000. It is 5,80,700. This is negative figure. It will be 9,30,000 plus 28,000 minus 5,80,700 minus 36,000 minus 15,000. 326,300. 326,300 will be added to capital. I'll be finding out total of balance sheet. 2,50,000, this is 10, so this is 3,36,300. Total of balance sheet 336,300 plus 6,10,000 plus 1,40,000 plus 5,000, which is 10,91,300. This is 85,000. Total will be 10,91,300. Let me just verify it. 85,000 plus 75,000 plus 1,52,000 plus 6,50,000 plus 2,000 plus 1,27,300. It's 10,91,300. This question was again an easy question. It was 7.6. So question number C, 7.7. A sole trader requests you to prepare his trading profit and loss account for the year ended and balance sheet. So these are the things that we are going to prepare. He provides you following information. Statement of affairs, that is opening balance sheet, is already given. Bank overdraft, outstanding expenses, bills payable, creditors. Creditors is the account which we normally prepare. Furniture, computer, mobile phone, stock, debtors. Debtors is an account which we normally prepare. Here bills payable and bills receivables are there, so we will be preparing bills receivable and bills payable. Unexpired insurances, prepaid insurance, stock of stationery, cash in hand. Now, this is a hint that a cash book will be prepared with cash column and bank column separately, because there is bank overdraft also, there is cash balance also. He informs you that there has been no addition to sale of furniture, computer and mobile phone during the accounting year. The other assets and liabilities as on 31st March are as follows. So these are assets and liabilities. Now understand, this is tallied. Opening balance sheet, I will be giving one effect. For all those transactions, I will be giving dual effect. One is debit, another is credit. Stock, trade, debtors, bills receivable, unexpired insurance, and those are all closing balances. He also provides you the following cash summary. Now those are cash transaction. Cash sales of 5,09,800, trade debtors 1,51,900, bills receivable 65,000, trade creditors 3,06,000, bills payable, salaries, rent, insurance, stationery, mobile phones and drawings. To be noted is, even if it is given on the right correct side, that is debit side is receipt and credit side is payment, there is no opening balance and closing balance. So we will be preparing this cash column also, and we will be finding out cash answer also. It is found prudent to depreciate furniture at 5%, computer at 10% and mobile phone at 25%. A provision for bad debt at 5% on trade debtors is also considered desirable. Now always understand, whatever your debtors figures is given, this is closing balance before BDR. This is not closing balance after BDR. So BDR will always be done at the end in inner column in balance sheet. We are starting the question by preparing necessary accounts. Trading P&L and balance sheet, I have already prepared. Debtors account, with the debtors account there is a bills receivable account, so I will be preparing bills receivable account. Cash column is having two columns, cash and bank. Cash and bank. I will be preparing creditors account, bills payable account, and I am having a space whereby I can prepare some additional account if required. Now, expenditures account can be prepared or it can be dealt in inner column. I have prepared a big profit and loss account I will be dealing with in inner column. Let me start the question. C7.7. Bank overdraft 4270. First, I need to give one effect for all these transactions. I will be giving one effect where it should be given cash and bank opening balance 4270. And as it is overdraft, opening will come over here 4270. One effect given, I can go ahead. Outstanding expenses, salaries and rent. So for salaries and rent, profit and loss account, salaries and rent, I will be preparing inner column. Outstanding of current year is added, plus outstanding of current year minus prepaid of current year minus outstanding of previous year and plus prepaid of previous year. This is opening balance sheet. In rent also I will be doing same thing, plus outstanding of current year minus prepaid of current year minus outstanding of previous year plus prepaid of previous year. Salary outstanding of previous year is 8,000. Salary outstanding of previous year is 8,000. So it will be negative. And rent outstanding for previous year is 6,000. Negative 6,000. We are giving credit effect. Try to understand. Even this was credit effect. Even this two are credit effect. On debit side, we have written negative figure. So ultimately it is a credit effect. This is done. Bills payable 22,500. We have prepared the account. Opening 22,500. Trade creditors, we have prepared the account 52,500. Capital opening balance 197,430. Going on debit side, now this will be having debit effect, but one effect. Furniture 96,000 inner column. Furniture 96,000. There is no purchase sale, there is depreciation. I'll be keeping one line blank. Computer 24,300. Computer 24,300. Closing balance sheet asset side inner column. Mobile phone 8,000. Mobile 8,000. We've done this thing. Stock 89,500. Trading account debit side. Opening stock 89,500. Debtors opening balance 55,000. Debtors account opening balance 55,000. Bills receivable 15,000. BR is 15,000. Opening balance. Unexpired insurance. Now insurance is also an expenditure. I will be writing it in P&L account. Insurance prepaid of previous year is added. So plus prepaid of previous year. I'm not writing full because I know that in insurance only prepaid is coming, outstanding is not coming. Outstanding prepaid of current year will be minus and prepaid of previous year will be plus. Prepaid of previous year, unexpired insurance of previous year 2,400 will be added. Stock of stationery 200. Now stock of stationery I will be dealing again in P&L account debit side. Stationery opening plus purchase minus closing, and this is opening. How I will be finding out stationery expenditure? Stationery purchased is not my expenditure of current year. Stationery consumed is my expenditure of current year. How to find out stationery consumed? Opening plus purchase minus closing, and this is opening stock of stationery 200 rupees. Cash in hand 300 is opening balance in cash and bank account. And this is all for statement of office, that is opening balance sheet. I have given one effective. Now remember, now onwards all the figures will be having dual effect. Now we are not having any sheet or any account which is tallied. We are just having information. Stock, this is as on 31st March. So these are closing. Closing stock 95,400 to effect. Trading account credit side, closing stock 95,400. Balance sheet asset side, closing stock 95,400. Debtors 65,000 to effect. Balance sheet debtors 65,000. It was 65,000, isn't it? Yes. And in debtors account, it will be closing balance 65,000. To effect one debit, balance sheet asset side is a debit effect. Debtors account credit side is a credit effect. Bills receivable, again same like debtors. Debtors, there is a provision, so I am writing here in inner column 65,000 so that I get sufficient space. Bills receivable, the figure is 20,000. BR account closing 20,000. Unexpired insurance, this is outstanding, prepaid of current year. Prepaid of current year will be subtracted from here in P&L account 2,500. And prepaid insurance is an asset. See, P&L account debit side negative figure is a credit effect. Balance sheet asset side, prepaid insurance 2,500. Stock of stationery, this is closing stock of stationery 250. Closing stock of stationery 250 rupees. Balance sheet asset side, stock of stationery 250. P&L account debit side subtracted credit effect. Balance sheet asset side debit effect. Cash at bank, this is closing balance of bank 18,000. And it is balance, it is not overdraft. Bank is 18,000. And second effect, balance sheet asset side, bank balance 18,000. Cash balance is 7230. Cash 7230. Debit effect 7230. Cash book credit effect. Outstanding salary closing is 8,300. Outstanding salary of current year 8,300. Balance sheet liability side, outstanding salary 8,300. This is credit effect. This is this 8,300. P&L account debit side is debit effect. Rent outstanding 6,000. Bills payable 26,500. Bills payable 26,500. Balance sheet liability side, and it is the closing balance 26,500. Trade creditors 76,000. Similar effect. Creditors 76,000. Closing creditors 76,000. Alright. He also provides you the following summary of his cash transactions. Now understand, it is specifically written, it is cash transaction. I will be assuming they are all cash. Cash sales is 5,09,800. I need to give two effect. 5,09,800. Cash account debit sales 5,09,800, and it will be written on trading account credit side. Sales cash 5,09,800. Received from debtors 1,51,900. 1,51,900. received from debtors. Cash account debit to debtors 1,51,900. Debtors account will be credited. Bills receivable. So it is the bills receivable matured and we have received the money. Cash account debit to bills receivable 65,000. 65,000. BR account credit by bank 65,000. Payment to trade creditors 3,06,000. What is the journal entry? Creditors account debit to cash 3,06,000. Creditors account debit to cash 3,06,000. On cash account it will be written credit side. Creditors 3,06,000. Bills payable, paid to bills payable 80,000. Bills payable account debit to cash 80,000. Cash account credit paid to bills payable 80,000. Salaries paid 99,000. P&L account debit side salaries 99,000 and cash account credit side salaries 99,000. Rent 72,000. Rent is 72,000. Cash account rent is 72,000. Insurance premium 10,000. This is insurance premium paid 10,000. Cash account 10,000. Stationery 1,500. This is purchased the stationery 1,500. P&L account debit side, cash account credit side. Stationery 1,500. Mobile phone expenses 9,000. P&L account debit side. Mobile phone expenses 9,000. Cash account credit side. Mobile phone expenses 9,000. Drawings 1,20,000. Drawings will be reduced from capital 1,20,000. Cash account will be credited. Drawings 1,20,000. Credit effect, balance sheet liability side negative figure is a debit effect. It is found prudent to depreciate furniture at 5%, computer at 10% and mobile phone at 25%. So furniture at 5% minus 5% depreciation, computer is 10 and mobile phone is 25. So I am writing it first in balance sheet and then I'll be writing it in P&L account debit side. 96,000 into 5%. It is 4,800. This is 2,430 and this is 2,000. I need to write down in P&L account debit side 4,800 depreciation. Furniture 4,800. Computer 2,430. Computer 2,430 and a mobile phone 2,000. I have given debit effect, I have given credit effect, I can go ahead of depreciation. Provide 5% BDR. As I told you, BDR will be always providing on the 65,000. 5% of 65,000. It is 3250. Provision. Provision for debtors P&L debit 3250. Two effects are given. I don't think I have left any of the point. I have completed all the points which are under consideration. All right. Let us see how we can tally this. Creditors opening is given. Before creditors, you will always have to tally bills payable. This we have done, right? Bills payable is sub account of creditors. Bills payable is created because creditors have given you guarantee in form of a bill. So bills payable 22,500, bills payable paid. So this is bills payable issued to creditors, right? And balancing figure is issued to creditors. So creditors account and balancing figure will be 80,000 plus 26,500 minus 22,500. It is 84,000. Creditors account will be debited, bills payable 84,000. Creditors account debit to bills payable issued to creditors. So bills payable is closed. In creditors, cash received is given, bills payable is given, closing is given, opening is given. So this is credit purchase. Balancing figure is credit purchase. The second effect will go in trading account debit side. 3,06,000 plus 84,000 plus 76,000 minus 52,500. It is 4,13,500. Is credit purchase? Purchase credit 4,13,500. So I have done creditors, I have done bills payable. Let me see date, first bills receivable, opening, bank and closing. So these are bills receivable received from debtors. Bills receivable account debit to debtors, which will be 85 minus 15 is 70. So by BR is 70,000. All right. So I can even find out sales. Credit sales will be my balancing figure. 151,900 plus 70,000 plus 65,000 minus 55,000, which is 231,900. Credit sales will be in trading account credit side 231,900. So two effects are given. So I have got debtors also, bills receivable also. I have tallied it. The problem is in cash and bank account, opening balances are available, closing balances are available. So let me first tally cash column. Before that, let me see trading account, how it can be tallied. Because P&L account, it will be just a balance. In trading account, I think only gross profit is missing. And if something else will be missing, it will be cash purchase, right? So let me first find out cash column and what is the difference. Let me do this. First, let me find out bank column and what is the difference. 18,000 plus 4270 is 22,270. So what would have happened? There was an overdraft of 4270 and there is a closing balance of 18,000. So you might have deposited 22,270 in your bank account. What will be the journal entry? Bank account debit to cash, contra entry, and cash account credit by bank 22,270. So my bank column is tallied. Now I need to tally my cash column. And if there is a difference, I will decide what to deal with it. If I can deal cash purchase, there is only one thing left in trading account, cash purchase. So I can treat it as cash purchase. But let me first find out what is the difference. It is 300 plus 5,09,800 plus 1,51,900 plus 65,000 minus 3,06,000 minus 80,000 minus 99,000 minus 72,000 minus 22,270 minus 10,000 minus 1,500 minus 9,000 minus 1,20,000 minus 7,230, and there is no difference, right? Cash account is automatically tallied. Sir, if it was not tallied, then there is only one difference which you can take, which is cash purchase. Or if it is on credit side, you can treat as a miscellaneous expenditure. But in this question, it is tallied. So cash purchase will be 0. My cash and bank column is also tallied. Other columns are also tallied. I can tally my trading account. The balancing figure will be gross profit. 5,09,800 plus 2,31,900 plus 95,400 minus 89,500 minus 4,13,500, which is 3,34,100. 3,34,100. GP will be transferred over here. 3,34,100. Let me first find out outer column of this. This will be 99,300. This will be 72,000. This will be minus 100. So 9,900. This will be minus 50. 1,450. And I can find out my net profit, which will be 3,31,400, 3,34,100 minus 99,300 minus 72,000 minus 9,900 minus 1,450 minus 9,000 minus 4,800 minus 2,430 minus 2,000 minus 3,250, which will be 129,970. 129,970 will be added to balance sheet. 129,970. I am finding out outer column. 197,430 minus 1,20,000 plus 129,970. It is 2,07,400. Outer column 96,000 minus 4,800 It is 91,200. 24,300 minus 2430. It is 21,870. 8,000 minus 2,000 is 6,000. 65,000 minus 3250 is 61,750. Balance sheet should tally 2,07,400 plus 8,300 plus 6,000 plus 26,500 plus 76,000, 324,200. On other side, 91,200 plus 21,870 plus 6,000 plus 95,400 plus 61,1,750 plus 20,000 plus 2,500 plus 250 plus 18,000 plus 7,230. It is 324,200. My balance sheet is tallied. This was question number C7.7. C7.8. Let us first read the question. Ashok keeps his books in single entry system. From the following information, prepare trading account, profit and loss account, and balance sheet as on the date. Try to understand, none of the account or sheet is given. So even opening balance sheet is not given, which was given in previous questions. Opening balances are given, closing balances is given. Creditors, we normally prepare the account. In this question, we can prepare fixed asset account, or what we can do is we can do it in inner column. In this case, I am preparing fixed asset account, cash and bank account. Now I will be taking into consideration whether I should prepare a combined column or a separate column. See, what balance is given is cash and bank account. But the thing is, say this point, withdrawn from bank, deposited into bank. From this all clauses, we will determine that we will prepare cash and bank account separately. Debtors account we always prepare. So debtors, creditors, if BR and bills payables is available then. And one more account in this particular question will be opening balance sheet. Not account, but it will be opening balance sheet. That will be a new point for this particular question. Total receipt from debtors, returns inward, bad debt, total sales discount received, returns outward, capital introduced, check receipt from debtors, cash purchase, fixed asset purchase and paid by check, drawings by check, deposited into bank, withdrawn from bank, cash in hand at the end, paid to creditors by check, expenses paid. And this is the question. So which all accounts we need to prepare? Trading, profit and loss account, balance sheet, debtors account, cash book, 2 columns, bank column, cash column, bank column, cash column, debtors account, creditors account. I need to prepare fixed asset account, that I have decided that I will be preparing, and I excuse me, I will be also preparing opening balance sheet. Why opening balance sheet is to be prepared is we need opening capital. Also, it is not already given. So we will have to prepare to find out opening capital in our closing balance sheet. Now try to concentrate. Up till this point of time, we have not done this. Let us do this. Trading account, anything written on debit side is debit effect. Anything written on credit side is credit effect. So in P&L account. Balance sheet, anything written on asset side is a debit effect. Anything written on liability side is a credit effect. We don't write it down, but for this question, I am writing it down. This should not be written in examination. Debit and credit should not be written in examination, especially in balance sheet. Debtors account, anything written on debit side is debit effect. This is credit effect, debit effect, credit effect. Cash and bank also same concept. Fixed asset also same concept. But opening balance sheet, asset side is a credit effect. Please concentrate. And liability side will be debit effect. Sir, why? I'm going to tell you, but right now take it for granted that opening balance sheet asset is credit effect and liability is debit effect. In our full question, nothing is tallied. So we will pass two effect for each and every transaction. One debit, another credit. Let us start the question. Opening creditors 30,000. Opening creditors 30,000. Two effect. Creditors account, credit side. Opening balance sheet, liability side. See the effects. Creditors account, credit side is a credit effect. Opening balance sheet, liability side is a debit effect. Closing creditors 25,000. Closing balance of creditors 25,000. Second effect will go in closing balance sheet, liability side. Outstanding expense, this is of previous year. There is no prepaid expense. So I am in P&L account, I am drawing two expenses plus outstanding of current year minus outstanding of previous year. Outstanding of previous year is 1,000. So negative 1,000. Second effect, you will have to give two effects. Opening balance sheet, outstanding expense, which was 1,000. See the effect. Opening balance sheet, liability side is a debit effect. P&L account, a debit side minus is a credit effect. So two effects, we can go ahead. Outstanding expenses closing is very simple. 500 P&L account debit, closing balance sheet, outstanding expense 500. Fixed asset opening balance 23,000. Two effect. Fixed asset account opening balance 23,000. Opening balance sheet fixed asset 23,000. Opening balance sheet asset side is a credit effect. Fixed asset opening balance debit side. Closing balance of fixed asset is 22,000. Closing balance sheet fixed asset 22,000. Fixed asset account closing balance 22,000. Two effects, debit and credit. Opening stock 16,000. Two effect. Opening stock trading account debit side is debit effect. Opening balance sheet asset side is credit effect. It is 16,000. Closing stock to normal effect trading account credit side 22,500. Closing balance sheet asset side. Stock 22,000. Cash and bank opening balance 14,000. Now try to understand, we have done a combined column. Cash and bank opening balance is 14,000. So what I'll be doing is opening, in the bracket I am writing 14,000. So cash and bank total should be 14,000. And opening balance sheet cash and bank 14,000. So credit effect, debit effect, I can go ahead. This is not minus, this is 14,000. Now, when I will be writing the segregation of bank and cash, I will not be passing dual effect of these two figures. That is just the segregation. But the total should be 14,000 of opening balance. Closing balance cash and bank 16,000. Same closing balance sheet, cash and bank is 16,000. And in cash and bank account, I will be writing closing balance 16,000. So cash and bank figure total will be 16,000. Opening debtors we are not knowing. Opening balance sheet debtors we need to find it out. I am just writing down the place but not the figures. Closing debtors is 36,000. Debtors account credit side, closing balance 36,000. Closing balance sheet debtors 36,000. So this part is over. Let us go to this part. Again, this is not tallied, so practically we will be passing to effect. Total receipt from debtors is 1,30,000. Now, whether you have received by bank or whether you have received by cash, it is not known. What is heading is following further details are available for current year. So you can assume it as bank, you can assume it as cash, it does not make any difference. I am assuming it as a bank because it is a big figure. 1,30,000 receipt from debtors, bank account debit 1,30,000. Bank account debit to debtors 1,30,000. Debtors account credit by bank 1,30,000. Return inwards is the sales return 3,000. Sales return to effect. Debtors account credit side, sales return is 3,000 and it will be reduced from sales. Trading account credit side negative figure is a debit effect. Debtors account credit effect. Bad debt. Bad debt account debit to debtors. Bad debt is debited to P&L account and debtors will be credited. Bad debt to bad debt 1,000. Debtors account credit side by bad debt 1,000. To effects, I can go ahead. Total sales is 1,50,000. All right. So sales total should be 1,50,000. I am just writing as an information in inner column, right? So whenever I get some missing figures, this figures might be helpful to find out that particular figures. Discount received is always from creditors. It is creditors account debit to discount. Figure is 1,500. Creditors account debit to discount 1,500 and discount will go in P&L credit by discount 1,000. Return outwards is purchase return 1,000. Purchase return is reduced from purchase. $1,000 and it is debited to creditors. Creditors will reduce. Debit effect, debit side minus credit effect. Capital introduced and paid into bank, bank account debit to capital 15,000. Bank account debit to capital 15,000. In balance sheet, it will be additional capital 15,000. Check received from debtors. All right. So assuming this as bank was incorrect, right? This cannot be assumed as bank. We have written it in bank 1,30,000. So 1,30,000 received from debtors, 1,25,000 is check, and 5,000 is cash. Is it all right? So I am passing this journal entry. 130 will be credited to debtors. So I am rectifying this. Let me change the color. So this will be 1,30,000. What is second effect of 1,30,000? Instead of debit side of this bank account, in bank account it will be 1,25,000 and in cash account it will be 5,000. Right? So assumptions was not good because they have given the segregation that cash received. So what is the net effect? This 1,30,000 I am not passing any effect. 1,25,000 and 5,000 I am passing two effects. 1,25,000. What is the journal entry? Bank account debit 1,25,000. Cash account debit 5,000. Two debtors 1,30,000. So cash account debit 5,000. Bank account debit 1,25,000 and debtors account credit. Cash purchases is 2,000. Purchase will be cash and credit where cash is 2,000. Cash account credit side 2,000 by purchase 2,000. Two effects, we can go ahead. Fixed asset purchased and paid by check. So fixed asset account debit to bank. Fixed asset account debit to bank. So by fixed asset 2,000. It is 2,000. No, 1,000. 1,000 and fixed asset account debit to bank 1,000. Drawings by check 6,500. It is drawings account debit to bank minus drawings 6,500. Bank account by drawings 6,500. Two effects, very simple. Deposited into bank 10,000. It is bank account debit to cash. Bank account debit to cash. Contra entry 10,000 in bank. Cash account credit by bank. So in cash account 10,000 credit. Withdrawn from bank 18,500. It is cash account debit to bank 18,500. Cash account debit to bank. Contra entry 18,500. Bank account credit by cash 18,000. Again this is contra entry. Cash in hand at the end of the year 2,500. So closing balance cash is 2,500 and try to concentrate. What is the total closing balance? 16,000. What is the cash closing balance? 2,500. So what will be bank closing balance is 13,500 and this 13,500 plus 2,500 is equal to 16,000. We have already given the second effect of 16,000. Say this. We have already given effect of 16,000. So now no need to re-give it. No need to give it again. This is already there, right? 2,500, 13,500 is equal to 16,000. 16,000 second effect we have already given. Paid to creditors by check is creditors account debit to bank. By creditors 1,20,000. Creditors account debit 1,20,000. Expenses paid 20,000. Now expenses paid is through check or through cash. We don't know. We'll be writing it in our column, right? Expenses will be P&L debit 20,000. And in cash and bank, two expenses 20,000. Please understand this 20,000 second effect is given. So we will be just writing segregation over here. All right. I don't think I have skipped any of the points, so I can start telling my books of accounts. Debtors account can be tallied? Practically, yes. No. Opening balance is missing and credit sales is missing. So two figures are missing. Opening balance and credit sales. We cannot tally it. Creditors can be tallied, yes. Here opening, closing both is there. Received from creditors is also there and all the figures are available. So we can tally creditors account. It will be 1,500 plus 1,000 plus 1,20,000 plus 25,000 minus 30,000, which is 1,17,500. Balancing figure is 1,17,500 and it will be written in trading account debit side. 1,17,000. All right. Which other accounts I can tally? Fixed asset account. Yes. The difference figure is depreciation. Will be 2,000. Will be P&L debit 2,000. Opening balance sheet debtors figure is missing. I cannot find out. Opening debtors and capital both are missing, right? So we cannot do opening balance sheet. Cash we can find out, right? But here the expenses figures is not available whether it is bank or cash. So the segregation of this and this is pending. See, if it is ultimately not available, I will assume either it is cash or bank. But let me try out another way out if at all it is possible. Total sales is 1,50,000, right? So practically there is no way by which we can tally cash column, opening balance sheet or trading account, right? So first this is in expenses is 20,000 will be credit, right? By expenses, I am assuming they are cash expenses. 20,000. So it should be written, but if there is no way out, I can assume it is a 20,000 is cash expenditure. Second effect I have given correctly. Yes, P&L account debit side, it should be cash account credit side. Debit I have written incorrectly. I had written incorrectly, right? I can find out opening cash balance, right? So 2,000 plus 10,000 plus 20,000 plus 2,500 minus 5,000 minus 18,000. It is 11,000. So opening cash balance is 11,000. So opening bank balance will be 3,000 because total is 14,000, right? So I will be getting now bank column only, right? Bank column, anything is pending? No. Then I can tally out bank column and see what is the difference, because opening closing both are available. 3,000 plus 1,25,000 plus 15,000 plus 10,000 minus 1000 minus 6500 minus 18,500 minus 1,20,000 minus 13,500. So 6,500 is difference on debit side. 6,500 is difference on debit side, and then only my bank column will tell you. What could be this? It should be cash sales. Bank will be debited to cash sales. Now, if 6,500 is cash sales, cash is 6,500. Then credit sales will be remaining amount. That will be 1,43,500. Will be credit sales. You don't need, should I give second effect of this all? Yes. Say credit effect, cash sales we have already given. Bank account debit side. This is credit side, and credit sales 1,43,500 will go in debtors account. 1,43,500. Two effect of cash sales is also given and credit sales is also given. I can tally now my debtors account. 1,30,000 plus 4,000 plus 36,000 minus 143,500. It is 26,500 will be opening balance of debtors. Opening balance of debtors is 26,500. I can even tally my opening balance sheet. I will be getting opening capital. What will be my opening capital? 23,000 plus 16,000 plus 14,000 plus 26,500 minus 31,000. It is 48,500 will be opening capital. Second effect of opening capital, opening balance sheet, opening balance 43,500. So debtors is tallied, creditors is tallied, cash and bank is tallied, fixed asset is tallied, opening balance sheet is tallied. This is opening balance, 48,500. Now I can tell you this. This is 150 minus 3,000 is 1,47,000. This will be 1,18,500. I am having closing stock. I will be getting GP. 1,47,000 plus 22,500 minus 16,000 minus 1,18,000, which is 35,000. GP will be 35,000. Will be transferred over here. 35,000. Okay, expenses 20,000. I'm changing the place. It should be over here 20,000. So 20,000 minus 500 is 19,500. Net profit will be 35,000 minus 19,500 minus 1,000 minus 2,000 will be 12,500. Will be transferred to capital plus net profit 12,500. I'll tally my balance sheet. 48,500 plus 15,000 plus 6,500 plus 12,500. This is 82,500 plus 25,000 plus 500, 1,08,000. 22,000 plus 22,500 plus 16,000 plus 36,000. What is the problem? 48,500 plus 15,000 minus 6,500 plus 12,500 plus 25,000 plus 500 is 95,000. This is 22 plus 22.5 plus 16 plus 36, which is 96,500. So there is a difference of 1,500. Let us find out where it is. So I think this all are correct. I think there is some problem in totals because this is becoming 1,000, this is 500. So this is 35,000 plus 1,500 minus 19,500 minus 1,000 minus 2,000. Yes, it is 14,000. If it is 14,000, 1,500 will be added. This will be 96,500. This will be right. So this was 7.8. Let us solve C7.9. Let us first read the question. From the following information in respect of the trader, prepare trading account, profit and loss account, and balance sheet. These are the things which we normally prepare. We will be preparing debtors account, bills receivable account, creditors account that we normally prepare. Furniture I can handle, I think it in inner column. I'll not be preparing it. Expenses and prepaid expenses, I'll handle it in inner column. Cash and bank separate figures are given. I will be writing down in separate column. But understand, when it is given receipt and payment, there is no nothing given whether it is cash received or cash payment. Collection from debtors after allowing 2.5% discount payment to creditors, that is all right. Miscellaneous income. Sales are affected so as to realize 1/3% on sales proceed. Goods costing 18,000 were issued an advertisement article. During the year, bills receivable 2 lakhs were drawn on debtors. This also I can handle. Capital introduced, purchase and sales are made on credit only. So there are no cash purchases and cash sales. Is it all right? So cash and bank, I will be preparing separate, and then I will be assuming that this all transaction are through bank, and then I'll be telling cash and bank. Will not be a difficult one. But no tallied sheet or tallied account is given. So the question automatically becomes lengthy because for each and every transaction, we need to pass dual effect. One is debit, another is credit. Let us start the question. Opening stock 1,60,000. Trading account. We need to prepare accounts, right? So debtors, bills receivable, creditors, debtors. Here I'll be preparing bills receivable, creditors, cash and bank separate column. This is bank, this is cash, bank and cash. Opening balance sheet I'll have to prepare compulsorily because it is not given. That's it. Any other accounts which is required, I can always draw. Opening stock is 1,60,000. Trading account debit side 1,60,000. Opening balance sheet asset side stock 1,60,000. Closing stock 1,40,000. Balance sheet asset side stock is 1,40,000. Opening balance of debtors 3,20,000. Opening balance sheet asset side, debtors 3,20,000. Closing debtors is question mark, so we need to find it out. And here also will be debtors figure, which we need to find out. Opening bills receivable is dash. Dash and question mark is different. Dash means it was 0. Opening bills receivable was 0. Second effect I am not giving because just it is 0. And closing bills receivable is not given. So closing is question mark, which I need to find out. So bills receivable also figure will be coming in closing balance sheet. Creditors opening balance 2,20,000. Creditors opening balance 2,20,000. Opening balance sheet creditors 2,20,000. This is debit effect. Opening balance sheet liability side is debit. This is credit. Closing creditors 3 lakhs. Closing balance sheet liability side 3 lakhs. And in creditors account, closing balance 3 lakhs. Furniture opening balance 1,20,000. See, if you are not preparing accounts, it is somewhat weird to write it down. Opening balance sheet, furniture is 1,20,000, which will come in inner column in closing balance sheet. Furniture 1,20,000. Sir, why it had not happened in previous question? In previous question, we have prepared separate accounts. Here I am trying to solve it in inner column. In examination, you can always prepare an account and find it out. 1,20,000 will be closing balance of furniture. So I am just keeping it in my information that my closing balance is 1,27,000. I am not passing any other effect. I am not passing even effect of 1,27,000. It is just for my information, and from that I can find out purchase and depreciation and that all points. Expenses due. So expenses, I'll be drawing it in P&L account. 2 expenses plus outstanding of current year minus prepaid of current year minus outstanding of previous year plus prepaid of previous year. Now let us see which information is given. Expenses due opening. So it is outstanding expenses of previous year 40,000. Outstanding expenses of previous year 40,000 will be negative over here. Outstanding expenses is liability in opening balance sheet. What is the figure? 40,000. Opening balance sheet liability side is a debit effect. And here debit side minus is a credit effect. Outstanding expenses closing 36,000. Outstanding expenses of current year 36,000. Balance sheet liability side outstanding expenses 36,000. This is credit effect. This is debit effect. We can go ahead. Prepaid expenses of previous year 12,000. Prepaid of previous year is 12,000 added over here. Prepaid is asset. Opening balance sheet. Prepaid expense 12,000. Prepaid expense of current year is 14,000. Current year 14,000. Prepaid expenses is asset. This is credit effect, right? This is debit effect. We can go ahead. Cash account opening balance is 4,000. Opening balance is 4,000. Opening balance sheet cash 4,000. 2 effects. Closing cash balance is 3,000. Cash account closing balance is 3,000. Second effect, closing balance sheet cash 3,000. Similarly, opening bank balance 20,000. So opening bank balance is 20,000. Opening balance sheet bank balance is 20,000. Closing bank balance is 9,500. So bank balance, closing balance sheet 9,500 and bank account 9,500. So this part is over. Let us go to this part. Now, as I told you, no information is given whether the particular item is cash or bank. So I am assuming all the big items are bank. So all the items I'll be taking it in bank and then I'll be solving cash account. Collection from debtors after allowing 2.5% discount is 11,70,000. Now try to understand this working note. How much I have received from debtors? It is 11,70,000. This is received. After discount of 2.5%, I have received. It is 2.5%. Start it. So how to solve this? If receivable were 100, 2.5% was allowed as discount. So I have received only 97.5. Cross multiply this. It is 11,70,000 multiplied by 100 divided by 97.5. It is 12 lakhs. So what was receivable was 12 lakhs. How much discount is given is 30,000. And so what is received is 11,70,000. What is the journal entry I'll pass? Bank account debit 11,70,000. Discount account debit which will be debited to P&L account 30,000. To debtors 12 lakhs. And this journal entry I will be posting it in my books of accounts. Bank account debit 11,70,000. 11,70,000. P&L account debit 30,000. And debtors account credit 7 lakhs. Sorry, it is 30 plus 11 lakhs. It is 12 lakhs. So total is 12 lakhs, right? Discount is 3,000 and bank is 11,70,000. Similarly, payment to creditors after 2% discount. So 7,74,000 7,74,000 is 98%. It is after 2% discount. Let me do it. 7,74,000. 7,74,000. If 100 was payable, 2% is discount. So paid is 98. So 774 into 100 divided by 98 is 7,89,795. I think there is a mistake in our question. It should be 2.5%. If it is 2.5%, it is 7,74,000 divided by 97.5 divided by no. Let me just verify it. Yes, there is a printing mistake. This is 7,84,000. You need to correct the question. 7,84,000. Kindly correct it in your book also. It is 7,84,000. So this is 7,84,000 into 100 divided by 98. It is 8 lakhs. So what is the payable is 8 lakhs, out of which 16,000 is the discount received and 7,84,000 is ultimately paid. It will be creditors account debit 8 lakhs, to discount 16,000, to bank 7,84,000. Creditors account debit 8 lakhs, to discount 16,000, to bank 7,84,000. Discount will be credited to P&L account 16,000. And bank will be credited by 7,84,000. That is all for credit. So we've done this. Proceeds of bills receivable 1,22,500 at discount of 2%. So 122,500, again same type of calculation is there. 1,22,500 is 98. There is 2% discount. 100 rupees was receivable. Cross multiplication 122,500 into 100 divided by 98. It is 1,25,000. Discount was 2,500 and what was received was 122,500. So bank account debit to bills receivable 122,500. P&L account debit 2,500. And BR 1,25,000. So all three are similar type of question. Two are receivable and 3 is payable. Proprietor's drawings 1,40,000. Proprietor's drawings is 1,40,000. Proprietor's drawings bank account credit by drawings 1,40,000 and it will be reduced from capital minus drawings 1,40,000. Purchase of furniture midway through the year. Purchase of furniture is 20,000. Asset furniture purchase 20,000. Bank account credit by furniture 20,000. %4 government securities purchased at the rate of 96% on 1st October. That is halfway throughout the year. And it is 1,92,000. So what would be face value of the security? You have purchased at 98 at 1,92,000. So 1,92,000 divided by 0.98, that is, I'm making some mistake. It is 96%, right? So there is a 4% discount. 4% discount, that is 2 lakhs rupees. 2 lakhs rupees into 4% is nothing but minus 4% is 1,92,000. All right. So face value is 2 lakhs rupees of the securities. Why I am interested first in face value? Because I want to calculate interest also. Please try to concentrate. 1,92,000 first I am giving to effect. You have purchased government securities, will come in your balance sheet asset side. 4% government security having face value of 2 lakh, you have purchased at 1,96,000, 92,000, sorry. Second effect, bank account credit side, by government security 1,92,000. Now, any government security which is at 4% and you have purchased at midway through the year, you will be getting interest. Interest on security, interest, dividend on any shares, any coupon on any debentures is always paid on face value. So you should have received the interest. How much interest? 2 lakhs rupees into 2% because you have holded the security only for half year, which is nothing but 1% is 2000, so 2% is 4000. Now, have you received this interest or not? No. So it is receivable. Interest receivable is your income, 4000 rupees, P&L account credit side by interest receivable 4000. And the second effect will be balance sheet asset side. Interest receivable. How much? 4000 rupees. So what is the face value is important. How we have found out face value? 192 at 96%. Then what is 100%? 1,92,000 divided by 96%, which is 2 lakhs. Okay. So this is done, and we have also calculated the interest. Expenses are 3,50,000. P&L account debit, expenses 3,50,000. Bank account credit by expense 3,20,000. Sorry, 3,50,000. Miscellaneous income 10,000. P&L account credit side by miscellaneous income 10,000. Bank account debit side to miscellaneous income 10,000. I assumed everything is received in bank and paid from bank. Sales are effected so as to realize 33.33% on sales proceeds. So what will be GP? 33.33% on. Second effect of GP will be over here. GP I'll be calculating last when I'll be getting sales and all other figures. Costing goods 18,000 were issued at advertisement expenditure. There are two effects. Trading account credit side as goods are going out. Goods by advertisement. What is the figure is 18,000. And there is an expenditure of advertisement. So P&L account is debited. During the year, bills receivable of rupees 2 lakhs were drawn on debtors. So what is the journal entry? Bills receivable account debit to debtors. Bills receivable account debit to debtors is 2 lakhs. Debtors account credit by BR is also 2 lakhs. Of this, bills amounting to 40,000 were endorsed in favor of creditors. What is the journal entry? Creditors account debit to bills receivable 40,000. Creditors account debit to bills receivable 40,000. Bills receivable account credit, creditors account debit. $40,000 were endorsed in favor of creditors. Out of this later amount, so what was endorsed to creditors? A bill of 8,000 was dishonored by debtor. So endorsed bill is dishonored. What is the journal entry when endorsed bill is dishonored? It is debtors account debit to creditors 8,000 rupees. So debtors account debit to creditors 8,000 rupees. Creditors account credit by debtors 8,000 rupees. I think opening balance of creditors is written incorrectly. Creditors 2,20,000. Yes, it is written incorrectly. 2,20,000. BR discount bank. This is written all correct. 2,20,000. excuse me, creditors should be rectified it. Capital introduced during the year by proprietor by check was omitted. However, 9,500 bank balance is calculated correctly. So you just have to record this. 9,500, sorry. Capital introduced during the year by proprietor by check was omitted to be recorded in cash book. So there is some capital introduced in cash book. Capital introduced will come on debit side. To capital. We don't know the figure, but we will be finding it out. By check. So bank it is purchases and sales were made on credit only. Right. So I don't think I am having any missing figure. What I can do is, can I start with creditors? Opening is there. Closing creditors 3 lakhs. Also I have written incorrectly. Closing comes on this side, right, of creditors 3 lakhs. Second effect have I given correctly? Yes, second effect is given correctly. So creditors opening and closing I had written both incorrectly. We should rectify it. 2,20,000 plus 8,000. No. Here opening and closing is there, so balancing figure will be credit purchase. So 2,28,000 is the credit side, minus 40,000, minus 16,000. minus 7,84,000 minus 3 lakhs. Yes, so it is 9,12,000, which is credit purchase. Trading account purchase 9,12,000. I have solved creditors, right? Opening balance sheet, I can tally it. There is opening cash, bank. I don't think any figure is missing. You can tally it. 1,60,000 plus 3,20,000 plus 1,20,000 plus 12,000 plus 4,000 plus 20,000 minus 2,20,000 minus 40,000. It is 3,76,000. Will be capital and will become opening capital. 3,76,000. Let us solve other things. We have solved this. Cash book. In cash, there is no other entry. There is only a balance of 1,000, which I can decide it is from bank, right? So it is by bank. So cash account is credited, bank account should be debited to cash 1,000. Opening bank balance is available, closing bank balance is available, all other figures are available. I think the difference figure is capital introduced. There is only one figure missing, which is capital introduced. And how much it will be? 20,000 plus 11,70,000 plus 122,500 plus 10,000 plus 1,000 minus 7,84,000 minus 1,40,000 minus 20,000 minus 1,92,000 minus 3,50,000 minus 9,500. So what will be capital? It is 1,72,000. Will be additional capital 1,72,000. Bank account is debited, and so Second will be additional capital 1,72,000. So I think even this account is tallied. First, we always tally bills receivable, opening to debtors, and all these figures are given. So balancing figure will be closing balance of BR, which will be 2 lakhs minus 2,500 minus 122,500 minus 40,000 will be 35,000. Will go in closing balance sheet 35,000. We have already written BR, we just need to write down the figures. We have even closed this account. Debtors, closing balance is missing and credit sales is missing. If two figures are missing, we cannot tally it, right? So let us keep that in pending points. Here I think closing balance is 1,27,000. This total is 1,40,000. So difference of 13,000 is depreciation. So to depreciation 13,000 two effects. Are you getting it? This 1,27,000 is not getting two effects. Because of 1,27,000 we could find out depreciation of 13,000. As we got depreciation of 13,000, we are passing dual effect, one debit, another credit of depreciation. That is of 13,000. Profit and loss account. All right. So try to understand. We are having all the figures except two. One is the sales, which is all credit. Another is GP. But GP rate is available. It is 33% on sales. 33% on sales is how much percentage on cost? How to do it? If 100 is sales, let me do this. If 3 is the sales, 1/3, 1 will be profit, and so 2 will be cost. So 1 on 2 is a 50% on cost. So 1/3 on sales is 50% on cost. Sir, where the cost is available? Cost is nothing but opening plus purchase minus closing minus all other goods going out, right? So what is the cost of this particular or COGS is 1,60,000 plus 9,12,000 minus 18,000 minus 1,40,000 is COGS. It is 9,14,000. 9,14,000 is COGS. Not into 1/3. 1/3 is on sales. Half or 50% on cost. Is it all right? So 9,14,000 into 50%. 4,57,000. I have got GP 4,57,000. I will be also getting sales. Just the balancing figure. If 1/3 is 4,57,000, what is total? We can do it in that manner also. 1,60,000 plus 9,12,000 plus 4,57,000 minus 18,000 minus 1,40,000. It is 13,71,000. And I can verify 13,71,000 divided by 3, 1/3 should be 4,47,000. So credit sales also I have got, which is the 13,71,000. Credit sales is 13,71,000. To effect trading account credit side and debtors account debit side, I will be getting closing debtors also. Balancing figure is closing debtors. 3,20,000 plus 8,000 plus 13,71,000 minus 2 lakhs minus 30,000 minus 11,70,000, which is 2,99,000 is closing balance of debtors. 2,99,000. So my debtors is tallied, BR is tallied, cash and bank is tallied, creditors opening balance sheet is tallied, trading account is also tallied, profit and loss account I can tally. Let me find out first expenditure figure. Now it is just total 3,50,000 plus 36,000 minus 14,000 minus 40,000 plus 12,000, which is 3,44,000. I am going to find out my NP. 4,57,000 plus 16,000 plus 14,000 minus 3,44,000 minus 30,000 minus 2,500 minus 18,000 minus 13,000, which is 79,500. Will be added to capital 79,500. I will be getting capital balance 3,76,000 plus 79,500 minus 1,40,000 plus 1,72,000, 4,87,500. This will be 1,27,000 is 192. All others are in outer column. Just tally your balance sheet. 487,500 plus 3 lakhs plus 36,000, 823,500. This will be 1,27,000 plus 1,92,000 plus 4,000 plus 1,40,000 plus 2,99,000 plus 35,000 plus 14,000 plus 3,000 plus 9,500. It is 823,500. Our balance sheet is. This is question number 7.9. Here solving question number C 7.10. First we will be reading full question and we will be deciding which all accounts we will be creating. Following are the incomplete information of Moonlight Traders. The following balances are available. Land and building 5 lakhs, 5 lakhs. I don't think account is required because opening balance and closing balance is same. Plant and machinery 2,20,000, 3,30,000. I would be preparing plant and machinery account. Office equipments also we can prepare an account. Debtors account we always prepare. Here there are creditors for purchases. Debtors and creditors we normally prepare. Creditors for office expenses, as it is a new type of account, we will be preparing account for it. Stock is opening stock, closing stock, no need to prepare. Long-term loan from SBI also we can do it in inner column. Bank account will be always preparing. Provision for taxation, again a new account we are going to prepare. Collection from debtors, payment to creditors, payment of office expense, salary paid, selling expense, cash sales, credit purchase, cash purchase, GP margin, discount allowed, discount received, bad debt. This will be all included in the accounts which we have already prepared. Depreciation to be provided as follows. Now try to concentrate. Here already land and building and plant and machinery. Land and building I don't think depreciation will be applicable. Plant and machinery, no, land and building there is a depreciation of 5%. But this closing balance is before a depreciation and not after depreciation. So where I came to know that depreciation is afterwards in this 3,30,000, see the sentence, depreciation to be provided is as follows. So depreciation is yet to be provided. It is already not provided in 3,30,000 and 5 lakhs. See, also you can see the figures. Land and building opening was 5 lakhs, closing is 5 lakhs. There is no purchase, but depreciation is to be provided. So this 5 lakhs is and 3,30,000 and 85,000 are before depreciation and not after depreciation. Let us go ahead. Office equipment 50% other adjustment. On 1st October, the machine sold. We have already prepared plant and machinery account, so this will be taken into consideration. Loan was partly repaid on 31st March together with the interest of the year. So interest is fully paid and loan was repaid. Prepared trading account, profit and loss account and balance sheet as on 31st March. So we will be solving the question by preparing trading account, profit and loss account and balance sheet for the year end. As opening balances are given, opening balance sheet is not given. We will compulsory have to prepare opening balance sheet to find out opening capital fund and other accounts that we have decided. Let us draw some accounts. Thus, I am drawing bank and cash account, debit side, credit side, receipt, rupees, payment, rupees. This is my cash and bank account. I will be preparing trading account, debit, credit, particulars rupees, particulars rupees. Profit and loss account, particulars rupees, particulars rupees. Debit, credit. I will be also preparing opening balance sheet, liability rupees, assets rupees. I will be also preparing closing balance sheet, liability rupees, assets rupees. In your examination, you can draw with pencil, rub and remember to rub it. Closing balance sheet, asset side is a debit effect, liability side is a credit effect. Opening balance sheet, asset side is a credit effect, liability side is a debit effect. As it is an opening balance sheet, the effects are reverse. Other accounts that are to be prepared is whatever we have decided, we'll be doing it. Which all are the accounts? Plant and machinery, office equipments. First, I'll be drawing bank account. Bank account I have already drawn, but I'll be drawing it over here. Bank account, receipt rupees, payment rupees. So bank account which I have drawn over here, I am just cancelling it out. Bank account I am drawing it over here, and here there are two accounts available, so I am preparing debtors account, creditors account, which are always there, debit, credit, debit, credit, here also debit and credit. Other accounts that I am going to prepare is plant and machinery, office equipment, plant and machinery, office equipment, debtors and creditors I have prepared. Creditors for office expenses and provision for taxation. Creditors but for expenses and provision for tax. See, provision for tax, once we do cash flow statement, it will be a very easy account. But right now I'll be just giving an overview. You can just take it for granted and learn more about provision of taxation once we do AS3, which is cash flow statement. But let us try and solve our full-fledged question. I will be starting with first journal entry. As this is not a tallied account, I will be passing two effects. Once I pass two effects, I'll be putting a small tick mark on it so that I'll get it that okay, this is already done. Opening land and building 5 lakhs rupees. To entry opening land and building will be in opening balance sheet. Land and building 5 lakhs rupees. Opening land and building, I'm already having an account. I've not drawn the account. I'll be doing it in inner column. Land and building 5 lakhs rupees. Opening is over. Okay. Closing balance also given is before depreciation. So closing balance is before depreciation. Before depreciation, it is 5 lakhs. Please understand, if I don't give two effects to this 5 lakhs, it is absolutely all right. Had I prepared the account, I needed to give this two effects, but right now it is all right. Why? Try to concentrate. In our closing balance sheet, already we have written in inner column 5 lakhs rupees inner column, that is a figure before depreciation. Again, two effects are to be given of all the numbers, but we can ignore both the effects of this closing balance of land and building 5 lakhs rupees. Let us go to plant and machinery. This 5 lakhs we have done, this we have decided will not be doing. Plant and machinery 2,20,000 opening balance. Plant and machinery opening balance sheet, asset side, plant and machinery 2,20,000 rupees. Second, we have already prepared plant and machinery account. Opening balance 2,20,000. Closing balance is relevant and good. Try to concentrate. Closing balance is 3,30,000. How I am giving the effect? Please try to concentrate. 3,30,000 closing balance. 3,30,000. Sir, you just now said that this 3,30,000 is before depreciation. So what I'll be doing is I will be taking into consideration after I write it down in closing balance sheet. See where I am writing down in closing balance sheet. Plant and machinery 3,30,000 in inner column. I am saying that I will be still giving effect of depreciation. So in this account, this is plant and machinery except depreciation. So I will not be considering depreciation over here. Instead, I will be considering depreciation in closing balance sheet inner column. So this is a good point in this type of particular questions. 3,30,000 also to effect we have given. Office equipment 1,05,000, same type of effect as we have given in plant and machinery. Office equipment 1,05,000. Office equipment opening 1,05,000. And another effect, opening balance sheet, office equipment 1,05,000. Closing, again I'll be writing down in inner column. Closing office equipment is 85,000. Office equipment 85,000. One effect, I'm writing it in inner column because I'll be still giving effect of depreciation. Office equipment 85,000. Second effect, office equipment closing balance 85,000. Office equipment is also excluding depreciation. Debtors opening balance they don't know, but still I'll be writing down the effect. Opening debtors question mark. I need to fill up the figure. Opening debtors will come in opening balance sheet. Debtors, I don't know the figure. Closing debtors 2,25,000. Two effects I need to give of 2,25,000. Closing balance sheet debtors 2,25,000. And in debtors account, I will be writing down closing balance 2,25,000. So debtors 2,25,000 is over. Creditors for purchasing, that are creditors opening 95,000. Creditors opening balances credit side 95,000. Closing, opening balance sheet, creditors, I'll be writing opening balance sheet. Creditors 95,000 in opening balance sheet. Closing balance, I'll be just writing it down as it is question mark. I'll not be writing down the figure. Creditors, we don't know. Creditors account, closing balance, we don't know. This is question mark for us. Creditors for office expense, opening is 20,000. Creditors for opening expense, to effect. Creditors for expenses opening, what is the figure is 20,000. Creditors for expenses will second effect. So this is credit. Second effect will go opening balance sheet, liability side. Creditors for expenses. What was the figure? 20,000. So opening balance sheet liability side is a debit effect. This was credit effect. Debit, credit will tell you. Closing balance for creditors for expenses is 15,000. Closing 15,000. Second effect, closing balance sheet. Creditors for expenses 15,000 will go in closing balance sheet. 15,000 also to effect we have given. Opening stock is question mark. I will be passing to effect. Opening stock is a stock for opening balance sheet. Question mark, we don't know. Another effect, opening stock will come in trading account. As it was question mark, I have written in inner column, but as figure is not known, I am not writing down any other thing. Closing stock 65,000, famous to effect. Trading account credit side, closing stock figure is 65,000. Balance sheet asset side, closing stock 65,000. This is debit effect. This is credit effect. We can go ahead. 65,000 we can tick mark. Long-term loan from SBI at the rate of 12%. As we have not prepared any accounts, I will be writing down in inner column. I will be using this 1 lakh rupees judicially, but try to concentrate over here. Long-term loan from SBI at the rate of 12%. 1,25,000 first time passing to effect. Loan is always a liability. So opening balance sheet, loan from SBI at the rate of 12% and figure is 1,25,000. See my second effect. It will be closing balance sheet inner column. Loan from SBI will be 1,20,000. So two effects of 1,25,000. We can go ahead. Closing balance is 1 lakh. So we can pass two effect for 1 lakh, but please understand, if I don't pass debit effect of 1 lakh, it is absolutely all right if I don't pass credit effect of 1 lakh. My balance sheet will still tell you. See, if the opening balance is 1,25,000, closing balance is 1 lakh, what does it mean? You have repaid the loan of 25,000 rupees, and for that 25,000 rupees I'll be giving two effect. Try to concentrate. Minus repaid as on the last day of the year. This is what is given. How much? 25,000. So my outer column will automatically become 1 lakh. I'll not be writing it right now, otherwise I will be having that curiosity to give another effect of 1 lakh. It is just an outer column. But how that 1 lakh rupees was helpful? 25,000 we have repaid the loan, we came to know. It was repaid on the last day of the year, so we will be taking interest into consideration. First, let me pass second entry for this 25,000. 25,000 loan was repaid in current year, so it will be coming in our bank account by loan 25,000. Credit effect, balance sheet liability side, closing balance sheet liability side minus is debit effect, credit effect of 25,000 is also tallied. And I have decided I'll not be giving anything of this 1 lakh rupees. I have just taken one more point, that is 25,000 rupees from that. The rate of interest was 12%. The repayment of loan was made as on the last day of the year. So interest should be calculated at the rate of 12%. So 1,25,000 into 12%, 1,25,000 into 12%, that is 15,000 should be interest, which they say was received. It is already received. Sorry, it will be already paid. We have taken the loan, not given the loan. So it will be paid. It is paid along with this 25,000. Interest paid on loan of rupees 15,000. Now 15,000, once again 1,25,000 into, what is the percentage of loan? 1,25,000 into 12%. 1,25,000 into 12% is 15,000. So 15,000 rupees interest on loan is repaid. Interest on loan is my expenditure. So P&L account debit side to interest on loan 25,000. And as cash is going out, I'll be writing down in bank account credit side by interest on loan. How much? 15,000. So two effects: interest on loan 15,000, interest on loan 15,000, debit and credit. We can go ahead. So this has given us 2 or 3 points. One is 25,000 is loan repaid. Second is interest on that particular thing. Bank opening balance is 25,000. I'll be giving two effect of 25,000. Opening balance sheet, bank account 25,000, bank account opening balance 25,000. Closing balance of bank, we don't know. We'll be just writing it down. Bank balance, we don't know the figure. Bank account closing balance, we don't know the figure. Provision for taxation, opening balance is 35,000. Rate is 30%. So provision for taxation, opening balance 35,000. Provision for taxation is a liability account. Opening balance 35,000. As it is liability, it will go in opening balance sheet liability side. Provision for tax 35,000. Debit effect, credit effect. I can go ahead. Provision for taxation, opening balance. Provision for taxation, closing balance is 30,000. Closing balance to effect 30,000. Closing 30,000. It will go in closing balance sheet. Provision 30,000. So I have cleared that first table. I have given two effect for each and every transaction. I can go ahead. Collection from debtors 9,25,000. Again, it is not a tallied sheet, so I'll have to pass two effect. Collection from debtors is 9,25,000. So bank account will be debited to debtors 9,25,000. Debtors account will be credited by bank 9,25,000. Payment to creditors 5,25,000. Payment to creditors by creditors 5,25,000. Creditors account debit to bank 5,25,000. So credit effect, debit effect, I can go ahead. Payment for office expenses 42,000. Payment for office expenses, cash will go out by office expenses of 42,000. Sir, P&L debit, second effect. No, we have already prepared creditors for expenses. So I'll have to debit it over here to expenses, that is bank. And the figure is 42,000. Debit effect, credit effect, I can go ahead. Salary paid, 32,000. By salary 32,000, P&L account debit 32,000 to salary 32,000. Selling expense 15,000, similar type of effect. Selling expense, what was the figure? 15,000. Bank account credit side by selling expense 15,000. So 15,000 also we have given two effect. Cash sales 2,50,000. I'll be giving two effect for cash sales 2,50,000. Bank account debit to cash sales 2,50,000. Cash sales goes in trading account by sales, cash and credit. Cash sales is 2,50,000. So debit effect, credit effect over here. Debit effect over here of 2,50,000, we can go ahead. Credit sales is 80% of total sales. Now try to concentrate what is cash sales 2,50,000. So I'll have to have some space for working note. Yes, I'm having. Can I say cash sales plus credit sales is equal to total sales? Now cash sales is given is 2,50,000. So it is given over here 2,50,000. Cash sales plus credit sales is equal to total sales. They say cash credit sales is 80% of total sales. So I can do this. If total sales is 100, credit sales is 80 and cash sales is 20. Now it is extremely easy. You just need to do cross multiplication. You will be getting the answer of credit sales also. How to do it? 2,50,000 into 80 divided by 20. It is 16,66,667. 16,66,667 will be what? Credit sales. I will be passing two effects for credit sales. 16,66,667 is my credit sales. 16,66,667 is my credit sales. Credit sales will go in debtors account debit side. Debtors account debit side. Credit sales 16,66,667. Start. This is a point for credit sales. Next is credit purchase 5,40,000. Credit purchase the two effect of 5,40,000. Credit purchase the two effect of 5,40,000. Credit purchases creditors account credit side. It is a 5,40,000 and credit purchase will come in trading account debit side 5,40,000. Purchase credit 5,40,000. Cash purchases was 40% of total purchase. So I will be doing again the same thing. Cash plus credit is equal to total. Credit was 5,40,000. They say cash is 40% of total purchase. So if total purchase was 100, cash was 40%, this was 60%. You can just do cross multiplication. Doing cross multiplication, 5,40,000 into 40 divided by 60 will be 3,60,000. 3,60,000 is cash purchase. Cash purchase, two effect of 3,60,000. Cash purchase bank account will be debited to purchase. What was the figure? 3,60,000. And cash purchase, a trading account debit side, 3,60,000. I can go ahead. I have done cash purchase as well as credit purchase. Two effect I have given. GP margin is as cost plus 25%. I am just writing down GP. Trading account, GP is cost plus 25%. GP will be P&L account credit. I'm just writing it in inner column. I'll be calculating later on. Cost plus 25% rate. Yes. Discount allowed 5,500. I'll be giving two effect. Discount allowed debtors account credit side by discount 5,500. Discount allowed is expenditure. P&L account debit side to discount 5,500. Discount received 4,500 is our income. So P&L account credit side by discount 4,500. In creditors account it will be debit side because it will reduce our creditors 4,500. Creditors account debit side to discount 4,500. Bad debt was 2% of closing debtors. Now what is closing debtors is 2,25,000. So 2% of 2,25,000 will become our bad debt. Bad debt then closing debtors will decrease. It is 2 lakh. So see, the answer will differ. First, it is your expenditure, right? So, to bad debt 4,500. It is 2,25,000 into 2% is 4,500. So bad debt expenditure P&L will be debited 4,500. Now, is it this figure is after providing bad debt or before providing bad debt? It is before providing bad debt, right? So 2,25,000 minus 4,500 should be your closing debtors. So where I am giving second effect, try to concentrate. It will be debtors account 2,25,000 minus 4,500. 2,25,000 minus 4,500. This is where I am giving second effect, debit effect. All right. Sir, had I given it in debtors account credit side, then also I feel it is not absolutely incorrect. Debtors can be that last figure 2,25,000 can be treated after providing bad debt. This is also a good entry, 4,500. Now this is closing balance sheet debit side minus, so it is a credit effect. P&L debit side I have given debit effect. I can go ahead. 4,500, a good point. You can reduce it from debtors in your closing balance sheet, writing down in inner column, or you can write it down to debtors account credit side. Next is bad debt 2% of closing debtors. All right. Depreciation to be provided, land and building 5%. Land and building, there is no other points. I can easily do it. Land and building 5%. Minus 5%. It is 25,000. P&L account debit side, depreciation on land and building 25,000. Depreciation on plant and machinery is 10%. Now plant and machinery is having n numbers of things. I will be keeping it pending 10%. Office equipment 15%. I'll be doing it last. So I'm having two things pending. Let me write it down in red. Plant and machinery and office. Other adjustment. On 1st October, they sold. So loan was repaid. We have already done. So I think only this one adjustment is pending. On 1st October, they sold the machine having book value of 40,000 as at the year beginning. So we are talking about now plant and machinery. It was sold on 1st October. That is half a year. Let me open a working note. All right. What was book value in opening? 40,000. But it was sold on 110. So we need to provide a depreciation as of 110. What is the depreciation rate for plant and machinery is 10%? Yes, it is 10%. So plant and machinery 10%, but only for 6 months. So depreciation for the 6 months will be 2,000 rupees. So what will be book value as on the date of sale? 38,000. Book value as on the date of 38,000. All right. Now this machine is sold. And it is sold at what? What is given? It is sold at. Let us see what is given in the book. At a loss of 15,000. So it is at a loss of 15,000. So 38,000 minus 15,000 is 23,000. Sold. See, for your understanding, I'm writing down the journal entry and I will be passing to effects. Try to concentrate. Bank account will be debited by 23,000 rupees. Bank is the real account. Debit whatever comes in. Loss account will be debited. This will be going into P&L account because the loss is 15,000. Depreciation will be debited. How much? 2,000. 2. Machinery, in this case plant and machinery, 40,000. Right. Depreciation is also in P&L account. I will be posting to this entry into my relevant account. Bank account debit 23,000. To sale of machinery 23,000. Loss account, that is P&L account debit 15,000. To loss on sale of machinery 15,000. Depreciation on that machinery is 10,000. Depreciation on machinery 2,000. And to machinery 40,000. That is machinery account credit side. Buy sale 40,000. I have posted this journal entry. I have given debit effect of 40,000. See, debit effect of 40,000 23. 15 and 2. 23, 15 and 2 is 40. Credit effect of 40 is over here. Debit effect of 40, credit effect of 40, we can go ahead. New machine was purchased on 1st January. Now let us see first how much new machine was purchased from our account. This is 2,20,000, 40,000, 3,30,000. Balancing figure is new machine purchased. And it was purchased on 1st of Jan. So balancing figure depreciation is not included in this all figures. So on new machine will be purchased. It is 3,70,000 minus 2,20,000. So 1,50,000 new machine was purchased. Plant and machinery account debit to bank. By purchase of machinery was 1,50,000. All right. So new machinery was purchased of 1,50,000. In account, I'll be writing down the date, 1st January. That will be helpful to me for finding out depreciation. This is what is given. Office equipment, something should be sold because this is without depreciation. Balancing figure, you cannot take it depreciation. Let us see what is what they have given. Office equipment was sold at the beginning at its book value, 1st April. So whatever was the book value, it was sold at that value, and that too at the beginning of the year. This date also I'll be writing down. So what is office equipment sold? 1,05,000, 85,000. That is 20,000. It was also sold at 20,000. There is no profit or loss. So bank account will be debited by 20,000. To effect office equipment credit, bank account debit, I can go ahead. Yes, I need to write down the dates of sale of office equipment. It is 1. So it is in the beginning of the year. Let's see my question. Everything is sold except this. Plant and machinery at 10% and office equipment at 15%. So plant and machinery 10% depreciation I am providing. Please try to concentrate. Plant and machinery. This is my account. 2,20,000, out of which 40,000 machinery that we have sold is already provided. So we don't need to consider that 40,000. So 2,20,000 minus 40 is 1,80,000. I need to provide full year's depreciation 10%. New machine was purchased at the rate of rupees 1,50,000. Into 10% into how many months it was used? January, February and March into 3 divided by 12. So this answer will be 18,000 plus this answer will be 1,50,000 into 10% into 3 divided by 12. It is 3,750. It is a 21,750. Will be depreciation. I don't need to write down depreciation over here because we know this account is except depreciation. 21,750 will be depreciation for plant and machinery to effect. 21,750. P&L account debit side. 21,750. P&L account debit side. To depreciation on plant and machinery 21,750. It will be reduced from balance sheet. Depreciation 21,750. Office equipment at 15%. Please try to concentrate. Office equipment out of 1,05,000, 20,000 was sold at the beginning of the year. So depreciation should be provided only on 85,000. So 85,000 into 15% will be my depreciation. 85,000 into 15%, that is 12,750 will be office equipment depreciation minus depreciation 12,750 P&L account debit side to depreciation on office equipment 12,750. This is the end of theoretical portion of my question. Now I just need to total out and try to concentrate. What is pending is opening stock. I cannot solve it. Sales is given. Closing stock is given. GP on cost is given. I can convert it into GP on sales. And first let me find out total sales. The total sales will be 2,50,000 plus 16,66,667. That is 19,16,667. 19,16,667. Right. So trading account GP is at 25% on sales. Just 20%. Sorry, 25% on cost is 20% on sales. If it 125 is 25%, then 125 is 20%. $100 plus 25 is 125. So if 125 is 100, what will be 25? So it will be 25 divided by 125. It is 20%. Yes, it's 20% on sales. So 20% on this. 19,16,667 into 20%. It is 3,83,333. 3,83,333. So given the closing stock, sales, GP, cash and credit purchase, which is 9 lakhs. I will be getting answer of opening stock, right? So just tally it out and find out answer of opening stock. So 19,16,667 plus 65,000 minus 3,83,333 minus 9 lakhs. It is 6,98,334. All answer I am getting in points. Let me verify whether this answer is correct or not, right? Because this is giving me 667. So it is this equation. It is 2,50,000 into 80 divided by 20. No, it is not correct. This is 10 lakhs. It is not 16 lakhs. It is 10 lakhs rupees. So I'll be rectifying it fast. Debtors is not 16,66,667. It is the 10 lakhs. Credit sales in trading account also. This is 10 lakhs rupees. So this figure will change. This will become 12,50,000. This figure will change. 12,50,000 into 20%. 2,50,000. So my opening stock will change, right? Opening stock will be 12,50,000 plus 65,000 minus 2,50,000 minus 9 lakhs. It is 1,65,000 will be my opening stock. Opening stock 1,65,000. I need to give second effect. Try to understand. This is the figure which I have written. This is just outer column. This is just outer column. 2,50,000 also second effect will be over here. 1,65,000 opening stock, opening balance sheet. 1,65,000 opening balance sheet stock is 1,65,000. So trading account is tallied. I have got some figures missing in opening balance sheet. Opening data still is pending. Other accounts, yes, in debtors account only opening is missing. I will be getting opening debtors. What will be opening debtors is 9,25,000 plus 5,500 plus 2,25,000 minus 10 lakhs, which is, it is minus 10 lakhs. So it is 1,55,500. Let me do it once again. 9,25,000 plus 5,500 plus 2,25,000 minus 10 lakhs. It is 1,55,500. Will go in opening debtors. 1,55,500. Creditors. I think only closing is missing. Opening, credit, purchase, bank and discount is there. Closing is missing. I can find out closing creditors. 5,40,000 plus 95,000 minus 4,500 minus 5,25,000. It is 1,05,500. Creditors will go in closing balance sheet, liability side, 1,05,500. So creditors is closed, the debtors is closed. Bank account, any other accounts? Plant and machinery. This is closed. This is closed. Creditors for expenses. Opening plus purchase minus closing will be incurred, will be debited to profit and loss account. So the difference is this is 57,000 minus 20,000 is 37,000. Expenses incurred in current year is 37,000. P&L account debit to expenses 37,000. See, we have forgotten provision for taxation should be first account to be tallied. So this all accounts should be first accounts to be tallied. It should not be done last. But for provision for taxation, try to understand what it is. Income tax for the year 2021 is always paid in 21-22. 21-22 income tax is always paid in 22-23. So current year's income tax is always paid in next year. But as on the 31st March, you will have to decide what is your what is your approximate tax, which will not pay, you will pay in next year. So you will just create a provision. This is provision which was created in last year, which will be paid in current year. If nothing is given, we can assume in provision for taxation, opening is paid to bank 35,000. So it was income tax of last year, which will be paid in current year. So we are assuming nothing is given, so it is paid in current year. 35,000 to effect bank account credit side. 35,000 by tax paid. 35,000. Now, at current year end, we know we need to pay tax in next year. Any other future expenditure we should always provide for as per conservatism concept. So, I will be providing 30,000 rupees. If nothing is given, closing is provided, opening is paid. This we will be certainly learning in cash flow statement. 100% full-fledged will be learning in cash flow statement. So I'm not going into deep at this point of time. But this 30,000 second effect will be P&L account debit side. To provision for a tax 30,000. Debit effect, credit effect, and a provision for taxation is also tallied. So now we need to go ahead. There is no other account. Debtors is tallied, creditors, bank account is yet to be tallied. Opening balance sheet, closing balance sheet, trading and profit and loss account. We can close a bank account where only closing balance is missing. Let us find out bank account closing balance. 25,000 plus 9,25,000 plus 2,50,000 plus 3,60,000 plus 23,000 plus 20,000 minus 25,000 minus 15,000 minus 5,25,000 minus 42,000 minus 32,000 minus 15,000 minus 1,50,000 minus 35,000. Closing balance of cash is 7,64,000. Is huge. Yes, this we have made a mistake. 3,60,000. This will be by purchase. 3,60,000. 3,60,000. Where was the other effect? In creditors. Sorry, in trading account. 3,60,000 was debit. So in bank account it will be credited. So this is an incorrect effect. We need to refind out this. It is 25,000 plus 9,25,000 plus 2,50,000 plus 23,000 plus 20,000 minus 3,60,000 minus 25,000 minus 15,000 minus 5,25,000 minus 42,000 minus 32,000 minus 15,000 minus 1,50,000 minus 35,000. Closing is 44,000, right? So 44,000 closing bank balance sheet. 44,000. So I have tallied my bank account. Debtors, creditors is tallied, plant machinery, creditors provision. For tax is tallied. Trading account is tallied. I can tally my profit and loss account. First I'll tally opening balance sheet. Opening balance sheet, I will be getting opening capital 5 lakh rupees plus 2,20,000 rupees plus 1,05,000 rupees plus 1,55,500 rupees plus 1,65,000 rupees plus 25,000 rupees minus 95,000 rupees minus 20,000 rupees minus 1,25,000 rupees minus 35,000 rupees. It is 8,95,500. 8,95,500 will be capital. So it will become opening capital over here 8,95,500. I have tallied opening balance sheet, trading account. I need to tally profit and loss account. I will be getting profit and loss. You can just total it out, tally it. I will be getting P&L of 39,000. I have directly taken it from book. It is 39,000. We have not made any further mistake. Profit and loss account will be transferred to capital account plus 39,000 is capital. Just take the figure out. 1,25,000 minus 25,000 is 1 lakh. 3,30,000. Take this figure out, this figure out, this figure out, this figure out. Your balance sheet should tally. This was question number C7.10. Let us solve question number C7.11. First, by highlighting, we'll be deciding which all accounts and sheets we'll be preparing. The following information relates to the business of ABC Enterprise, who request you to prepare trading and profit and loss account. So we'll be preparing trading and profit and loss account, and the year end date as on the year ended 31st March, and balance sheet as on that date. So we'll be preparing trading, profit and loss, and balance sheet. Furniture opening is 60, closing is 63,500. There might be some purchase of furniture. We can solve it in inner column. These are opening stock, closing stock. Debtors and creditors account we always prepare. Prepaid expenses and unpaid expenses, we can solve it by preparing a account, or what we can do is we can do it in inner column. Some of the questions I'll be doing it by account. Some of the questions I'll be doing it by preparing inner column. It is up to you in your examination to decide what you'll be doing. Whatever you feel is a comfortable thing, you can do it. Cash and bank account. So it is a merge figure given. Normally what I'll be planning is I'll be preparing a merge account, cash and bank account. Cash transaction during the year. Collection from debtors, that is all right. Collection of bills of exchange after the discount. So I can prepare bills receivable also. Creditors, full settlement, payment of freight, amount withdrawn, payment for office furniture, investment carrying annual interest of. So there is investment account, no need to prepare it. We can solve it through inner column. Expenses including salaries paid rupees 95,000, miscellaneous receipt. Bills of exchange drawn on accepted, we have already decided we'll be preparing bills receivable account. Goods costing rupees advertisement, this can be solved. Difference in cash book should be treated as so and so. Provide 2% for the doubtful debts on closing debtors. So what we'll be doing, we will be telling our debtors account. At last, we will be providing 2% in inner column of closing balance sheet. So first, let us prepare our basic account, that is trading account, profit and loss account, and balance sheet as on the year end. Trading account I have already done. Particulars, profit and loss account, closing balance sheet. Debtors account, creditors account, and cash book are also prepared. Which all is required? Bills receivable account, that we have decided that we will be preparing. Debtors, creditors, cash and bank. Cash and bank is already prepared over here. Cash book, this will be cash and bank column both. Debtors, creditors I have already prepared. Bills receivable. With this many accounts, we can easily solve the question. So the question will become somewhat easy. Furniture, 60,000 opening balance. Is it from tallied sheet or tallied account? No. I will be passing dual effect, one debit, another credit. See the effect. What are debit effect and credit effect? Opening furniture, opening balance sheet. Okay, opening balance sheet also I have not done. I need to prepare opening balance sheet also. Yes, I need to prepare opening balance sheet. So furniture account, opening balance is 60,000. Opening balance sheet, asset side. Opening balance sheet, asset side is the credit effect, right? It will be opposite effect because it is an opening balance sheet. Furniture is 60,000. Closing balance sheet, inner column. Furniture will be 60,000. See, any figure closing furniture 63,500, there is no necessity to pass to entry. If it is from a tallied sheet or tallied account, I will have to compulsorily pass one entry. This figure I will be using afterwards to know the depreciation, to know the additional furniture, but I'll be using last to find out some figure and then give to effect for the same. So I've just done a round on it that this particular thing is pending. Opening stock is 80,000 rupees. To effect, trading account debit side. Opening stock 80,000 rupees. Opening balance sheet asset side. Stock 80,000 rupees. This is credit effect. In trading account it was debit effect. We can go ahead. Closing stock 70,000. To effect, we know it. Trading account credit side. Closing stock. It is 70,000. Closing balance sheet asset side. Stock. It is 70,000. Opening debtors is 1,60,000. Opening debtors account opening balance 1,60,000, opening balance sheet, debtors 1,60,000. Now this is a printing error. This should be question mark. It is not printing error by us. It was printing error in institute question. Dash means there is no closing debtors. Question mark means the figure is to be found out. Actually, it is question mark. We need to find out the figure. So closing debtors, I'll be just writing there is a closing debtors, and in closing balance sheet also there will be debtors figure. Figure I don't know. We'll be finding it out. So we have done this. Opening creditors 1,10,000, normal effect. Opening creditors will come in creditors account. The figure is 1,10,000. It will come in opening balance sheet. Creditors 1,10,000. Creditors closing balance. Closing balance of creditors will come over here. The figure is 1,50,000. Closing balance sheet creditors will be 1,50,000. Expenses. I am having profit and loss account. I know there are prepaid expenses, outstanding expenses, opening balance, closing balance. So I will do a format in P&L account first. This is my profit and loss account. I start with expenses. Whatever are the expenses, I'll be writing it in inner column. Plus, we know we do outstanding of current year. If outstanding of current year is added, outstanding of previous year will be deducted. If outstanding is added, prepaid of current year is always subtracted. And if prepaid of current year is subtracted, then prepaid of previous year is added. Logically, outer column figure is nothing but expenses incurred during the year. Let us see the figures. Prepaid expenses opening balance 6,000. Prepaid of previous year 6,000 should be added, which is this effect, debit effect. See another credit effect. Prepaid is asset. It is opening. So prepaid expenses is 6,000. Now, opening balance sheet asset side is a credit effect. P&L account debit side is a debit effect. I can go ahead. I have passed two effect of the 6,000 rupees. Closing prepaid expenses is 7,000. Prepaid current year is 7,000. As it is current years, it will go in closing balance sheet. Prepaid will remain my asset. Prepaid expenses 7,000. Let me see the effect. Balance sheet, asset side, closing balance sheet is a debit effect. Here on debit side, it is subtracted, so it is credit effect. Outstanding expenses of previous year 20,000. Outstanding of previous year is subtracted 20,000. Outstanding expenses liability as it is of previous year opening balance sheet. Outstanding expenses 20,000. Two effects, I can go ahead. Outstanding of current year is 18,000. Outstanding 18,000. Outstanding is my liability. Outstanding expenses 18,000. Normal journal entry of outstanding expenses, P&L account, it is added on debit side, and it is outstanding liability closing balance sheet. So even this is done. Opening cash in bank 12,000. Cash and bank account, opening balance 12,000. Opening balance sheet, cash account will be 12,000. Closing balance 26,250. Cash account 26,250, and in cash account closing balance is 26,250. Again, to effect, we can go ahead. So this part is over. We'll be going to additional cash transaction. Collection from debtors after allowing discount of 15,000 is 15,000. Let us first pass entry for discount of 15,000. Discount of 15,000, discount given to debtors is our expenditure. P&L account debit side 15,000 to discount to debtors 15,000. Debtors account will be credited by discount 15,000. Received from debtors as 15,000 we have given two effect. 5,85,000 again we need to give two effect. Received from debtors 5,85,000. Cash and bank account debit to debtors 5,85,000. Debtors account credit by bank 5,85,000. I have completed this first. Second, collection on discounting of bills of exchange after deduction of discount of 1,250 by the bank, total to 61,250. Collection of discounting of bills exchange. So you have discounted the bills exchange. It will be bank account debit, discount account debit, two bills receivable. So bank account debit will be 61,250. Bank account debit 61,250. Discount account debit will be P&L account debit side, discount on BR. It is 1,250. Total of this 61,250 plus 1,250 is total bills receivable, which is 62,500. 62,500 BR will be credited by bills discounted. Debit effect 62,500 in nature of 61,250 and 1,250, and credit effect in BR account. This is that. Creditors of rupees 4 lakhs were paid only 3,92,000. So again there is a discount of 8,000. Can I write down? There is a discount of 8,000 which is given to creditors, because creditors of 4 lakhs were paid only 3,92,000 in full settlement. So first let me pass off discount. Discount received from creditors is our income by discount 8,000. Creditors account will be debited to discount 8,000. 8,000 to effect. 3,92,000 to effect. Payment made to creditors 3,92,000 by bank. 3,92,000. Sorry, by creditors 3,92,000, and creditors account debit side to bank 3,92,000. To effect of 3,92,000 we can go ahead. Payment of freight inward. Freight inward is a trading account expense 30,000. Bank account credit side 30,000. Amount withdrawn for personal use 70,000. So bank account will be credited by drawings 70,000. Closing balance sheet minus drawings 70,000 reduced from capital. Always when you get confused whether you are doing it correct or not, always verify the effect. Balance sheet liability side is a credit effect, deducted, so it is debit effect. Here it is credit effect. I have passed one debit, one credit. I can go ahead. Payment for office furniture 10,000. buy office furniture 10,000. It will increase my asset closing balance sheet plus purchase 10,000. Investment carrying an annual interest of 6% were purchased at 95, 200 units of shares at face value of rupees 100 on 1st October, and the payment was made thereof. Alright. So investment, I'll be doing some calculation. How many shares I have purchased? 200. What is the face value? 100. So it will be 20,000 rupees investment, 200 units at the rate of rupees 100. So it is 20,000 rupees investment, but you have not purchased it at 200, you have purchased it at 95. So purchase the price is 200 into 95. 200 into 95, 19,000. Purchase of investment 19,000. I am passing two effects. Purchase of investment. By investment, cash will go out of 19,000 rupees. Investment will be my asset, 19,000 rupees. Yes, in inner column you can write down face value of this investment is 20,000 rupees. But I have got it at 19,000 rupees. Accountancy works with cost concept. Our cost is 19,000. So in outer column we'll be writing 19,000. Now, it carries a 6% interest. Try to concentrate. It carries a 6% interest. Now, interest is always paid on face value. Into 6%, this will be per annum interest. But you have purchased it on 1st October, right? So you will be getting only 6 months interest. What is 6 months interest of it? Into 6 divided by 12. This will be 600 rupees. So 600 rupees interest will be received on investment. Now you can tell it is received or you can tell it is outstanding. Is it given anywhere in the point that it is received? No. You can assume it is received. You can assume it is outstanding. Both assumptions are absolutely correct, will give you full marks. I am assuming it is outstanding. So investment. So two effects of outstanding interest, very simple. Interest is our income. By interest 600 rupees. Outstanding interest receivable is my asset. So asset account, outstanding interest receivable is a 600 rupees, will be in closing balance sheet. Debit effect, credit effect, we can go ahead. We have done about interest also and we have done about investment also. Expenses including salaries paid 95,000. So expenses paid is 95,000. We have already done. This is expenses paid 95,000. Bank account credit side by expenses 95,000. Miscellaneous receipt 5,000. P&L account credit side by miscellaneous receipt 5,000. Second effect will be bank account debit side to miscellaneous receipt 5,000. We are going to this point. Again, these are not a tally sheet or account, will be passing dual effect. Bills of exchange drawn on and accepted by customer during the year amounted to rupees 1 lakh. So bills of exchange drawn. What is the journal entry? BR account debit to debtors 1 lakh. BR account debit to debtors 1 lakh. And debtors account credit by BR is 1 lakh. Of this, bills exchange of 20,000 were endorsed in favor of creditors. Bills endorsed to creditors. Creditors account debit to debtors 20,000. Creditors account debit to dators 20,000. Dators account credit by creditors 20,000. Your debtors will also decrease, your creditors will also decrease. Favor of and endorsed bills of exchange of 4,000 was dishonored. Endorsed bill dishonored. Debtors will again become your debtor, creditor will again become your creditor. Debtors account debit to creditors is 4,000. Debtors account debit to creditors is 4,000. Creditors account credit by debtors is 4,000. I have done this. C point. Goods costing rupees 9,000 were used as advertising material. Trading account credit side because stock is reducing, and P&L account debit side because it is your advertising expenditure. 9,000. Trading account credit side, buy goods for advertisement 9,000. P&L account debit side, to advertisement expense 9,000. Debit effect in P&L account, credit effect in trading account. Goods are invariably sold at 20% on sales. So GP is a 20% on sales. Second effect of GP, it is P&L account credit side, GP will be written. Difference in cash book if any treated as drawings or capital. This will be doing when we tally cash account. Provide 2% discount for doubtful debt on closing debtors. See what I am doing. Debtors will be writing down inner column minus 2% provision. And this 2% provision of debtors I will be writing even in P&L account provision for debtors. So whenever I'll be getting this figure, I'll be writing it over here. Once I get closing debtors, I can get that figure. All right. This point we kept it pending. Closing furniture is the 63,500. Let us go to furniture. Closing furniture is 63,500. What does it mean? 6,500 is a depreciation. Then only closing figure will be 63,500. I will not be giving two effect of 63,500. I'll be giving two effect of depreciation, which is 6,500. P&L account debit side to P&L account debit side. To depreciation 6,000. All right. So even this is solved. I have taken into consideration each and every point except the 2% provision for debtors. Will be finding it out. I don't think we require question. Now we'll be just concentrating on telling our accounts. Never tally first GP account. It is not advisable. Let us try out debtors account. Debtors account. No, credit sales is not there, right? Yes. Credit sales is not there. We cannot solve debtors account because here credit sales and closing balance both are missing. Creditors account, opening balance, debtors, again here credit purchase is missing. No, I can get credit purchase, right? Opening balance, debtors, closing balance, discount bank debtors, I can get credit purchase. Balancing figure will be credit purchase. What will be credit purchase is 8,000 plus 3,92,000 plus 20,000 plus 1,50,000 minus 1,10,000 minus 4,000. It is 4,56,000. Will be credit purchase. A second effect trading account debit side 4,56,000. Purchase 4,56,000. Debtors I cannot tally. I have tallied my creditor account. Cash book they have told me whatever is the difference figure, I can transfer it to capital or drawing. So it will be easy to tally my cash book. Let me go to bill BR. All right, BR received is 1 lakh, discounted is 62,500. I can get closing balance, which is the balancing figure. It is 37,500. Second effect will go in closing balance sheet asset side, 37,500. Opening balance sheet. Now I don't think except debtors and trading account or cash book, I know how I will be telling. I can tally my opening balance sheet. Opening debtors is already there, cash is already there. Opening balance sheet, I'll be getting capital, which will be 60, 80, 1 lakh, there's 3 lakh, 3 lakh, 18,000. 3 lakh 18,000 minus 3 lakh 10,000. It is 8,000. No, it is 1 lakh 88. It is 160, 140 is the 318 minus 130. One lakh 88,000 opening capital to effect, 1 lakh 88,000 closing balance sheet. Capital opening will be 1 lakh 88,000. So what I have tallied is creditors account, cash book is pending, BR I have tallied, opening balance sheet I have tallied. Let me even tally the cash book, because they are saying us that difference of figure is capital or drawings, and from debtors only closing balance will be getting once we get credit sales. So credit sales will not even affect our cash book. I can tally my cash book with a difference of 12,000 rupees plus 5,85,000 rupees plus 61,250 plus 5,000 minus 3,92,000 minus 30,000 minus 70,000 minus 10,000 minus 19,000 minus 95,000 minus 26,250, which is 21,000, and it is higher on this side, so it is over here 21,000. It is by drawings, additional drawings, which is 21,000. Second effect will be drawings will be reduced from capital minus additional drawings, 21,000. So even my cash and bank account is solved. Now I don't have credit sales as well as closing debtors. What I'll be doing is for credit sales, I'll be going to trading account. Now in trading account, the two figures are missing. One is sales, credit sales. I'm assuming there is no cash sales, and GP. But say GP rate is given 20% on sales. 20% on sales is how much percentage on cost? How to find out? If 100 is the sales, 20 will be profit. Profit will be 20, so cost will be 80. So what is percentage on cost? It is 20 divided by 80 multiplied by 100, which is 25% on cost. So GP is 25% on 20% on sales and 25% on cost. We can easily find out cost. How? Opening plus everything written on debit side minus everything written on credit side except sales. That is COGS. 25% on COGS. What is my COGS? 80,000 plus 30,000 plus 4,56,000 minus 9,000 minus 70,000, which is 4,87,000 into 25%, which is 121,750. 121,750 will be your GP. Second effect of GP will be in P&L account credit side, 121,750. So trading account is having GP but now not having credit sales. We can find out balancing figure as credit sales. What will be balancing figure? 80,000 plus 30,000 plus 4,56,000 plus 121,750 minus 9,000 minus 70,000 will be 6,08,750. 6,08,750 will be credit sales. Second effect, debtors account debit side, 6,08,750. 6,08,750. I will be getting closing debtors. How to find out closing debtors? 1,60,000 plus 4,000 plus 6,08,750 minus 15,000 minus 5,85,000 minus 1 lakh minus 20,000, which is 52,750. 52,750. 52,750 will go in balance sheet, inner column. 52,750. I need to provide 2% provisions. On 52,750, I'll be providing 2%. 52,750 into 2%, which is 1055. 1055 will be my provision for debtors. Second effect, P&L account debit side, 1055. 2% provision is already done. All right. My trading account is tallied. Profit and loss account is pending. I'll be getting NP. I'll be transferring it to capital. Closing balance sheet, except that all accounts should be already tallied. All right. So I can go towards in that process. 95,000 is expenses paid plus 18,000 minus 20,000 minus 7,000 plus 6,000 will be 92,000. 92,000 is nothing but expenses incurred. As it is P&L account, expenses incurred is more important than expenses paid. Let us find out our NP. 121,750 plus 8,000 plus 600 plus 5,000 minus 92,000 minus 15,000 minus 1250 minus 9,000 minus 1055 minus 6,500. It is 10,545. 10,545 will be my NP, will be added to capital. 10,545. I will be getting capital account as 1,88,000 minus 70,000 minus 21,000 plus 10545. It is 1,07,545. Let me first find out outer column. This will be 62,500. 52750 minus 1055 is 51695. Everything else is in inner column. I just need to total it out. 1,07,545 plus 1,50,000 plus 18,000 is 275,545. It is 275,545. This will be 62,500 plus 70,000 plus 19,000 plus 51,695 plus 7,000 plus 600 plus 26,250 plus 37,500. It is 274,545. Where is 1,000 gone? Yes, here. There's a 63,500, right? It is not 62,000. There's not 7,000. There's a 63,500. So 1,000 will increase to 75545. Balance sheet is tallied. This was question number C7.11. Let us solve question number 7.12. Avinash runs a business of ready-made garments. He closes books of accounts on 31st March. The balance sheet as on 1st April. So opening balance sheet is given. Is so and so. It is tallied sheet. So we'll be drawing only one effect for each and every transaction. You are furnished with following information. I'll be giving two effects, one debit, another credit. His sales for current year were 20% higher than sales of previous year, out of which 20% sales was cash sales. Total sales during the previous year was 5 lakhs. This will become easy. Payment for all purchases were made by check only. Goods were sold for cash and credit both. Credit customers paid by check only. Depreciation on furniture is to be charged at 10% per annum. Avinash sends to office collection of the month at the last day of each month after paying salary of rupees 2,000 to the clerk, office expenses 1,200 and personal expenses 500. So what is the system of the business? Avinash will send bank the collection of the month as the last day of each month. So at the last day of each month, after paying some of the expenditure, remaining amount will be deposited into bank. Analysis of the passbook shows the following. So these are passbook payment to creditors, payments of rent up to 31st March, cash deposited into bank during the year is 80,000. The following are the balances as on 31st March. So these are closing balances. Again, two effect because they are not from tallied sheet or tallied account. Stock 1,60,000, debtors 1,20,000, creditors 1,46,000. On the evening of 31st March, the cashier absconded with the available cash in the cash box. You are required to prepare trading and profit and loss account for the year ended 31st March and balance it as on that date. So cashier has absconded with the cash. So what we need to find out is what is the loss happening to the business because cashier has absconded with the cash. Let us decide which all accounts I'll be preparing. I always prepare creditors account, debtors account, cash and bank and cash in hand. I'll have to prepare it in cash book. Any other points? I don't think so will be required. So normal all accounts are required. Trading account, profit and loss account, closing balance sheet, debtors account, creditors account, cash book with cash column and bank column both. Cash and bank column. No other accounts are required. We can start solving the question. As we have decided, this is opening balance sheet. I'll be passing one effect. Opening capital will be 4,04,000. Capital opening 4,04,000. One effect I can go ahead. Creditors opening balance is 82,000. Creditors opening balance is 82,000. One effect I can go ahead. Furniture opening balance is 40,000. Furniture inner column 40,000. I have not prepared the account, so I'll be solving it in inner column. Stock is 2,80,000. Opening stock 2,80,000. Trading account debit side one effect. Debtors opening balance 1 lakh. Debtors opening balance 1 lakhs. Debtors account a debit side one effect. Cash at bank 38,000. Opening bank balance is 38,000. One effect. Cash book debit side we can go ahead. Cash in hand is 28,000. So opening balance sheet is over. We have given one effect for each and every transaction. We can go ahead. Now onwards we will be giving dual effect for all the transactions. His sales for the current year were 20% higher than the sales of previous year, out of which 20% sales was cash sales. Total sales during the previous year was 5 lakhs. So total sales of previous year was 5 lakhs. There is a 20% increase, that is 1 lakh rupees increase in current year. So current year's total sales is 6 lakhs, out of which 20% is 20% sales were cash sales. So 1,20,000 is cash sales. 4,80,000 is credit sales. This is credit sales. This is cash sales. Credit sales. Debtors account debit, 2 sales. Debtors account debit, 4,80,000. 2 credit sales, 4,80,000. Sales with second effect. Trading account credit side by sales. Credit is 4,80,000. Cash sales 1,20,000, 2 effect. Cash account debit side and trading account credit side. Cash 1,20,000. Cash account 2 sales 1,20,000. So 2 effect given for both credit sales as well as cash sales. Payment for all purchases were made by check only. All right. So whenever there is a creditors or purchases, we will be crediting or debiting bank and not other cash account. Goods were sold for cash and credit both. This we know. Credit customers paid by check only. All right. So in debtors also it will be paid by check. Depreciation on furniture is to be charged at 10% per annum. Now normally depreciation should be taken last. So I'm not doing it. I'll be taking last because if there is some additions or sale of furniture, it can be previously recorded. Avinash sends to bank the collection of the month at last day of each month after paying salary 2,000. Okay, so 2,000 salaries per month. Salary 12,000, 12 into 2, 24,000 will be nothing but profit and loss account debit to salary 24,000. And it is paid through cash. Why? What is the system? Business collects cash, pays all this salary and office expense and then deposit into bank. So it is paid in cash. So cash account will be credited 24,000 by salary. Cash will be 24,000. Office expense 14,400, 1,200 into 12. Same effect. To office expense. It is 14,400. Cash account credit by office expense 14,400. Personal expenses is 6,000. 12 into 500 is 6,000. Personal expenses is drawings minus drawings is 6,000. Second effect same, cash account credit side by drawings 6,000. All three figures I have given 2 effects each. Analysis of bank passbook. Now I need to understand that I will be writing it in bank column because it is passbook. It is bank affected. Payment to creditors is 3 lakhs. Creditors account debit to bank 3 lakhs rupees. Bank account credit by creditor 3 lakhs rupees. Payment of rent up to 31st March. So there is no outstanding, no prepaid. It is just payment of rent 16,000. Rent will be P&L debit. And bank will be credited because bank will go down. It was rent. Cash deposited into bank during the year. Bank account debit to cash 80,000. Bank account debit to cash contra 80,000. Cash account credit by bank contra 80,000. Bank will come in, cash will go out, debit what comes in, credit what goes out. It is a contra entry because both bank and cash are affected. So these three are also done. The following are the balances as on 31st March. Again, two effects because it is not from a tally sheet. Stock 1,60,000. Trading account credit side. Buy stock 1,60,000. Balance sheet asset side. Stock 1,60,000. Debtors 1,20,000. Closing balance. Balance sheet. Debtors 1,20,000 and debtors account credit side. By closing balance 1,20,000. Creditors 1,46,000. Balance sheet. Creditors 1,46,000. Creditors account debit to closing 1,46,000. On evening of 31st March, cashier absconded with the available cash. You are required to prepare trading profit and loss account and balance sheet as on that date. That is all right. One point is pending, that is depreciation to be charged at 10% per annum. There is no addition, deletion. I can directly charge depreciation. Minus 10% depreciation per annum is 4,000. P&L will be debited by 4,000 to depreciation 4,000. Let me tell you the remaining accounts because I have covered all the full question. Debtors account, opening is there, sales is there, closing is there. This is receipt and it is given that receipt is by check only. So it will it will be by bank. 5,80,000 minus 1,20,000 is 4,60,000. Bank account will be debited to debtors. Money received from debtors 4,60,000. Creditors to bank, this will be credit purchase. It will be 4,46,000 minus 82,000. It is the 3,64,000. Credit purchase trading account debit side 3,64,000. Debtors and creditors account are tallied. There are no other accounts. Balance sheet, trading, P&L account and balance sheet we can tally. In trading account also I will be getting a balance of GP. Let me try to tally bank account first. Bank account is normally simple. There will be a closing balance. What is closing balance of bank is 38,000 plus 80,000 plus 4,60,000 minus 3,16,000. It is 2,62,000. Second effect, balance sheet asset side 2,62,000. So bank is tallied. Now there will be no closing balance of cash. Actually there is a closing balance of cash, but cashier has absconded with your cash. So practically it is loss for you and should be debited to P&L account. Now if there are any chances that this cash will be recovered from your cashier, you can write it down on balance sheet asset side. But till that point of time, I will be writing it in P&L account, assuming that it is not recoverable. What could have been your closing cash balance is 28,000 plus 1,20,000 minus 24,000 minus 14,400 minus 6,000 minus 80,000, which is the 23,600. So this 23,600 I will not be transferring to balance sheet asset side, but I'll be transferring it to P&L account as if it is my loss. So 23,600, cashier has absconded with the cash. It is my loss. It is debited to P&L account. 23,600 to loss on cash absconded. Figure was 23,600. So my cash and bank both are tallied. So next point, debtors, creditors, cash and bank is tallied. Now it is very simple. I'll be tallying trading account. I will be getting answer of GP. It is, this is 5 lakh, 6 lakh 60,000. 6 lakh 60,000 is total of credit side minus 2 lakh 80,000 minus 3 lakh 64,000 is the 16,000 is GP. GP is 16,000. Trading account is, this is 6 lakhs, sorry, 7 lakh 60,000. Let me calculate it again. This is 5, 6, 7 lakh 60,000 is total of credit side minus 2 lakh 80,000 minus 3 lakh 64,000. It is 1 lakh 16,000. 1 lakh 16,000. GP is 1 lakh 16,000. I will be getting net profit. It will be 1 lakh 16,000 minus 24,000 minus 14,400 minus 16,000 minus 4,000 minus 23,600. It is 34,000. So net profit is 34,000, which will be added to capital, plus net profit 34,000. This is 4 lakh 44,000. This will be 36,000. I'll be totaling the balance sheet. 4 lakh 44,000 plus 1 lakh 46,000. It is 5 lakh 90,000. Debit side is 36,000 plus 1 lakh 60,000 plus 1 lakh 20,000 plus 2 lakh 62,000 is 5 lakh 78,000. 2,000 rupees difference. No, there is a 12,000 rupees difference. How we can find out where we have made a mistake? See, if there is a difference of 12,000, here there is a difference of 12,000. Either 12,000 effect is not given or 6,000 effect is given on incorrect side. Those are the two possibilities, basic possibilities that there might be an error. So let me see which are the figures which are 6,000 drawings. Yes, instead of subtracting it from this, I have added while finding out this 4 lakh 44,000 in hurry. Is it all right? This total will be 4 lakh 4,000 minus 6,000 plus 34,000. It is 4 lakh 32,000. Four lakh 32,000 plus 1 lakh 46,000. It is 5 lakh 70,000. So sometimes if I make mistake, this also is helpful, because I have also told you how to solve it. If there is a difference of 12,000, you have given a debit effect credit of 6,000 or credit effect debit of 6,000, or you have not written one of the effect of 12,000. Those are the basic possibilities because of which you have made some error. 5,78,000, our balance sheet is closed. 7.13, similar type of question. Aman, a ready-made garment trader, gives us books of accounts under single entry. Again, opening balance sheet is given. On closing 31st March, his statement of affairs were as follows. So, opening balance sheet is given. Riots occurred and fire broke out on the evening of 31st March, destroying the books of accounts on the day. Cashier has absconded with the available cash. You are furnished with the following information. So, similar type of question. Sales for the year ended 31st March were 20% higher than the previous year sales, out of which 20% sales were for cash. He always sells his goods at cost plus 25%. There was no cash purchase. Collection from debtors amounted to 14 lakhs, out of which 3,50,000 was received in cash. Business expenses amounted to 2 lakhs, of which 50,000 were outstanding. GP as per last year audited accounts is 3 lakhs. Last year GP is given, GP rate is given, last year sales can be found out. From last year sales, by this first point we can find out current year sales. Provide depreciation of building and furniture at 5% and motor car at 20%. His private records of the bank passbooks reveals the following. For the year, payment to creditors paid by check, personal drawings paid by check, repairs paid by cash, traveling expenses paid by cash, cash deposited into bank, cash withdrawn from bank. Stocks level were maintained at 3 lakhs all throughout the year. The amount defalcated by cashier is to be written off in profit and loss account. So which accounts I will prepare? I will prepare debtors account, I will prepare creditors account, cash and bank, and that's it. This all are the accounts which I will be preparing. So normal or books of accounts, trading, profit and loss, balance sheet closing, debtors account, cash book with the 2 columns, cash and bank, cash and bank. Let's start the question. As this is opening balance sheet, it is already tallied. I will be passing one effect. Opening capital 4,80,000. Capital opening 4,80,000. Loan 1,50,000. I don't know whether there is any adjustment or not. Creditors 3,10,000. I have prepared the account, so I'll be writing it in opening balance 3,10,000. Creditors opening 3,10,000. Building 3,25,000. Balance sheet inner column. Building 3,25,000. Furniture 50,000. Furniture 50,000. Motor car 90,000. Motor car 90,000. Opening stock 2 lakh. Opening stock trading account debit side 2 lakhs. Opening debtors 1,70,000. Debtors opening 1,70,000. Cash in hand at 20,000. Cash in hand at 20,000. Cash at bank 85,000. Opening balance sheet, I have passed one effect. I can go ahead. All effects are given. Riots occurred and fire broke out. That is all right. Sales for the year ended 31st March were 20% higher than the previous year sales. So previous year sales plus 20% is equal to current year sales. Out of which 20% sales were for cash. 20% cash, 80% credit. But they have not directly given what is previous year sales. There were no cash purchase. He always sells his goods at cost plus 25%. And we know that in point number 3 it is given that GP of last year was 3 lakhs. GP of last year was 3 lakhs. So GP of previous year was 3 lakhs. We always sell goods at cost plus 25%. So cost plus profit is equal to sales. Cost is 100, profit is 25, sale is 125, which is 20% on sales. So GP ratio is 20% on sales. GP of previous year is the 3 lakhs and GP ratio is the 20% on sales. Sorry. So if 3 lakhs is 20%, or you can use the GP rate formula and find out divided by 0.20, which is 15 lakhs. So sales of previous year is 15 lakhs. You can see now, if 15 lakhs is the sales, multiplied by 20% will be 3 lakhs. So sales of previous year is 15 lakhs. 20% is 3 lakhs rupees more, is 18 lakhs rupees. 20% is cash. So 3 lakhs 60,000 is cash. And 80% is 14 lakh 40,000 is credit. Credit sales to effect trading account credit side. ₹14 lakh 40,000. Debtors account debit side. 14 lakh 40,000. Cash sales 3 lakh 60,000. Trading account credit side 3 lakh 60,000. Cash account debit side to cash sales 3 lakh 60,000. So I have taken into consideration this full, and even if this GP is considered, collection from debtors amounted to 14 lakhs, out of which 3 lakh 50,000 were received in cash. So 10 lakh 50,000 through check. Let me do it. What is the journal entry? Cash account debit, bank account debit to debtors. Cash account debit is 3 lakh 50,000. Cash account debit to debtors 3 lakh 50,000. Bank account debit is 10 lakh 50,000. And debtors account credit by cash 3 lakh 50,000 and by bank 10 lakh 50,000. Total 14 lakhs debit effect as well as credit effect I have given. Business expenses amounted to 2 lakhs, of which 50,000 were outstanding as on 31st March and 60,000 paid by check. Alright, let me do it technically. Business expenses amounted to 2 lakhs. Try to understand, I am giving one effect of 2 lakhs first. Expenses 2 lakhs. This is debit effect given. Let me give credit effect. Out of 2 lakhs, 50,000 were outstanding. See, first credit effect, balance sheet liability side. Outstanding expenses. Figure was 50,000. Credit effect 50,000. Debit effect I have given 2 lakhs. And of which 60,000 were paid by check. So bank account credit by expenses 60,000. So 60 plus 50, 1 lakh 10 we have credited. So 90 we need to credit, and 90 is nothing but cash expenditure. Is it alright? So what is the debit effect? P&L account debit side. Credit effect, balance sheet liability side 50,000. Cash account credit side 90,000 and bank account credit side 60,000 is total effect of this. I know nothing is purchased, I can pass entry for depreciation also. Building and furniture 5%, motor car 20%. Building and furniture 5%, motor car 20%. This will be 18,000, this will be 2,500 and 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 16,250 will be written in P&L account also. To depreciation, building 16,250, furniture 2,500, motor car 18,000. So depreciation is also over. His private records of bank passbook disclose the following for the year. Payment to creditors paid by check 13,75,000 is creditors account debit to bank 13,75,000. Bank account credit by creditors 13,75,000. Personal drawings by check 75,000 minus drawings 75,000. Check, so bank account credit side by drawings 75,000. Repairs by cash 10,000. Repairs is P&L debit 10,000. Cash account credit side 10,000. Traveling expenses by cash 15,000. Bank account by traveling expenses 15,000. Cash deposited into bank 7,15,000. Bank account debit to cash 7,15,000. Bank account debit to cash contra entry 7,15,000. Cash account credit by bank contra entry 7,15,000. And withdrawn from bank. Cash withdrawn from bank is 1,20,000. I can write it down in same column. Cash account debit 1,20,000. Bank account credit 1,20,000 and it is a contra entry. Start. Stock level was maintained 3 lakhs throughout the year. So opening stock was 2 lakhs, but now in current year the stock level was maintained at 3 lakh. So closing stock is 3 lakhs rupees. Balance sheet closing stock is 3 lakhs rupees. The amount defalcated by cashier will be written off in P&L account. We have not kept anything pending. We can start solving the accounts. So debtors opening balance is there, sales is there, cash received is there. So closing balance I'll be finding out of debtors. It is 1,70,000 plus 14,40,000 minus 3,50,000 minus 10,50,000, which is 2,10,000 is the closing debtors. Second effect, balance sheet. Debtors 2,10,000. Debtors account is tallied. Creditors account, I am having two figures to be solved and credit purchase. So I cannot solve it because there are two figures which I need to find out. I can solve bank, right? Bank will be having a closing balance. What is closing balance of bank? 85,000 plus 10,50,000 plus 7,15,000 minus 1,20,000 minus 60,000 minus 13,75,000 minus 75,000 minus 10,000 minus 15,000. So closing bank balance is 1,95,000. 1,95,000. Balance sheet asset side 1,95,000. Bank balance 1,95,000. Cash balance, whatever is closing, will be transferred to P&L account. And I will tally my bank as well as cash column. It is directly written that loss will be debited to P&L account. What is the loss? 20,000 plus 3,60,000 plus 3,50,000 plus 1,20,000 minus 7,15,000 minus 90,000 will be 45,000. So 45,000 is loss debited to P&L account. So I have tallied my cash as well as my bank account. Creditors is pending to be tallied because two figures are missing: closing creditors and credit purchase. Let us see other points. Trading account. I know sales, closing stock, purchase is missing, which they are saying it is only credit, and GP is missing. So here also two figures are missing. But we know the GP rate. GP rate is 20% on sales. 25% on cost is 20% on sales. And total sales is 18 lakhs. 18 lakhs into 20%. That is 3,60,000. Will be our GP. GP 2 effects, P&L account credit side, 3,60,000. I can find out credit purchase as a balancing figure. This is 18 lakhs plus 3 lakhs minus 3,60,000 minus 2 lakhs, which is 15,40,000 credit purchase. Second effect, creditors account credit side, 15,40,000. I will be getting closing balance of creditors 15,40,000 plus 3,10,000 minus 13,75,000 is 4,75,000 is closing balance of creditors. Creditors 4,75,000. Again, I have given two effect: debtors, creditors, cash and bank. Excuse me. Everything is tallied. We can go to trading account is tallied. We will be solving profit and loss account. It is 3,60,000 minus 2 lakhs minus 16,250 minus 2,500 minus 18,000 minus 10,000 minus 15,000 minus 45,000. 53,250. 53,250 will be net profit. Net profit 53,250. Capital figure 4,80,000 minus 75,000 plus 53,250, 4,58,250. 4,58,250. Loan I can take it in an outer column, 1,50,000. Let me also solve this. 3,25,000 minus 16,250, 3,08,750. This will be 47,500. This will be 72,000. Let us tally our 4,58,250 plus 1,50,000 plus 50,000 plus 4,75,000. 11,33,250. On asset side, 3,08,750 plus 47,500 plus 72,000 plus 3 lakhs plus 2,10,000 plus 1,95,000. 11,33,250. Balance sheet is tallied. This was question number 7.13. Next question, C 7.14. This is a different type of questions. This is a different type of question. It is on cash basis. Also, it is a professional and not a business question. A doctor, after retiring from government services, started his private practice from 1st April with 20,000 of his own and 30,000 borrowed at an interest of 15% per annum on securities of his life policy. His accounts for the year were kept on cash basis. What is cash basis? The revenue will be treated as revenue when it is received, and the expenditure will be treated as expenditure when it is paid. So it is on cash basis and not on accrual or mercantile basis. And the following is a summarized cash account. Whether cash account is tallied? Yes. I will be giving one effect. Own capital 20,000. This is repeated because it is also given in first paragraph. Loan 30,000, and we know this is 15% loan. Prescription fees, gift from patients, visiting fees, fees from lectures, and pension received. These are all received for him. Payments are medicine purchase, surgical equipments, motor car expenses, wages and salary, rent of clinic, general charges, household expenses, outdoor furniture, expenses on daughter's marriage, interest on loan, balance at bank, cash in hand, and those are two closing balances. Prepare his capital account, income and expenditure account, and balance sheet as on the date. 1/3 of motor car expenses. So there is the inner column in this. May be treated as a private use of car. And 3,000 of wages and salary are in respect of domestic servant. The stock of the medicine in hand on 31st March was 9,500. Alright. So as given in the question, I'll be preparing income and expenditure account, capital account, and closing balance sheet. One effect for all these transactions. Own capital 20,000, balance sheet. Loan 30,000, liability. It is a 15% loan. Prescription fees, is it our business income? Yes, then it will go to income and expenditure account. 52,500. As a doctor, prescription fees is my business income. 52,500. Gift from patients. Now this is a controversy whether gift from patient is a business income or is my personal income. Please understand, any gift received from client, from patient, from your customer is always a business income. That gift is received because you are doing that business. So gift from customers, client, for doctor, patients, it should be treated as a business income. So gift from patient 13,500. Visiting fees. Doctors are visiting at places and they get fees. 25,000. Fees from lecture. This doctor might be giving lecture to some medical colleges or institute and he is getting fees. That also is his business income, 2,400. Pension received. Now understand, this is not his right now professional income. He might be serving as a doctor in some institute before. Now he has received the pension. This is treated as a personal. Personal income will not be credited to income and expenditure account. It will be credited to capital account. As a capital account is given, opening own capital should also be credited to this and not written over here. We prepare inner column when practically we are not preparing accounts. Here we are preparing capital accounts, so we will not be preparing inner column. Is done. Medicines purchased 24,500 is your business expenditure. To medicines opening plus purchase minus closing will be is equal to consumed. Medicines purchased just 24,500. Surgical equipment is your asset 25,000. Balance sheet asset side. Motor car is also your asset 32,000. Motor car expenses, income and expenditure account debit side 12,000. Inner column because there is some adjustment. Wages and salary 10,500 inner column. Rent of clinic 6,000 is your business expenditure. General charge is 4,900. Household expenses is your personal expenditure. So drawings 18,000. Very simple. Any payment, if it is personal, will go to capital account debit side. If it is business, it will go to income and expenditure account debit side. Household furniture is also drawings 2,500. Expenses for daughter marriage is also personal 21,500. Interest on loan 4,500. To interest 4,500. Interest is expenditure. It was 15% loan of 30,000. So per annum you will have to pay 30,000 into 15% is 4,500. You have paid 4,500. So I can directly take it in inner column. There is no outstanding or prepaid. Even if there was outstanding or prepaid, we are writing down books of accounts on cash basis. So we will not be writing outstanding or prepaid. Bank balance asset 11,000. And cash balance also asset 1,000. I have given one effect. Now onwards I will be giving dual effect. Prepare as capital account so and so. 1/3 of motor car expenses are private. 1/3 of motor car expenses minus 1/3 are private is 4,000. So 4,000 will be private expenditure. So drawings motor car expenses 4,000. Income and expenditure account debit side negative figure, capital account debit side positive figure, debit effect, credit effect. I can go ahead. 3,000 of wages may be treated as for domestic servant. Minus 3,000 domestic servant 3,000. Same type of effect. The stock of medicine is 9,500. 9,500. In income and expenditure account debit side negative 9,500. And balance sheet asset side stock of medicine 9,500. No other points are pending. We have taken into consideration each and every point. We can start telling books of accounts. Here I'll be first telling income and expenditure account. Opening medicines is 0. So medicines consumed will be 24,500 minus 9,500 is 15,000. This will be 8,000. This will be 7,500. What is the balance? 52,500 plus 13,500 plus 25,000 plus 2,400 minus 15,000 minus 8,000 minus 7,500 minus 6,000 minus 4,900 minus 4,500. It is 47,500. It is excess of income over expenditure will be transferred to capital account by excess of income over expenditure 47,500. This will the balance will be transferred to capital account. This is 50,000 plus 47,500 minus 18,000 minus 2,500 minus 21,500 minus 4,000 minus 3,000. It is 48,500. Is your balance? $48,500. This is 78,500. This will go to outer column. There is no depreciation given. 25,000 plus 32,000 plus 9,500 plus 11,000 plus 1,000 is 78,000. My balance sheet is 10. This was question number 7.14. A good question from the perspective of cash basis. Next question, 7.15. The following balances appeared in the books of Sunshine Traders. 31st March 2018, 31st March 2019. So these are opening balances. These are closing balances. Land and building, plant and machinery, office equipment, sundry debtors. All right. From land and building, I can understand that this figure closing is before depreciation because it cannot remain same after depreciation. It should normally decrease, but it is remaining same. So this closing figure is before depreciation. What to do it? Depreciation I will solve in balance sheet inner column. So I'll prepare practically this account also. Land and building. I'll also prepare plant and machinery, assuming this is before depreciation. Office equipments. Debtors I always prepare, creditors I always prepare. Provisions for office expenses. These are the provisions created. Stock. So provision account also I'll be preparing. Stock no need to prepare. Long-term loan from ABC I'll be solving it in inner column. Bank account, capital account. Collection from sundry debtors. This is capital account 465,250. All right. Collection from sundry debtors, payment to creditors, payment of office expenses, salary paid, salary selling expenses, credit sales, credit purchases, gross profit margin, discount allowed, discount received, bad debt. Depreciation to be provided means it is yet to be provided. The figures which were given before are before depreciation. On 1/10/2018, the firm sold machine having a book value of 20,000. So and so new machine was purchased. So and so. Office equipment was sold at such book value was on 1/4/2018. Loan was partly repaid on 31st March 2019. You are required to prepare trading profit and loss account balance sheet as on 31st March. I will also have to prepare opening balance sheet. There is no point in not preparing opening balance sheet because opening balance sheet practically is not given. Which all accounts I will be preparing? Land and building, plant and machinery, office equipments, trading, profit and loss, balance sheet, debtors, creditors, cash book, land and building, plant and machinery, office equipments, provisions for expense, I will be also preparing debtors, creditors. I have already prepared provisions for expenses. I'll be also preparing opening balance sheet. So this is my opening balance sheet. No other accounts are required. Let me start the question. All the figures will be having dual effects, so it is a somewhat lengthy task for me. Opening land and building 2,50,000. Opening land and building 2,50,000. Opening balance sheet land and building 2,50,000. Let me do this. Let me solve opening all first. Plant and machinery 1,10,000. Plant and machinery opening 1,10,000. Opening balance sheet plant and machinery 1,10,000. Office equipment 52,500. Office equipment opening 52,500. Opening balance sheet office equipment 52,500. Debtors 77,750. Debtors account opening 77,750. Opening balance sheet debtors 77,750. Creditors 47,500. Creditors opening balance 47,500. Opening balance sheet creditors 47,500. Provisions for expenses 10,000. Provisions for expenses opening balance 10,000. Provisions for expenses opening balance sheet 10,000. Stock opening is not available. Long-term loan from ABC Bank at the rate of 10% per annum. So it will be liability in opening balance sheet and long-term loan. I am giving two effects. Long-term loan 62,500. Second effect, I have not prepared account, so closing balance sheet long-term loan 62,000. Two effect, debit credit. Bank opening balance 12,500. Opening balance sheet bank balance 12,000. Capital 465,250. See two effects 465,250. Capital 465,250. Closing balance sheet inner column. Now opening balance sheet liability side is a debit effect. There it will be credit effect 465 250. Let me go to closing balances. Land and building 2,50,000. Closing 2,50,000. Closing balance sheet, land and building 2,50,000. If at all there is a depreciation, I'll be providing depreciation on it. Plant and machinery 1,65,000. Plant and machinery 1,65,000. Plant and machinery closing 1,65,000. Office equipment 42,500. Office equipment 42,500. Closing 42,000. Debtors 1,10,250. $250. Debtors 1,10,200. Creditors closing balances question mark, will be finding it out. Provisions for office expense 7,500. Provisions 7,500. Closing 7,000. So closing stock 32,500. Long-term loan 50,000. See how I will be giving effect. It is not compulsory to give 50,000 rupees effect. What was loan? 62,500. What is closing balance? 52,500. Means 12,500 is repaid minus repaid 12,500. Because closing is 50,000. So I'm not giving effect of 50,000, but by the figure of 50,000, I am using this figure of 12,500 to give two effect. 50,000 no effect, 12,500 two effect. 12,500, here it is liability minus surplus debit, and cash book by loan repaid 12,000. Bank closing balance is not available. Capital closing balance is not available. Other information as follows. Collection from debtors 4,62,500. Collection from debtors 4,62,500. Debtors account credit side by bank 462. Bank account debit to debtors. Payment to creditors 2,62,500. Creditors account debit to bank. Payment for office expenses 21,000. Now I'm assuming provision is also for office expenses, right? So payment of office expenses, instead of writing it in, yes, instead of writing it in P&L debit, I'm writing it in account debit. 21,000. Bank account credit side, 21,000. Salary paid 16,000. P&L account debit, bank account credit. Selling expenses paid 7,500. Total sales 6,25,000. 80% credit sales is 80% of total sales. So credit sales is 80% of this 6,25,000 into 80%. It is 5 lakh. So 5 lakh rupees is credit sales and 1,25,000 is cash sales. So 5 lakh credit sales, first I am giving two effect. By sales credit 5 lakh, debtors account debit side to sales 5 lakhs. Cash sales 1,25,000. Cash 125,000. Cash account debit side to sales 1,20,000. Purchases. Credit purchases, cash purchases are 40% of total purchases and credit purchases 2,70,000. So cash plus credit is equal to total, and cash purchases are 40%, so credit are 60% and total is 100%. And which purchases are given? Credit purchases are given, so this 60% figure is given. I can cross multiply and get the answer. 2,70,000 into 40 divided by 60, 1,80,000 is cash. And 4,50,000 is total. So cash cash purchases 1,80,000 to effect. Cash purchases 1,80,000 to effect. To purchases cash 1,80,000. Cash book by purchases 1,80,000. Credit purchase 2,70,000. Credit 2,70,000. Creditors account credit side purchases 2,80,000. So this is tallied, this is tallied. All right. Gross profit margin are 25% on cost is 20% on sales. So GP will be 20% on sales. I'm also knowing the sales. It is 6,25,000. 6,25,000 into 20%, which is 1,25,000. So GP2 effect P&L account credit side, trading account debit side 1,25,000. This is done. Discount allowed 2750. Discount allowed is to customers. It is our expenditure. 2750. P&L account debit to discount 2750. It is given to debtors account credit side by discount 2750. Discount received is from creditors is 2250 is our income. Discount 2250. Creditors account debit side to discount 2250. Bad debt again 2250. P&L account debit side to bad debt 2250. Debtors account credit side by bad debt 2250. P&L debit, debtors credit. Depreciation to be provided as follows. Land and building 5%. So in balance sheet, I will be providing 5% on land and building depreciation, 10% plant and machinery, and 15% office equipment. So this 42,500 figures are already given as a closing balance. Yes, but they are before depreciation. Two hint. First hint was land and building opening and closing were same. Number two, depreciation to be provided are as follows. So from that closing figure, depreciation is yet to be provided. This will be 12,500. This will be 16,500. This will be 6,375. Total depreciation will be 12,500 plus 16,500 plus 6,375 is 35,375. 35,375 will be depreciation on all. I will just total it. On 1/10/2018, the firm sold a machine having a book value of 20,000 as on opening balance at a loss of 7,500. New machine was purchased on 1/1/2019. So I think plant and machinery, we have just hurried to closing balance before that is all right. On 1/10/2018, firm sold a machine having a book value of 20,000, but the depreciation will be provided up till for half months. So this plant and machinery having book value of 20,000 opening will be provided with a 10% depreciation for half year, that is 5% depreciation, which is 1,000 rupees. So the book value as on that date is 19,000 rupees. At a loss of 7,500. So sold at a loss of 7,500. So it is sold at 19,000 minus 7,500. It is 11,500. New machine was purchased on 1/1/2019. Okay, so for that I need to provide only that much depreciation. All right. So I'll have to recalculate the depreciation on machinery. First, let me provide this. It will be bank account debit 11,500, P&L account debit 7,500, depreciation account debit 1,000, to machine 20,000. This will be the journal entry for this particular transaction. Let me pass it. Bank account debit 11,500. P&L account debit 7,500. And depreciation on sold machinery is 1,000. Machinery account credit 20,000. So I passed this journal entry. New machine was purchased on 1/1/2019. All right. Let me go to machinery account. This is my machinery account, 1,10,000, and on credit side is sold. Nothing else will come over here. No depreciation. Depreciation is done afterwards. And so the balancing figure is purchased, and it is told that it is purchased on 1/1. It is 185. So it will be purchased of 75,000. Yes, depreciation on plant and machinery, I will be recalculating it. So I am rubbing the point of depreciation from my book. Land and building is all right. I can write it down, 12,500. To depreciation of land and building, 12,000. So plant and machinery and other I'll be calculating later on. Office equipment was sold at its book value on 1/4/2018. That is opening balance. Office equipment were sold at book value, which is 10,500, because difference between opening and closing is 10,500. Bank account will be debit 10,500. And please understand, this depreciation also will be correct. Why? This is sold as on the last date. Last date or first date? First date. This is sold as on opening date. So 52,500, there was office equipment in opening. In opening only 10,500, 10,000 you have sold. So what is the in opening balance? 42,500, on which depreciation is to be provided. So here 15% will be on 42,500. So it was correct. It is a 637. P&L account debit side to depreciation 637. Let me do depreciation even of plant and machinery. See, out of 1,10,000, 20,000 of machinery was sold at in the between, and depreciation we have already provided that 1,000 rupees. So remaining balance is 90,000, on which full year's depreciation of 10% is to be provided, which is 9,000. On this 75,000, I need to provide only for January, February and March. That is for 3 months. So into 10%, that is 7,500 into 3 divided by 12. Because the depreciation is to provided only for 3 months. So 7,500 divided by 4. It is 1875. Total depreciation that I'll be providing is 10,875. And 1,000 of that sold machinery is already provided. So depreciation will be 10,875. You will say me, sir, but the closing balance is 1,65,000. I did not find out depreciation on 1,65,000. I have found out depreciation on 1,65,000 only. Is it alright? So the depreciation is 10,875. I've done this. Loan was partly repaid at the last day of the year, together with the interest for the year. So loan was repaid on last date. Loan I have repaid on last date. So whatever interest is payable should be payable on opening balance. Why? Whatever principal repayment is made on last date. So the interest should be charged on opening balance, right? Because this repayment is done on last date. So you have used 62,500 for full year. And if you have used 62,500 for full year, loan is 10%. So interest should be 6250. You have not paid any interest. So 6250. Yes, interest is not there. So 6250, 10% interest on 62,500 is outstanding. So outstanding interest 6250, P&L account debit side to interest 6250. See if it was repaid at the beginning of the year, I would have calculated interest on 50,000, that is closing balance. If it is repaid at the end of the year, full year you have used that full money of 62,500, interest will be payable on that. It is not paid, so fully is outstanding. All right. Let me verify whatever is pending in this particular thing. I don't think I have kept pending any of the points. Which opening balance was missing? Stock. All right. Debtors, creditors. Creditors closing balance is easy, I can find out. It is 47,500 plus 2,80,000 minus 262,500 minus 2250. It is 62,750. Closing balance of creditor 62,750. Cash book, it is advisable to do it last. Let me close even debtors. At debtors, there is nothing missing. Credit sales is given, closing is given. Let me first find out difference and then try to get it. What will be the difference figure? 77750 plus 5 lakh minus 462,500 minus 2750 minus 2250 minus 1,10,250. There is no difference, right? So debtors account is tallied. If there was a difference, then there would have been problem, because credit sales is given, bad debt is given, discount is given, receipt from debtors is given, opening balance is given, and closing balance is given. So no difference is good for us, because if there was a difference, it would be a dilemma what to put in. So debtors and creditors are solved. Land and building is automatically solved. I need not solve it. Plant and machinery I have already solved. So as office and equipment. Provision for expenses remaining will be transferred to P&L account. This will be 28,500. This will be 18,500. 18,500 will be debited to P&L account. Sir, we didn't understand this provision for expenses. Try to understand. It is just like outstanding expenses. You have paid this. Outstanding of current year will be added. Outstanding of previous year will be deducted. They are just outstanding expenses. Or you are creating a provision for expenses. It will be treated as outstanding expenses. Or you are creating a separate provision. Whenever the expenses are incurred, it will be expended from provisions, and balancing figure you will be creating it from P&L account. What is the journal entry to create provision is P&L account debit to provision. So 18,500 will be transferred to P&L account. Opening balance sheet. I think in stock they have given question mark, so it will, the balancing figure will be stock. 462, 65, 250 plus 47,500 plus 10,000 plus 62,500 minus 2,50,000 minus 1,10,000 minus 52,500 minus 77750 minus 12,500. So opening stock will be 82,500. Cash book will be closing cash balance, which is 12,500 plus 462,500 plus 1,25,000 plus 11,500 plus 10,500. Let me first solve trading account, because trading account everything is available. Opening, cash purchase, credit purchase, sales, closing stock and GP. Let me see whether it is automatically tallied or not. This is 6,25,000 plus 32,500 minus 82,500 minus 4,50,000 is purchase minus, yes, it is automatically tallied, right? So it is a weird question whereby no balancing figures are coming and it is automatically getting tallied. Cash book also I can now tally it. 12,500 plus 462,500 plus 1,25,000 plus 11,500 plus 10,500 minus 12,500 minus 262,500 minus 21,000 minus 16,000 minus 7,500 minus 1,80,000. It is 122,500. 122,500 is my bank balance. Debtors account, creditors account, cash, land and building, plant and machinery, office equipment, provision, opening balance sheet are solved. trading account is automatically solved. I can find out balance in P&L account. One lakh 25,000 plus 2250 minus 12,500 minus 6375 minus 10,875 minus 16,000 minus 7,500 minus 18,500 minus 2750 minus 2250 minus 6250 minus 11,500 minus 1,000 minus 18,500. It is 13,250. Think I have made two mistakes in this. One, expenses is written two times, 18,500, and why expenses are written two times? No, it should be written one time, 18,500, and loss on sale of machinery is 7,500. So it is just a type of mistake. 7,000. So let me find out P&L account again. 1,25,000 plus 2250 minus 12,500 minus 6375 minus 10,875 minus 16,000 minus 7,500 minus 18,500 minus 2750 minus 2250 minus 6250 minus 7,500 minus 1,000. It is 35,750. 35,750, which will be added to capital account. 35,750. I am telling my balance sheet. 465,250 plus 35,750, 5,01,000. This is 50,000. Liability side, 5,01,000 plus 50,000 plus 7,500 plus 6250 plus 62,750, 627,500. This will be 2,37,500. This will be 1,65,000 minus 10,875, 154,125. This will be 42,500 minus 6375, 36,125. Total of the balance sheet is 2,37,500 plus 154,125 plus 36,125 plus 110,250 plus 32,500 plus 122,500. 6,93,000. Mistake. This is not expected from you as far as examination is concerned. One is, this is 10,000. So I have rectified it over here. It was not 10,500. It is 10,000, but forgot to rectify it in cash book. Another, the 75,000 rupees machinery which I have purchased, plant and machinery which I have purchased, I have given one effect over here. Second effect I have forgotten. Let me find out. Cash book again. 12,500 plus 462,500 plus 1,25,000 plus 11,500 plus 10,000 minus 12,500 minus 262,500 minus 21,000 minus 16,000 minus 7,500 minus 1,80,000 minus 75,000. So it is 47,000. Closing bank balance. So my closing bank balance will be 47,000. And now my books of accounts will tally. 237,500 plus 154,125 plus 36,125 plus 110,250 plus 32,500 plus 47,000. Still there is a difference of 10,000. Bank balance is alright. So it is in creditors account. This is not 62,750, it is 52,750. So creditors are 52,750 and this will be 6,17,000. Sir, what to do if we do this type of mistakes in examination? Please understand this all are procedural mistake. If you do it in examination, you will not be having time to rectify it like me. But if it is a small mistake, say you have not written something in bank account, you can just go through for 1 or 2 minutes maximum and try to rectify it. Otherwise, close your balance sheet. Your majority of effects are correct. So your marks cut will be only for totaling that your balance sheet is not tallied. So in examination, don't try. If your balance sheet is not tallied, don't waste 15, 20, 30 minutes just to tally the balance sheet. Here in classroom, we need to tally it. There were some procedural mistake that we have made, calculating mistake that we have made. If you do it in examination, of course, your some of the marks will cut, but they are not logical errors. They are procedural errors. Understand, in real life, there are no procedural errors. You don't take book and pen and calculate the questions. You will pass journal entries in Tally. You will pass journal entries in computer softwares. And so there is that procedural error will never happen. This paper checker understands, and hence if your balance sheet is not tallied, if your answer is correct, if you know that you have written majority of entries on correct side, don't worry much about procedural error. Of course, you should try that you don't make any procedural or calculating error like me, but if it happens, it is absolutely it is not absolutely all right, but your less marks, say it is 10 marks question, you will be getting 8 to 9 marks. But try, I will be also trying that I don't make any procedural or calculating error. Very interesting question, C7.16. Summarize balance sheet of clothes traders as on 31st March 2017 is given below. So this might be opening balance sheet. It is a tallied one. Capital P&L, 10% loan, creditors, fixed asset, closing stocks, 100 debtors, deferred expenses, cash and bank. And this is opening balance sheet. I'll be giving one effect because it is a tallied sheet. Additional information is as follows. The remaining life of the fixed asset is 8 years. The pattern of the use of the asset is given. The net realizable value, what is given is net realizable value of fixed asset. Purchase and sales in 2017-18 amounted to so and so. The cost and net realizable value of the stock as on 31st March 2018 were 2 lakhs and 2,50,000. So cost and NRV of stock is also given. Expenses are given. Deferred expenses are amortized equally over 5 years. Those are deferred expenses, and there is something about it. Sundry debtors as on 31st March 2018 are 1,50,000, of which 5,000 is doubtful. Collection of another 25,000 depends on successful reinstallation of certain products supplied to the customer. Closing sundry creditors are 75,000, likely to be settled at 10% discount. Cash balance as on is so and so. There is an early repayment penalty for the loan of rupees 25,000. You are required to prepare, and this is where there is a twist. Not assuming going concern. We normally prepare books of accounts assuming going concern. The business is going to last forever. So it is a reason we write down our expenditure of purchasing machinery. Machinery purchase is an expenditure. We don't write it down in P&L account because we know that our business is going to run for 12-15 years, and we amortize the cost of the asset in form of depreciation every year in profit and loss account. But now the question says you are not going to assume going concern. Then our asset side of balance sheet and liability side of balance sheet will be shown at net realizable value. What is the actual value we are going to realize from the asset? What is the actual payment we are going to make to liability? If I sell the business today, what is the amount I am going to realize from the asset should be shown on asset side of balance sheet. And if I close my business today, what is the liability which I am going to pay? That amount should be written on liability side of balance sheet. So excellent question. Let us we are required to prepare profit and loss account and balance sheet as on 31st March 2018. Profit and loss account includes trading account. And also in this question, I'm going to make my life easy. How? I will be preparing just trading account, profit and loss account, and balance sheet. So I'm not preparing cash account. I'm not going to tell it, sir, where I'll be getting closing cash balance. It is given in the question. I'm not going to prepare debtors account. Sir, where I'll be getting closing debtors. It is given in the question. So I will take that figure is correct and expect that my balance sheet tallies. I'm not going to prepare creditors account, debtors account, cash account. No such accounts are going to be prepared. So even if it is adjustment, please understand I might give one effect as far as this question is concerned, because try to visualize it. We are not doing full-fledged question. Debtors account, we will assume that whatever is calculated by the question is correct answer. Creditors, whatever is calculated by the question is correct answer. But balance sheet, and not assuming going concern, I will be valuing it at net realizable value and not at cost. Let me start the question. Proprietor's capital, balance sheet, liability side, capital opening 3 lakhs rupees. Profit and loss account 1,25,000. %% loan account 2,10,000. Sundry creditors, I am not giving any effect. Sir, I need to give one effect. Yes, if I am preparing full-fledged books of accounts, I need to give one effect. Creditors account opening balance. Here what I am assuming, whatever is given as creditors, here it is given creditors. That is absolutely correct figure, and I can directly take that figure and my balance sheet will tally. I can assume it. I'll see whether it is tallied or not. But here I am preparing only portion of the question and concentrating more on going concern concept. In examination also you can do this. So sundry creditors, I'll be directly taking it. Fixed asset, I'll be directly taking it. Net realizable value. Closing stock, Fixed asset, let me write down in inner column at least, because we need to provide depreciation for it. 3,60,000. Fixed asset, 3,60,000. Closing stock, that will become opening stock of current year, which is 1,50,000. Debtors. As I told you, I am not preparing debtors account, creditors account, cash and bank account. So these three figures I'll not be posting, because I assume that that account is prepared and it is already tallied and closing balance is given to us. Deferred expense 50,000. Balance sheet is done. I have not prepared creditors account, debtors account and cash and bank account. The remaining life of the fixed asset is 8 years. The pattern of the use of asset is even. We are now not concerned with remaining life. We are not assuming going concern. We are assuming tomorrow we are going to close the business. What is important is NRV. NRV of fixed asset is 3,25,000. So fixed asset should be valued at 3,25,000. So I need to write off 35,000 from fixed asset as depreciation. Depreciation or written off. My outer column should be 3,25,000. So this 35,000 I'll have to write down in P&L account debit side as depreciation or written off, which is 35,000. Because I need to, normally asset is valued at cost minus depreciation. Now my assets will be valued at NRV. Purchases and sales amounted to 22,50,000. So purchase is 22,50,000 and sales is 27,50,000. The cost and NRV of the stock. Here also we are not concerned with conservatism concept. Nothing. What is net realizable value of the asset? 2,50,000. I will value the closing stock at 2,50,000. Second effect will be trading account credit side. Closing stock 2,50,000. Expenses amounted to 78,000. P&L account debit side, two expenses 78,000. Cash account credit side, I am not preparing cash account. I will assume whatever cash and bank balance is given in the question is correct. Deferred expenses are amortized equally over 5 years. So what we do if you are writing normal books of accounts? 1/5, that is 10,000 will be written in P&L account. But here we will not do this. We are going to close business tomorrow. We are not going to work for 5 years. There is no use of segregating this expenditure for 5 years. Hence, I will write off my full expenditure in profit and loss account. Deferred expenses amortized 50,000. Sundry debtors as on 31st March 2018 were 1,50,000. I told you we are not preparing debtors account. We will be directly taking debtors given in the book. So debtors are 1,50,000. So if we had prepared the accounts, believe me, they have given some less information. So we would not have been able to tally the debtors account. They have given us directly closing balance. I can do it. 1,50,000 debtors. Second effect, debtors account credit side I'll not be giving. I'm not preparing debtors account, and I will be, there is 5,000 doubtful, and collection of another 25,000 depends on successful reinstallation of certain products supplied to customer. Now try to understand, if we are going to close business tomorrow, we are not going to reinstall the supplied product, and we are not going to do that stuff. So what we are going to do is, we will be directly writing down 30,000 from debtors. Assuming we are not going to give that after sales services, and so that will be also written in provision for debtors will be 30,000. Closing sundry creditors are 75,000. What is creditors balance? I told you we are not preparing books of accounts. We will be directly taking figure from the book. And they are assumed to be settled at 10% discount. So if they are assumed to be settled at 10% discount, we are finding out balance sheet at NRV. So we are not going to pay 75,000. We are going to pay 7,500 less, which is our profit that should be recognized in P&L account by provision for creditors, 7,500. Sir, we have never heard provision for creditors. Agreed, because we follow conservatism concept. Future gains cannot be recorded. But here you are going to close your business. Everything should be recorded at NRV, and hence 7,500 is written off even from creditors. Cash balance, again we have not prepared this account. We are taking it for granted that it is calculated correctly. Cash balance is 4,22,000. There is an early repayment penalty for loan of 25,000. So what is your loan? 2,10,000. If you pay it early, you will have to pay 25,000. So I will be valuing loan even at NRV. So if I am going to close business tomorrow, I will have to pay 25,000 more, not minus. I will have to pay 25,000 rupees more, which is my loss. 2. Penalty on loan, 25,000. Sir, we are not paying it right now. Agreed. But you are going to close the business. You will be going to, you are going to close the loan, and you will have to pay this penalty. I don't think we have missed out any point. So what we can do is directly tally our books of accounts. 27,50,000 plus 2,50,000 minus 1,50,000 minus 22,50,000. 6 lakhs is GP. GP will be 6 lakhs rupees. I'll have to find out net profit, which is 6 lakhs plus 7,500 minus 35,000 minus 78,000 minus 50,000 minus 30,000 minus 25,000. Is, I think I've made some mistake in calculation. It is 6 lakhs plus 7,500 minus 35,000 minus 78,000 minus 50,000 minus 30,000 minus 25,000. 5,000. It is 389,500. 3,89,500. As P&L account is separate in balance sheet, 389,500 will be added over here. $1,25,000 plus 389,500. 389,500. 514,500. This will be 2,35,000. 75,000 minus 7,500. It is 67,500. Total will be 3 lakhs plus 5,14,500 plus 2,35,000 plus 67,000, 11,17,000. This will be 0. This will be 1,20,000. It is 3,25,000 plus 2,50,000 plus 1,20,000 plus 4,22,000 is 11,70,000. So excellent question with this point. Not assuming going concern. What we have done, we will be preparing balance sheet at net realizable value. Also, one important way of solving this question was important. That is, we don't prepare creditors account, debtors account, and cash and bank. We will assume that whatever closing balance figures are given in the questions are correct. Otherwise, it is difficult to solve this question. Now, you will tell me, sir, if this question is asked for first time in examination, when we are appearing in examination, believe me, no one will be able to solve it. There will be, say, there are 1% chances that you will be able to solve it if this question is asked for the first time in examination. What you should think is, if this is again asked in examination and it is again asked in examination, so this question is of May 2019. After May 2019 also again one time this is asked in examination. If it is again asked in examination, you should be easily able to solve it. And if you are able to solve it, if it is now asked in examination, remember, balance sheet at NRV, don't prepare debtors, creditors and bank balance. Take it for granted that whatever given figure is given in the question is correct. You will be easily able to solve it from now onwards if this type of question is asked. Say in May 2019 it was asked for first time, then it can be categorized as difficult question for that particular exam. But if it is again asked in examination, it should not be difficult one. Next question, 7.17. Easy one. Let us start directly the question. Archana Enterprise maintains their books of accounts under single entry system. The balance sheet was as follows. So this is opening balance sheet, tallied. I will not be preparing again. I will be passing only one entry because it is a tallied account. Cash in hand and bank, so it should be a combined figure. But the following were the summary of cash and bank book for the year ended 31st March. So I think opening balance is given, closing balance is given, it is tallied. So this is cash book. We need not prepare even cash account, bank account. So it is already prepared. So we don't need to prepare it once again. So we will not be preparing even cash and bank. But yes, we prepare normally creditors account, we prepare debtors account. Here prepaid insurance is given, I can handle it in inner column. Other accounts, whichever is required, I'll be preparing. Discount allowed and discount received, annual fire insurance premium, furniture and fixtures. Closing stock are given, 2 effects will be given to all this. GP ratio is 10% on sales is maintained throughout the year. You are required to prepare trading, profit and loss account and balance sheet as on that date. I'll be also preparing debtors account, and creditors account. Expenses account, I'll be managing it in inner column, profit and loss account. Let us start solving it. Capital account, one effect 6,75,000. Trade creditors 7,57,500. $757,500. Outstanding expense 67,500. How I'll deal with outstanding expense? Please try to understand. In P&L account, there will be expenses plus outstanding of current year minus prepaid of current year minus outstanding of previous year plus prepaid of previous year. And what is this? Outstanding but of previous year, 67,500. It is credit effect, right? Debit side I have written negative figure 67,500. Debit side furnitures and fixtures, inner column 1,50,000. Stock 9,15,000 is opening stock. Debtors 3,12,000 opening balance. Prepaid insurance 3,000. It is prepaid of previous year expenditure 3,000. Cash in hand at bank. Please understand this will go in cash and bank account debit side. But cash and bank account is already given. See the art of solving the question. I will tick mark this. I will tick mark this. I will neither give one effect of this. I will neither give one effect of this. Both effects are given in the question itself. So debit, credit, both effects are already done. I will neither be giving effect of this nor be giving effect of this. Cash and bank account, again a tallied account. I need to pass only one entry. This 1,20,000 effect is already given. I am going to cash sales. One effect I need to give 1,10,70,000. Sales, cash, 1,10,70,000. Receipt from debtors 27,75,000. 27,75,000. No need to second effect. So we need to give one effect. It is a tallied account. Payment to trade creditors 1,24,83,000. 1,24,83,000 to cash. Okay, it is on credit side. Sundry expenses paid 9,31,050 rupees. 9,31,050 rupees is expenses. Drawings 3,60,000. Closing cash balance 1,90,950. I have tallied these two accounts. See, whenever some tallied accounts are given, even if the question looks lengthy, it will not be lengthy because we need to pass only one effect. Discount allowed to trade debtors is 54,000. So discount to debtors is 54,000. P&L account debit side. And creditors received 42,500. It will be your income. Creditors account will be debit side. Annual fire insurance premium of rupees 9,000 was paid every year on 1st August for renewal of the policy. Try to understand. This is our current year from 1/4 to 31st March. When you are every time paying your premium on 1st August, start it. Now if it is paid on 1st August and it is annual, it will work for 1st August of next year. Is it all right? How much amount is paid? 9,000 per annum into 1 divided by 12 will be per month. So 9,000 divided by 12 will be per month 750 rupees per month. Now see the chart. This portion is expenditure already paid in current year, but it belongs to next year. So this is prepaid. How many months? April, May, June, July. I will not count August because it is 1st August. So 4 months. 4 months into 750. Will be 3,000. 3,000 will be prepaid insurance of current year. Prepaid expenditure to effect. 3,000. Prepaid expenditure is my asset. This is credit. Debit side minus is credit. And asset side, prepaid insurance 3,000. You'll say me, sir, same would have happened in last year also. Agreed. So only last year there is a prepaid insurance of 3,000 which is reflected in opening balance sheet. Furnitures and fixtures were subject to 15% depreciation. I can provide 15% depreciation. It is 22,500. P&L debit side to depreciation 22,500. The following are the balances as on 31st March. Closing stock 9,75,000. Balance sheet asset side 9,70,000. Debtors 3,43,000. Closing debtors 3,43,000. Debtors 3,43,000. Outstanding expense 55,200. So they are of current year. 55,200. Outstanding expense will be your liability. GP ratio is 10% on sales. So GP is 10% on sales, and GP will come over here also. I think we have not skipped any of the point. We have considered each and every point. So we can go ahead solving the accounts. Debtors opening is given, closing is given, cash received is given, discount is given. So balancing figure is credit sales. It is a 27,75,000 plus 54,000 plus 3,43,000 minus 3,12,000. It is 28,60,000. 28,60,000 is credit sales. $28,60,000. Creditors, opening is given, cash discount is given, closing is not available, credit purchase is not available. I cannot solve my books of accounts right now. Any other? Trading account, yes. Sales is given, GP on sales is given. Automatically, I will be getting credit purchase. There is no cash purchase, because if there was a cash purchase, it would have been reflected in receipt and payment account. That is cash book. In cash book, there is no cash purchase. So we can assume there is no cash purchase. We will be easily getting GP. What is my total sales is 110 lakhs 70,000 plus 28 lakh 60,000 is 139 lakh 30,000 multiplied by 10 divided by 100. It is 13 lakh 93,000. Two effects, 13 lakh 93,000 will go in P&L account credit side. So credit purchase will be balancing figure from trading account. 110 70,000 plus 28 lakh 60,000 plus 9 lakh 75,000 minus 9 lakh 15,000 minus 13 lakh 93,000. It is 1 crore 25 lakh 97,000. 1 crore 25 lakh 97,000 is credit purchase. 1 crore 25 lakh 97,000. Two effects I have given. I can close the creditor's account, which will be closing balance. 1 crore 25 lakh 97,000 plus 7 lakh 57,500 minus 1 crore 24 lakh 83,000 minus 42,500, which is 8 lakh 29,000. Creditors closing balance sheet, I need to write it down. So trading account is tallied, debtors and creditors account is tallied. I can start solving my P&L account. First, let me find out expenditure. 931,050 plus 55,200 minus 3,000 minus 67,500 plus 3,000. 9,18,750. See, please understand, this is expenditure in expended, that is cash expenditure. This is expenditure during the year. So this is real expenditure on accrual basis. Expenditure paid, expenditure incurred during the year. I will be getting profit. $13,93,000 plus 42,500 minus 9,18,750 minus 54,000 minus 22,000, which is 4,40,250. $4,40,250 will be added as a net profit. and I can start telling my balance sheet. It is 67,000, 6,75,000 minus 3,60,000 plus 440, 250, 755, 250. 755, 250 plus 55, 200 plus 8,29,000 is 16,39,450. This will be 127,500. 127,500 plus 3,43,000 plus 9,75,000 plus 3,000 plus 190,950, 16,39,450. Total of my balance sheet. My balance sheet is tallied. This was question number 7.17, categorized as easy question. 7.18. Again, good question. Can be categorized as easy also. MS Rohan and Sons run a business of electrical goods on wholesale basis. The books of accounts are closed on 31st March every year. The balance sheet as on 31st March 2019 was as follows. This might be opening balance sheet. It is tallied. I'll be giving one effect. Creditors, I prepare books of accounts. Debtors, I prepare separate account. Management estimates the purchase and sales for the year as on 31st March are as under. Now what is given is a 10-month sales is given up to 30th January 2020 means 10-month sales. February sales and March sales are given separately. How it will be useful? We'll come to know. All sales and purchase are on credit basis. It was decided to invest 1,50,000 in fixed asset, which are depreciated at 10% of book value. A fixed asset of book value 1/4/2019 60,000 was sold for 56,000 on 31st March 2020. The time lag for the payment to trade creditors for purchase is 1 month, and the receipt from trade debtors for sales is 2 months. This is why that figures are given. The business earns a GP of 25% on turnover. The expenses against the GP amounts to 15% of turnover. This amount is excluding depreciation. Prepare trading and profit and loss account for the year and draft the balance sheet as on 31st March. Assuming that creditors are all trade creditors, purchase and debtors are all trade debtors for the sales, and there is no other current assets and liabilities apart from stock and cash balance. Prepare cash and bank account and fixed asset account also. Now see, if the question says you need to prepare fixed asset account, you will have to compulsorily prepare fixed asset account as on 31st March 2020. So which are the accounts I need to prepare? Trading, profit and loss account, closing balance sheet, debtors, creditors and cash book I'll have to prepare. I will also prepare fixed asset account. Normally I do it in inner column. Here I am preparing it. Let us start the question. One effect for this opening balance sheet. Capital 12,50,000. Creditors 1,90,000. Profit and loss account 1,45,000. The same balance sheet. $1,45,000. Fixed asset 6,50,000. I have prepared account. Closing stock will become opening stock 3,75,000. Debtors 3,65,000. Cash and bank 1,95,000. The management estimates the purchase and sales for the year are as under. Now all the purchases are credit purchase, sales are credit sales. That is given. Let me find out the total, and I am giving two effects only of total. This all figures I'll be using afterwards. Segregation I'll be using afterwards. Total for purchases is 16,20,000 plus 1,40,000 for February, 1,25,000 for March, which is 18,85,000. Sales 20,75,000 plus 2,10,000 plus 1,75,000 will be 24,60,000. Will be nothing but my sales. Let me give two effects for purchase. 18,85,000. Purchase 18,85,000. Trading account debit side. Creditors credit side. 18,85,000. Sales 24,60,000. Sales 24,60,000. Debtors debit 24,60,000. 24,60,000 sales. So I have given two effect of this, two effect of this. This segregation I'll be using afterwards. All sales and purchases are on credit basis, so there is no cash purchase and cash sales. It was decided to invest 1,50,000 in purchase of fixed asset, which are depreciated at 10% of book value. All right. So purchase 1,50,000 fixed asset. And I am assuming it is opening. Second effect, cash account credit side. So 1,50,000, 1,50,000, two effects I have given. I'll depreciate afterwards 10% on book value. A fixed asset of book value as on 1/4/2019. 1/4/2019 is opening. Of 60,000 was sold for 56,000. So there is one asset on 1/4/19. Its balance was 60,000. I will have to provide current year's depreciation 10%, which is 6,000. So it will be worth 54,000. Sold at 56,000. There is a loss of 2,000. See how I will be giving effect for this asset which is sold. Depreciation account debit, which is P&L account debit, 6,000. Bank account debit, which is 56,000. There is a profit of 2,000. 54,000 rupees asset is sold as 56,000. There is 2,000 profit. So bank account debit 56,000. To asset 60,000. To profit and loss account, that is profit on sale of asset, is 2,000. So I will pass this effect in my books of accounts. P&L account debit 6,000. Depreciation on asset sold 6,000. Bank account debit 56,000. To sale of asset 56,000. Asset account credit 60,000. Asset account credit sale 60,000. P&L account credit 2000 by profit on sale 2000. This is what is the journal entry for fixed asset. Now I don't think there is any fixed asset transaction ahead. I can pass depreciation effect also. Let us go to fixed asset. What is the depreciation I will be providing is 10% per annum. Opening value is 6,50,000, but out of which 60,000 asset is sold. So this figure is 5,90,000 into 10% will be 59,000 depreciation for this asset, which is opening minus sale. You have purchased a fixed asset on opening balance of 1 lakh on opening date of 1,50,000. So 15,000 will be depreciation on this. You will say, sir, where is the depreciation of this 60,000? We have already provided when we sold that asset. So now depreciation to be provided is 59,000 plus 15,000, which is 74,000. Start it. So depreciation 74,000. I can pass it in fixed asset, or I can do it afterwards after taking into inner column. I normally take the balance in inner column and then pass out a depreciation. But let me write down depreciation figure, which is 74,000 will be figure for depreciation. 74,000 depreciation to be passed. All right. The time lag for the payment of trade creditors for purchase is 1 month. See, what does this mean? You have purchased the goods on credit and you are given a credit period of 1 month. So December purchase you will be paying in January, January purchase you will be paying in February, February purchase you will be paying in March. So February purchase will not be outstanding as on 31st March. Then which purchase will be outstanding on 31st March is only for the March, which will be paid in April. So it will be outstanding as on 31st March. So 1,25,000 is the purchases which will be outstanding as on 31st March, and hence it will become my creditor as on 31st March. So creditor as on 31st March is 1,25,000. Creditors as on 31st March is 1,25,000. Creditors closing 1,25,000. Receipt from trade debtors for sales is 2 months. So January sales we will be receiving it in March. February sales we will be receiving in April, and March sales will be receiving it in May. So February and March sales will only be outstanding as on 31st March. And what is a February plus March sales is a 2,10,000 plus 1,75,000, which is 3,85,000. So 3,85,000 credit sales will be outstanding as on 31st March, which is nothing but my debtors. So 3,85,000 will become my debtors. Debtors 3,85,000. Closing balance of debtors 3,85,000. The business earns a GP of 25% on sales. GP will even come over here. The expenses are 15% of turnover, which is excluding depreciation. 15% of turnover will be expenses, and expenses are even to be written on cash book. The amount of depreciation is not included in these expenses. Prepare trading P&L account, all creditors, this all points are there. And there is no other point. We can find out the answers. Let me first tell you fixed asset, and closing balance will be 6 lakh 57 8 8 minus 60 is 7 lakh 40,000. Agreed? Closing balance without depreciation. I do all the sums in this manner. I provide depreciation afterwards only. So there's a 7 8 lakhs. 8 lakhs minus 60,000 is 7 lakh 40,000. Second effect, fixed asset 7 lakh 40,000. Now I will be providing depreciation on it. Minus depreciation. What depreciation I have decided? 74,000. Second effect of depreciation 74,000. Fixed asset is closed. I have passed even account for depreciation. Opening sales, this will be received from debtors. Which is the 3,65,000 plus 24,60,000 minus 3,85,000, which is 24,40,000. Receipt from debtors will be cash and bank account debit side, 24,40,000. Creditors will be payment, 18,85,000 plus 1,90,000 minus 1,25,000. So it will be 19,50,000. Bank creditors 19,50,000. These two accounts are closed. Can I close cash and bank? No, expenses are pending. Let me find out GP. GP is 25% on sales. 24,60,000 into 25%, which is 6,15,000. 6,15,000 will be GP. No. Closing stock is pending, right? Yes, I can find out closing stock, right? Balancing figure will be closing stock. Because GP is dependent on sales. It is not dependent on closing stock. Closing stock will be balancing figure. 3,75,000 plus 18,85,000 plus 6,15,000 minus 24,60,000, which is 4,15,000. Second effect, balance sheet asset side. Expenses are 15% on turnover. 24,60,000 into 15%, which is a 3,69,000. 3,69,000 will be my expenditure. 3,69,000 will be my expenditure. Cash account is also tallied. I can find out closing balance. All the figures are now available. 1,95,000 plus 56,000 plus 24,40,000 minus 1,50,000 minus 3,69,000 minus 19,50,000, which is 2,22,000. 2,22,000 will be closing cash and bank. Two lakh 22,000. I can tally my P&L account, find out profit. 6,17,000 minus 74,000 minus 6,000 minus 3,69,000, which is 1,68,000 is my net profit. I can transfer it to balance sheet, 1,68,000. $12,50,000 will be fixed capital. 145 plus 168 will be 313. This will be 12 lakh 50,000 plus 3 lakh 13,000 plus 1 lakh 25,000, 16 lakh 88,000. This will be also 16 lakh 80,000. Let me just verify. 7 lakh 40,000 minus 74,000. 6 lakh 66,000. 3 lakh 85,000 plus 6 lakh 66,000 plus 4 lakh 15,000 plus 222,000. 16 lakh 88,000. So my balance sheet is tallied. This was question number 7.18. I think this point was something different. We have done this in previous question also, but this point was something different. Otherwise, everything was same. Somewhat good point of this purchase and sale of asset. Otherwise, the question was generic. Let us continue with C7.19. The similar type of question that we have done before. Following is the balance sheet of as traders as on 31st March 2019. So opening balance sheet is given, deferred expenditure, profit and loss account, trade payables or creditors. Remaining life of a fixed asset is 6 years. With even use, the net realizable value of fixed asset as on 31st March is 90,000. Firm sales and purchase are so and so. The cost and net realizable value of closing stock is so and so. General expenses including interest on loan for the year ended 1920 were 53,800. Deferred expenditure is normally amortized over 5 years. For the financial 18,900 6,000 per year. Debtors on 31st March is so and so 5,000 is doubtful, and another 10,000 debtors depend on. That is alright. Closing traders payables 48,000, which is likely to be settled at 5%. There is a prepayment penalty of rupees 4,000 for bank loan outstanding. Excuse me. Cash and bank balances as on 31st March 2020 is 1,65,200. Prepare profit and loss account and balance sheet as on 31st March, assuming the firm is not a going concern. We have done this type of question before. If the firm is not going concern, we will prepare, number one, our balance sheet at NRV. What will be art of solving the question? We will take debtors figure, creditors figure and cash and bank figure as it is given in the question. All three figures are given. We will not prepare this accounts, debtors, creditors as well as cash and bank. Instead, we will be taking closing balance as given in the question and hope that our balance sheet tallies. So we are doing only part of the whole question. We are not preparing debtors, creditors, cash and bank account. Also, balance sheet, all assets will be valued at net realizable value as if business is going to get closed tomorrow, and all the liabilities will be also payable at will be written at net realizable value. So trading account, profit and loss account, balance sheet closing at NRV, because we are not assuming going concern. Capital 1,50,000. %, bank loan 80,000. Creditors. We are not preparing books of accounts, so creditors account, so we will not be writing creditors. Profit and loss account 56,000. Fixed asset 1,05,000 should be valued at NRV. Closing stock will become opening stock of current year 76,000. Debtors, opening balance is not important because we are not preparing debtors account. Deferred expenditure 24,000, balance sheet. Cash and bank, opening balance is not important because we are not preparing books of account. Sir, we have not passed one entry for figures which are tallied. It is all right. Why? We are assuming that accounts are already prepared by someone and they have directly given us closing balance. So we are ignoring this opening balances, right? Otherwise, what is art of solving single entry question? If the account is tallied, we will have to give compulsorily one effect. But here we are only doing part of the question, so we are not giving that compulsory one effect. Remaining life of fixed asset is so and so, that is not important for us. Net realizable value is 90,000. That is important for us. Now we are going to sell this asset at 90,000. We will value it at 90,000. Minus, if I reduce 15,000, so 15,000 will be written off. You can even write down it is a depreciation. Fixed asset written off 15,000. Firm's sales and purchases are 7,80,000, 6,25,000. Sales 7,80,000. Second effect, debtors account debit side, we are not preparing debtors account. Purchases 6,25,000. Again, purchases will go in creditors account, we are not preparing creditors account. The cost and NRV, stock will also be not valued by conservatism concept, cost or NRV, whichever is less, it will be valued at NRV. What is NRV is 66,000. Closing stock 66,000. Even in trading account, closing stock 66,000. General expenses are 53,800. P&L account debit side. Cash account credit side, we are not preparing cash account. Deferred expenditure is written off in 5-10 years, not important. We are not going to continue our balance sheet in next year also. We are going to sell it off tomorrow. We should prepare, if we are not assuming going concern, we should prepare as if we are going to close business tomorrow. And deferred expenditure should be fully written off. Minus written off. How much? 24,000. P&L account debit side, deferred expenditure written off. And this it was 24,000. Debtors are 65,000. So closing balance of debtors is 65,000. We are assuming this account was prepared and ultimately the balance is 65,000, of which 5,000 is doubtful collection and another 10,000 debtors depends upon successful reinstallation. So 5,000 and 10,000 both are practically doubtful. You are not going to do reinstallation because you are not assuming going concern. So I will provide a provision of 15,000 minus provision 15,000. Provision for debtors 15,000. Closing trade payables of 48,000. Creditors 48,000. And from creditors also, it is likely to be settled at 5%. So where we are going to settle it, we are not assuming going concern, so we are going to settle it, will be considering 5% discount. Minus 5% discount is 2,000. Discount is income. By discount 2,000. There is a prepayment penalty of 4,000 for bank loan outstanding. You will have to pay that 4,000 rupees penalty. There is no option. 4,000 rupees penalty will be your expenditure. Cash and bank balance was 165,200. I don't think I have skipped any point. See, this 11% bank loan interest, we are assuming it is considered in general expenses. Otherwise, we can provide for outstanding interest. But here we are assuming it is included in general expenses. So, we have not kept any point pending, no. We can start solving our trading account. $7,80,000 plus 66,000 minus 76,000 minus 6,25,000, 1,45,000. GP is 1,45,000. GP is 1,40,000. And P will be 25,600. $25,600 will be added over here. This will be 84,000. 81,600. This will be 45,600. This will be 90,000. This will be 0. This will be 50,000. Let us see whether our balance sheet is tallied or not. There is a difference of 10,000. There is a difference of 10,000. Is there any figure of 10,000? No. Yes. This is 53,800. By mistake, we have written 63,800. This should be 53,800. 53,800. So this profit will increase by 10,000. It will become 35,600. This will be 35,600. This will be 91,600. And this will be 3,71,000. Easy question. As we have done previously this type of question, this becomes extremely easy question. Let us solve this question 7.20. Mr. Prakash furnishes the following information for his ready-made garment business. Receipt and payment account is given. It is tallied. I will be giving one effect. Bank balance, receipt from debtors, cash sales, capital brought in, interest on investment received, creditors, salary, general expense, rent, taxes. This looks normal. Bank balance and cash balance is given, but there is no segregation of bank and cash. So what I'll be doing is I'll be preparing a combined account of cash and bank. Machinery, furniture, debtors, creditors I always prepare. Stock 12% investment Outstanding salaries, I'll be dealing it in inner column. Sales and purchase, there is a debtors provision, provide depreciation. So it looks a simple question. We can directly start solving the question. Opening bank balance 16,250. But first, let us prepare necessary accounts. Trading, profit and loss account, balance sheet, debtors, creditors, cash and bank. I think those are the accounts which we require. Opening bank balance 16,250. One effect. Opening 16,250. Received from debtors 4,81,000. Sorry. Extremely sorry. How we should solve this? Receipt and payment is already given. We need not prepare cash and bank account. We are duplicating this, right? Then sir, which account is to be prepared? We will have to prepare opening balance sheet. So we will not be preparing receipt and payment account is cash book. We need not prepare it again. So we have to prepare opening balance sheet. Let us restart the question. Opening balance, bank balance 16,250. Opening balance sheet, asset side, bank balance 16,250. Received from sundry debtors. Bank account debit is already done. Debtors account credit side 4,81,000. 4,81,000 by bank. Cash sales. Cash account is already debited. To sales 1,70,800. Capital brought into the business, cash is already debited, capital will be credited. 50,000. Interest received on investment, bank is debited, P&L account will be credited, interest 9750. Payment side, payment to creditors 3,43,000, creditors account debit side. Salaries 75,000. Inner column. General expenses 22,500. Now, which are outstanding salaries? So, general expenses, I can take it in outer column 22,500. Rents and taxes 11,800. Drawings 96,000. Cash purchase 1,22,750. 1,22,750. This is also cash. 122,750. Balance at bank and cash will go in closing balance sheet 36,600. $36,600. 2150. So receipt and payment is done. We have given one effect. Now we'll be giving dual effect for all these particular transactions which are available. Machinery opening balance is 85,000. Closing balance is 85,000. depreciation is 10% per annum on machinery. So it is very much clear that this figure is before depreciation. So for all the cases, I'll be taking that these figures are before depreciation. So before depreciation figure, I am interested only in opening because closing is same. Machinery 85,000. Opening balance sheet machinery 85,000. Closing balance sheet machinery inner column 85,000. I'll be just providing depreciation. There is no purchase sale. No need to prepare account of machinery. Same as furniture 24,500. Furniture inner column 24,500. Opening balance sheet furniture 24,000. So closing balance before depreciation is this. We are going to, we have written it in inner column, so we are going to provide depreciation. Opening debtors 155,000. Opening 1,55,000. Opening balance sheet debtors 1,55,000. Closing debtors we are not knowing. Opening creditors 60,200. Opening creditors 60,200. Opening balance sheet creditors 60,000. Opening stock 38,600. Opening stock 38,600. Trading debit. Opening balance sheet stock 38,600. Closing stock 55,700. By closing stock 55,700. Closing balance sheet stock 55,000. 12% investment is 85,000. Closing is also 85,000. So there is no addition, deletion. If I give only opening effect, that is absolutely all right. 12% investment 85,000. In closing balance sheet, it will be inner column. 12% investment 80,000. We can write it down in outer column. Now, what will be interest that should have been received? 85,000 into 12%, which is 10,200. Have you received 10,200? No, you have received only 9,750. You should have received 10,200. So 450 is outstanding plus outstanding interest 450. Outstanding interest is your asset. Is 450. Dual effect credit and debit. We can go ahead. Outstanding salary opening 12,000 minus outstanding of previous year plus outstanding of current year. I am first giving off 12,000 is outstanding of previous year. This is credit effect. In opening balance sheet, it will be outstanding salary 12,000. This is opening balance sheet. Liability side is a debit effect. Debit effect and credit effect, we can go ahead. 14,000 is outstanding salary of current year. 14,000 outstanding salary 14,000. Additional information. 20% of total sales are in cash. All right. What are cash sales? 1,70,800. Let me do the working note. Cash plus credit is equal to, and what is written is 20% of total sales are in cash. So this is 20%, this is 80%, and this is 100%. And what is cash sales? Cash sales is 170,800. I will be getting credit sales by cross multiplication. 170,800 multiplied by 80 divided by 20. It is 683,200. Is credit sales? I can pass two entries. So 683,200. Sales credit 683,200. Debtors account debit side 683,200 to sales. Same way I can draw a working note for purchase, but I can just do cross multiplication as I have already done. Cash purchase is 122,750. 122,750 into 80 divided by 20 is 4,91,000. 4,91,000 is credit purchase. Creditors account credit side. This is done. Of the debtor, the sum of 7,200 should be written off as debt. Alright, so debtors 7,200 is to be written off as bad debt. Bad debt to effect. Debtors account credit side, P&L debit side. 7,200 to bad debt. 7,200 P&L debit. Debtors account credit side by bad debt 7,000. Provision for doubtful debt is 2% that I provide always last. Whenever I will be getting debtors figure, I will be providing 2% provision. That I'll be writing down over here. Provision for so once I tally my debtors account, then I'll be doing that. Provide 10% of machinery and furniture. Minus 10% depreciation 8,500. Minus 10% depreciation 2,450. To depreciation machinery and furniture. Machinery is 8,500 and furniture is 245. You are required to prepare trading profit and loss account. Have you missed out something except the 2% provision? No. No, we have done each and every point. All right. So for that 2% provision, let me tell you, can I tell you debtors account? Yes. Easily, because opening, sales, bank and bad debt is given. I will be getting closing. 1,55,000 plus 683,200 minus 4,81,000 minus 7,200. It is 3,50,000. That is closing debtors. 3,50,000. I need to provide 2% provision, 7,000. Debtors is closed. Opening credit purchase bank is given. This will be closing balance again of creditors. 60,200 plus 4,91,000 minus 3,43,000. It is 2,08,200. Closing balance of creditor is 2,08,200. So creditors just tell it. Should I tally trading? No. P&L first, no. Balance sheet. Opening balance sheet is pending. I will be getting answer of capital. $16,250 plus 85,000 plus 24,500 plus 1,55,000 plus 38,600 plus 85,000 minus 60,200 minus 12,000 is 332,150. 332,150 second effect. So all three accounts are tallied. I can go to tally my trading account. I'll be getting answer of GP 170,800 plus 683,200 plus 55,700 minus 38,600 minus 122,750 minus 4,91,000. It is 257,350 is GP. GP is 257,350. NP, this is 002 10,200. This will be plus 2,077,000. Let me find out NP. 257,350 plus 10,200 minus 77,000 minus 22,500 minus 11,800 minus 7,200 minus 7,000 minus 8,500 minus 2,450. It is 331,100. 331,100 is net profit. $331,100 will be added to capital. So 332,150 plus 50,000 minus 96,000 plus 331,100 is 6,17,250. This will be 85,000 minus 8,500 is 76,500. This will be 050 and 22. This will be 3,43,000. Let us see whether our balance sheet is telling or not. 6,17,250 plus 14,000 plus 2,08,200 839,450 76,500 plus 22,050 plus 85,000 plus 450 plus 55,700 plus 36,600 plus 21,50 plus 3,43,000. A difference of 2 lakhs. Got it. This is 131,100, right? It cannot be 3 lakhs. 131,100, 131,100 This is 47250. This is 639,450. Our balance sheet is tallied. This was the last question of single entry. Again, this question can be categorized as easy question. There was nothing difficult in it.